So here we are, having hit the B point to the upside and the 61 to the upside. We can see that, there are a couple B points that remain down below here 30 seconds before the open. And basically, just to go over really quickly what I posted in the morning. Oops. There are a couple B points down here you definitely want to allow to get hit at the open. There's the VWAP in the middle there as well. That's very close to those B points. So far today already, we've managed to create this pattern up here. There have been a series of head and shoulders failing today to create this third consecutive high, currently at the 241. The first of the day, notice the B point is placed on the first of the three highs. So basically the circled level and then the target for the circled level, target for the circled level, and effectively it came right down to that target. And once we got down to that target, I made other targets up here at the 61 absolutely clear. And the value of being in for the break of the yellow line was absolutely clear. Doesn't mean that you have to have taken it though. Of course, allowing it to come back and test previous highs like this one is another major level. But we know that so long as we don't drag our stops above the point at which it broke the trend, then you have a lot more chance of staying in. Like take this last trend break for example. When we did break the blue line, it broke from here. It went up like we did right now and came all the way back down. So it's imperative that some profit is taken, of course, at times like these, because in the event that it does come all the way back down, you want to have paid yourself. And at the end of the day, if we know that it coming down to hit these levels could be on the table, hedging for them could be on the table as well. Now, of course, it all starts with trying to grab these short-term highs. We can see that right now it has made 3 consecutive highs. 1, 2, and 3. Right now we've come back to exactly the first of those 3 highs. It is true that just like many of the patterns in the morning, we've seen the third consecutive high, I've explained it maybe 3 times already today, that it comes back to the first of the 3 high. And you can see that absolutely the market is testing everybody, because unless you targeted that specific high, this move has been problematic. It's come right back. So we can see at the open today, everybody's being tested for what information they consider valuable already. Now, this morning, the markets blessed everyone with the ability to come past the first of the 3 highs. It went past almost every time, except this one. Since the market is open, that is the case, that we only just came back to this high. And that is where exactly it should be made safe every single time that you take this pattern. Because if you expect it to give more, like it has been, that's asking more than the target. It's asking it for it to get more than the B point. Like you can see, the second post that I made today was here. Basically, at the very, very bottom, when we created that low, currently at a 241, the first of the day, that's when I posted the last one. I was like, what a nice move off that 241. Right to the B points and through it. All stops should be safe by now. Enough profit could be taken to allow some to continue. Looking for hedge opportunities so you don't have to give up the rest of the trade. So hedge opportunities could target immediately that short-term level. You can see that that B point is exactly where we reversed. Like, look, right there, um, at that first high. So you can see that it made 1, 2, and 3 and came back to the first of the 3. That's what it did. So we can look at that right there. And that first high was right here. And by the time that we hit that first high, looking for hedge opportunities to get back to the 61 is on the table. Now, uh, from the way that I see it best done, this is the core, and now you hedge against it. If any moves were taken against it, that would have been to the first of the three highs. I mean, that is the best way to have done this situation. I do think that we're going to see more of the levels that we have on here. We are in a range right now that has been used in the past as a sideways consolidation. Whoops. As a sideways consolidation, where in the event that we decide to grind the green zone so that we can get to the red zone and use the range, it's really likely that we try to get to the red zone so that we can come back to these highs. So when we cross these highs, it'll be very interested in coming back to test these levels. That's basically the motive of the market. Now, I want to make this really clear. Like, I sacrifice even trading this right now to make sure that it's clear for you guys. So at the end of the day, I've done it a million times. I do think that it is something that I mean, it's if it's so clear, having some sort of other opinion about it, it could be very, very dangerous when it is one agenda that I can see it's interested in doing, one objective that it's interested in fulfilling. And if it's anything else that you expect it to do, you're in danger, 100%. So that's the way that I see it, as it does what I said it was going to do. Now we've met the red zone. Now it's coming back down to test the highs, is it not? Well, we'll see. So like this, more moves will be made clear, and I think that just because these ones are insignificant doesn't mean that like they're insignificant in size, but they're not insignificant in value. To understand the need for these moves can mean the next time we make a big move, it can be made as clear as this one. But we don't have to. We don't see big moves as frequently, So these moves, yeah, I might talk about them a lot because they're clear. I can't not mention them, because God forbid you drag your stop within the path of clearing those highs. God forbid you'd prevented it from hitting that red zone and getting back to the high here, because if you did anything to prevent that, it's costed you money, and that's the reality of it. And it's profound for sure, 100%. Like, I look at the market as there is one right way for it to be moving, and that is the way that it is moving. And there's one right way for it to be traded, and that's the way that it is moving. There's only one direction that can be moving at any given time, and it is the right way. So, and it's us that don't see it if we don't see it. So that's why I say it's imperative to only act on clarity, only act on absolute clarity, because if you don't, somebody else is, and that's dangerous, right? So it's worth waiting for clarity. It's worth waiting for that absolute clarity. Now, I do want to point out that we do have a new uptrend. This one right here, we're getting mighty close to it. In order to maintain this red zone and green zone, that trend will have to break. I mean, there's not many things that can keep that trend from breaking the way that I look at it. That trend is something that we're going to have to deal with breaking. Like, at the end of the day, it might not be so swiftly here and whatnot, but it could break into a sideways trend. And it reminds me of a lot of what happened here, where it was really steep and it broke like crap, led people on initially just to take their money and make them very, very, very uncomfortable for a prolonged period of time. Curious to see if that trend has much value. In the event that one's taken it back from the red zone to target these highs, at no point has it ever come back for whatever rest of your position that you have. So if you have a core from down here and you decided to make a hedge from the red zone back to these highs because it was a guaranteed move, whatever you have left, you can target these lows with. If there's a better way to do it, let me know. Because at the end of the day, that is the best way that I can see to do it. Now, of course, it doesn't mean that everybody has to hedge. At the end of the day, it's a luxury for those that understand how to do it. Just like it is for the chainsaw and the lumberjack. They could use an axe, but because they have the information on how to use the dangerous power tools that get the job done quicker and more effectively, they can use those tools every day with ease. And it's scary to most people that haven't used them, sure, but not to them. And many people, once you've been trained how to use the tools that get you farther and quicker and not necessarily quicker but more effective, um, they don't become scary anymore. They become a necessity. Now, of course, we've come down to hit VWAPs again, which are essentially the middle area of a very, very large range. Like where we started the day, it's not meant to be misconstrued as anything but the middle. Like this big dump that we came back up to basically test the middle. You can see that the 50% retracement of that entire dump marks the halfway point. If this is 0 to 100, this is 50. And that's the middle. That's right where we are right now. So, I mean, finding value in positioning yourself from the middle is incredibly dangerous because you can see, look at how it's treated the people so far. How many times has it overlapped the people that have chose to position themselves from the middle? Of course, these targets at the bottom are now hit and it's moved up for the ones at the high. All of the targets that I've put on today have been removed. Depending on whether or not you've chosen to go for them is one thing. It's a very risky environment. I would say that understanding the environment is imperative before you take any action. And it's not like the targets haven't been hitting from the points that I've decided to put them in. Like at the end of the day, the targets all have a trend line that when the trend line breaks, the targets become jeopardy of hitting. And in this case, every single trend has broken in the direction that it should to give us those targets. Now, of course, the entire range has been an expanding one to the upside in particular. We've got one trend that's actually different than all others. This one right here. This is a trend that we don't have on the upside in the same way that we do on the downside. The upside has been expanding ever since we began. We can see that, it started to move high with a higher high and even higher and higher and higher. It's like, wow, you think that's going to continue. It's rough. How much energy does it take to do the next one is almost like what I'm thinking. And this, it's starting to become unrealistic to expect it to continue doing what it's doing. Now, I'll tell you one thing. This level right here, it's like a very small B point inside of a gap. They could try and get that. It's very, very, very small, very, very, very tight. Um, at the end of the day, the downtrend that got us here is very steep. And basically, that gives us minimal time to respond to any level. Because how do we respond to a level if we don't um, spend time at it or respond, uh, like if we don't give movement off of it or if we don't actually uh, pause at it? It's very difficult for it to acknowledge any level. So what my point is how do we acknowledge a level without moving closer to the yellow line? Like, is there any way that we could acknowledge that this range is a support without spending time at it, or without going up on it a little bit, you know, or without feeling it at all? Because if it went straight through it, it wouldn't be much of a barrier at all, would it? Now, that's the interesting point about that. We've run into a barrier. How much time will it take to acknowledge it? Will it be more time than the trend can handle? Because we've got maybe how long? 2 minutes, 1 minute before it can't sit here acknowledging this trend anymore and still be in this downtrend. It will have to have broken it in order to still acknowledge this level, which I mean, sure. We've taken a trend before and broken it and went sideways for that much time. And effectively, could we do that again? Sure we could, but uh, I think it would be more appropriate to do it here. At the end of the day, we can see we've exerted quite the amount of energy to get past this initial node. And when we've done that, it's created this kind of like slingshot nature to get back to the comfort zone, where undeniably this is the level that it has spent the most amount of time in this area since we've been here. There's been no area that we've spent more time, and no area that can have more of a I would say the ability to stagnate us in a small consolidation. Now, of course, that consolidation is not very large. Um, with it only being 8 points, it's not a very big consolidation. Taking a look at the ATR, it's still increasing even though we're uh, not really moving. You can see that the short-term target yet again just hit right there. That's a very small short-term level for the break of the trend, but you can see it was the case that the trend did break and it did get to the target yet again for like the 12th target that I've removed today already, I think. I mean, I can't remember. That B point up there, it was already hit, funny enough, off of 161, I think. So it may only decide to come back to the, oh, it was a 141, sorry. It may only decide to come back to that initially. We've seen that a lot where, when we do the 141 and it comes back to the B point, it hits the important level and only ends up coming back this distance, completely forgetting about the B point altogether, at least initially. And what we could do is turn that initial movement into an M that could get there. Just like what we're doing now could effectively get back to the W. But like you notice, like I did only have a B point on here. I didn't put one on here because I considered that one hit. So that one is it's kind of like a cheeky move. The only target that I had on there was this short term B point underneath the VWAP, and I'm still under the impression that keeping the extremes is the key. And once you have the extremes, and it gives you the opportunity to take enough profit off so that you can start fighting the other extremes, is the best way to do it in this situation. Because at the end of the day, one point, this will stop expanding. And one high will remain the high, one low will remain the low. And, you know, we'll be able to get out of this range altogether. Now, of course, I say this because personally, like if you're positioned from somewhere that's like anywhere that I've said to be positioned last week, like if you're in from this low, these lows are not attractive, and like the last high that I posted throughout the week here still remains if you do have it, like that high. So, I mean, it is better than what it is offering today, undeniably, 100%. But it's not like there's not opportunities for those to position themselves from today's movement. Because at the end of the day, what I have noticed about today's movement at the best prices, it spends 80% of the time at areas that are absolute trash. Like, it's true. The points that are at the extremes, at the best prices that offer exposure to the best moves, are trend breaks that are all steeper than 60 degrees. Like they're all like, or they're about 60 degrees or more, you know? And how much time are we able to get within each one of those 60-degree trends? Like this one here. It's very minimal. And then when the trend does break, it comes back every single time to the first of the three highs. Because every single time a trend has broken, it has been because there has been a third high that essentially hasn't come back to the first of the three. And in this case, that's not a view up there. In this case, we've broken back beneath the purple line, a line I think we'll see again. But it's obviously very close by. It's a line that I think that marks the edge of the expanding wedge. And what I find intriguing about the expanding wedge is that there's a great chance that it's going to try and double the entire movement sequence. Remember, I put the red yellow line on the bottom, right? And it was already close to the bottom. There was only one target, and it was there. The other B point having already been hit, I still think that like we're at a 261 of it right now. That could be a little bit more impactful. But the thing is, it doesn't have to come all the way back to the B point. It can come back to the red yellow line. It can come back to the node, and that can be enough. So that's an interesting part about this. I know that there's a green zone and a red zone. The green zone did a great job at bringing it back to the red zone in confluence with the 261. We can see that the 188 200 people are now getting taunted. That's what it's like. It's like that constant when we break through a 188 200, we come back to let them out kind of thing. And we seem to do that a lot last week. And it's okay for us to continue with that characteristic. I only think it does that because it works. And works on what? On who, you could say? Well, on the public, on the people. And the people value that level, and it could come back. Why all of a sudden would it make that level lose, right? And then just come back around and be like, "Oh, wait, I don't mind that. That was nothing." You know, I mean, like, hopefully, it's such a cheeky move. that move though. I don't think that that we're gonna stop seeing that anytime in the future either, because it works. That's why I think it's so effective. But the VWAP up top as well has been something that's been in play for quite some time. You can see the raw like nature of it being so flat. You know, the big movements that we've had in this area are relatively ineffective at moving the VWAP, and that shows its age. Yet all of the moves that we have had today, not a trend break that we've had, hasn't led back to that level except for this one. Now, isn't it interesting that it just came back to the node, just to the red yellow line? Why does it just do what I want it to do? I don't know. You tell me. You tell me. I don't know. At the end of the day, it literally came right back to that right back to that red and yellow line exactly the way that it should. And you know, it was part of the expectations. If you go back in the video, it was that it doesn't get to the V point, that it gets right there instead. And I mean, if you target it right there, then that's fine for you. But sometimes these moves are a little bit too quick. They involve that much more understanding. I'm not. It doesn't bother me. You know, like I know exactly what that there's going to be more moves and we can take more of them. But it's imperative that everybody understands these moves as they're being presented, because I see so much room for danger. If you're not on one of the moves that essentially I've outlined, there's been very, very small areas of a reversal. And if you don't take profit at exactly the level at which it specifies, it comes right back for you. And that's cruel, right? I'm like, it's cruel. So that's, you know, yeah, it's interesting. And that's what makes me think, you know, ignorance is bliss when it comes to entertainment only. Like if we've never seen a sunrise before, it's amazing. Never been to a nightclub before, it's amazing. You never heard music before, it's amazing. But when it comes to information that can put you in harm's way if you don't understand it, ignorance is not bliss. Like if you don't know how to build a campfire and you're in the woods, like you're screwed, right? Or if you don't know how to use an umbrella and it's raining, you know, you're gonna have a problem. As a basic understanding, you know. And here, I think that before taking action, it's imperative to have that understanding, just like it is, you know, when we go camping to understand, you know, the risks of, you know, getting attacked by a bear. So do you get the bear spray? You know, is it going to significantly reduce your risk? I mean, like, well, if you're in the store and it's right there in front of you and you're thinking this, it's like, yeah, you probably should get it. You know, at the end of the day, I would get it. You know, and especially like other things, like, you know, the information of, hey, if you have a canoe, do you put all your food inside of the canoe and have it in the middle of the river anchored while you're sleeping, or do you keep all your food next to your tent? What do you do? You know, it's like, I've been camping before, clearly. You know, I like to make sure everything's safe, and in the canoe in the middle of the river. But at the end of the day, just little pieces of information like that can go a long way in the face of danger. And I'm like, well, if the targets haven't been so specified, haven't been so cleared, if it's not like, if it runs at the target and hits it like it just did, and then comes back all the way, it means that unless you targeted that level, the market didn't have the time for anybody that took that trade. Like, it was for the people that saw the 261, and if you saw the 261, your target was that node and the blue, or sorry, and the red and yellow line. If it was anything more, it was, they came all the way back. Now, how do you interpret that though? You know, is that there was only one right target for that move, and that if, unless it was that one, it involved a loss. And I'm like, wow, it's so profound. I'm like, it's insane. And I'm like, is it because it did it yesterday that I thought it was going to do it today? No, I can never tell you that it's ever done that before. But it was because everything was set up like that, it developed the necessity to make that the situation. And I've never seen this before in my life. And it's literally not because of a trading strategy that I can write down in my notebook and like be like, hey, I've got it now. You know, everyone's screwed. You know, good luck finding that move again. I tell you that right now. But I can teach you how to understand the need for that move. You know, that's the difference. Everybody thinks that it's something like, you know, when you set up, you know, a journey like to go bike riding, you don't think about how many times you're going to gyrate your pedals every single time. There's one right way to get around the corner, and it has to be 17 strokes, and you have to twist at a perfect angle, you know, and that's the strategy. I mean, like, come on. You just know how to ride a bike and you'll get around the corner, right? But God forbid you don't know how to use the pedals. God forbid you don't know how to use the brakes. God forbid you can't steer. Then you won't be able to make it. But if you know how to do all those things, does it matter how many strokes you take? Does it matter what the angle is? No, it doesn't. It doesn't matter because you understand how to ride a bike. And that's the idea. Is I can I understand trading like that. Like it's something that you can understand how to speak a language. It's not like there's some way that you have to do it correctly every time. Like we learn to remember 2 plus 2 equals 4. You know, we don't have to remember a trading strategy here. We have to understand how to implement a strategy. You know, and it's a different strategy every time. Like I say, trading isn't about having a key to trading. It's about a key chain. You know, and I say minimum 30 concepts need to be understood. And before anyone begins, and I'm like, well, think about how many concepts people have to learn in order to get into becoming a mechanic, a doctor, even a bus driver, you know, anything, any kind of like whatever you got to do, you know, you have to understand multiple concepts. And you know, people can find one concept and qualify themselves in trading. And I'm like, well, that's super dangerous because have you ever seen that concept fail? I can find you any strategy in the world failing. Bring it to me and I'll find you today, right now, in an hour. I will find you an environment where that strategy will fail. And you can test it too. And look at it as back testing. And every single thing that I've ever said will work, I can find you failing in some other environment and I can prove it. So what does that mean then? If everything that once has worked has the opportunity to fail in the future, what is the dividing factor? It's not, oh, a Head and Shoulders forms like this and it goes down every time, because it sure as hell doesn't. So we have to keep that in mind. So it's other things, other correlating factors in the environment, you know, that let us know if those tools are necessary. Like, you know, first we look out the window to see if it's raining, then we grab the umbrella. You know, it's not like the umbrella is our strategy every day, is it? Like, come on. It's not the way. And things change just like the weather. You know, we can expect the market to change. And that's one thing that we like I can prove to you every day that it's doing new things, it's moving more, there's more people involved, there's more money, there's more volume, there's more patterns in turn, you know, and more changes. And you know, it's the business of being able to calculate those changes. Like when you buy into a low, you're trying to calculate that the change is going to be right where you buy it so that you can sell after having the change has happened. And I'm like, well, you know, isn't it the business of understanding change, not influence, not impressing our strategies upon the market and expecting the market to respond to them every single day, in and out, because that is our strategy and it is the best strategy? I'm like, no, 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 that doesn't make any sense to me. But everybody's constantly working towards that to be the case for them. They ask, what is your strategy? I want to learn this strategy. It makes no sense to me when people say that. It's like it's very interesting. Maybe for that environment, maybe the strategy to get back to the mean, or it's like what strategy are we talking about and why is it relevant in this environment would be my question every time. And basically these questions are questions that can better yourself, because having not answered them is like a, I don't know how to put it lightly, but it's like a form of negligence in a weird way, in my opinion. So it becomes like, what questions are we gonna ask, and are they ones that the market respects? Are they questions that highlight danger and highlight opportunity? Because many people's strategies, I can see they're so blinded by greed that all they can think about is opportunities. They can't see the danger right in front of them. And I mean, like, if you understand so well how a pattern works, that all you can see is, oh, I understand how this pattern works. I'm ready to trade it. Nobody even understands that it can fail. That's usually their first experience, is understanding that whatever you did learn, the market will show you that it can fail. And understanding what those environments look like are really important. And here we are right in the middle. Basically, you know, this third consecutive low that we have here, it was kind of like a cheeky one because it made 1, 2, and 3 down. And it was like, yeah, everybody, I'm working. and then it slapped everybody right back down to another 1, 2, and 3 lows. It was like, oh, you want to try that again? And it's like very rough. And I'm like, most people, they didn't, and because they didn't, look at what we could do. Because they were in the way, look at what we could do. Because it was tough for them, you could say, look at what we could do. And it's like, well, why is it tough? Well, I'll tell you why it's tough. Because anybody that tried to go for the pattern that was working for the most impact today. So the biggest impactful patterns was 1 high, 2 high, 3 high, smash, and then it went 1 high, 2 high, 3 high, smash, and it's like, wow, okay, that's hardcore. And then it's like, all right, let's see it in reverse. 1, 2, 3, and it did do a good smash. It smashed all the way into the first, and then it did it again. 1, 2, and 3, and really ended up going. So it's kind of funny that in the sequence here we actually have 4, because it went the first 3 drives, like I explained, and then it did it again in another one. Well, do you know that it actually did it here as well? The exact same thing, but smaller. So we started with the first 3 drives, and then we did the second 3 drives. So on the bigger side, we've done the smaller 3 drives, and then the bigger 3 drives. So it's true that in the sequence of making highs, we made 4, and then we made 4 on the bottom. And it directly was opposed to what it did on the highs. So I'm very intrigued by that. I can see the similarities in both sides. I can see that ultimately it made it back to that target up there, the original B point to the 261, but it also made it on a W. So it has a B point down below. Of course, it is going to be responding to these levels up here too. We're at a 188,200, which is really interesting to me because it reminds me of the one from the morning. Let's take a look here. When we did this one, it had a 188,200, like right at this level. Isn't that weird? Like you can see, if I know there's a lot of data on this chart, but if you look all the way over here, you can see that there's also a 188,200 in there. And I'm basically highlighting this area, basically showing those 2 levels right there. That's the best way I could probably show it right now, because it doesn't allow me to take any of this information off. What I could take off is volume profile for a second. And basically I'm just looking at these 2 levels, and I'm like, wow, okay, at some point today, we've managed to make 188,200s out of these levels. Now, one thing that's really interesting to me is the 261 is right on the red zone. The red zone that's already been used as a resistance barrier today. And the 261, which has already been used as the low, well, roughly, it was very spiky and wicky, but that's fine. It can still be spiky and wicky past this one. Like for whatever it moved past this, it may decide to move beyond this. And I mean, like, is that such a big deal? Not really. Because my point is this low was a 261. This high is also a 261. See, this B point in here to this M, and I'll draw it out as clear as I can. Here, draw it on here. Okay, we already have a range on this chart, but still, I'll draw it on here. The M that we had was like that, right? And that B point right there, it made a 261 at the bottom. That's clear as day, right? Now, we have, and what's funny about that is it's not a bearish pattern, that's a bullish pattern. It goes up, right? Now we can see the this pattern is exactly like the bearish one, or the bullish one, except it's in reverse. You can see that it has a B point down here, and its 261 is all the way up here. So is it interested in making the difference? Or making the same pattern? effectively what it tells us is, regardless, this is the B point that is in danger of getting hit. But one thing that I find interesting about that is the fact that it is on a green zone, and that it is true that it will have to make its way through that range in order to get to that B point, which could prove problematic. Curious about that myself. Of course, I don't think that it's one to be very aggressive with, because at the end of the day, it's inside of this major move here, and inside of every other major move that we've had today so far. Like contained within many of this middle area. And so far, it is progressing towards that B point, which does make for an interesting trend. And that trend, I find, it's not exactly the low, but I find it could be trying to be. All that's past it is wicks and spikes. So that low could prove pretty important in the future. Now, of course, that line, it isn't our ordinary yellow line, it's a blue one. And in the event that it is seen, that would be, that could offer opportunities. But here we are from this middle area. In the event that it tries to break the upper trend from here, it will undeniably create a triangle. It's hard for it not to. Like, let's say if it hits the B point, right? Like, if it hits that B point, how does it not make a triangle? Well, like, it would totally make a triangle. Like, does it matter if it hits it here? Well, triangle. No matter if it hits it here? Well, that's a triangle too. If it hits it, even farther down the line, still a triangle. So I'm like, that's the interesting part about that maneuver. This pullback that we've made originally in the trend is very similar to the pullback that we just made, and very similar to the pullback that we had to make the B point initially. Could it be a B point in the future? It's an idea. I mean, it is an idea. Typically, this would be a crappy spot for a B point because it's like below the middle range. So that's something that's making me think that we might be seeing that 261 after all, especially in the event that it's untested. The B point here is untested when we get there. It could provide a break of this trend. So that trend is formed now, and we do have a little bit of a triangle. Basically, I think that trend, even if it does break first, it just kind of creates the support to the symmetrical triangle. And, in the event that we hit that B point, it's not like we get out of being a triangle. The only way that we do is by getting through it, which getting through it could be on the table, but I just think it might be in the form of wicks and spikes. Okay, yeah, exactly. So in the event that it does make it through the B point, what there is a 61. Very close by in the environment. Well, let's go take a look at the other chart. Very intriguing that it is that level that it decides to use as a support. I can't help but notice that we do have another trend right here. That trend suspiciously has a support line that's very particular to the one on the bottom. Does remind me of the range I just drew on the other chart. Very intriguing that it didn't manage to get to that B point. It's a fact, and I like to understand those facts because at the end of the day, not a single one of those levels has been left untested today or treated as it has been right now. And I'm like, should we understand that? Or it's like a huge thing to me. I'm like, that is like something that if it's working a certain way and the market just decides all of a sudden that the people associated with it working that way should lose money, we should understand it without having to lose money, right? Like that's the key. These people right here that go for this target off of the 188-200, they were blocked by the POC and the same level that blocked the play out earlier, which is interesting because like what's up with this line? You know, I don't even know what color to make that line because it's not being used like our ordinary red yellow line anymore. That's for sure. And of course, now that we've broken it and used it as support, it's almost like we'll make it give it that blue. At the end of the day, here we are rivaling that green zone, having broken the yellow line and progressed towards the target again. I'll take off some of those other levels. We can see that the majority of the day's movement has been spent in between other ranges. Ranges at the high, ranges at the low. We've even got another one a little bit lower. And basically, the red zones and the green zones can identify areas that we used to spend time. And it's funny to me to see that today it's almost like this range has been the green zone. It's almost like this range has been the red zone, you know? That's the way it's been today. We've been using these other areas. Yes, they can be used as ranges themselves, but now it's become the case that this is the low where only wicks and spikes have been, you know? We worked our way through it like we would a usual green zone as well. Like, how do we make it through green zones? Well, we put a hell of a consolidation on them. I call it a siege node because we siege them essentially. We want to get inside, and it takes a lot of throwing everything we have at it, basically, before getting through it and then stepping on top of what we've conquered to get to the other side of the range to call it our own, basically purchasing everyone out of this inside area, which is a confinement area, like a keep to a castle, basically. Supposed to, you know, essentially the people of that node that are benefiting off of it staying outside of that node are no longer benefiting. Now it's like the people that are long are winning off of this node being passed through again. And in the event that we step on top of it, just like we did the green zone, we'll have all of this volume to get through once we fall again to this area. So just like we ran into this green zone and red zone and we're struggling to make it through it because we spent time there, well, think about what it's going to be like to make it through this thing that we've spent all this time here. It's kind of interesting. And when we do leave the range, it's likely that the entire movement that we have in here is going to double at the minimum. So is it true that we could be expecting a movement that's as large as the entire consolidation? You know? And what's funny about that move is it typically gives it all back. There's a great chance. Because when we do one portion, we can typically double that portion to give it back. And we can do that in so many different ways, like W, where it takes one portion, doubles it, and gives it back, or a simple S wave, where it doubles it and gives it back. And so many different patterns can come out of that, like a 5-wave move that involves many doubling portions to get to where it's supposed to go. And of course, many other patterns as well. Like even from a falling wedge, like the idea that what we've done inside of that falling wedge could easily double. That's not even a question. It could take back the entire movement, like we've seen many times today. Like I guess even kind of like there, in a weird way. It's intriguing that it is trying to reach the high of that range, and this area that we had in here is definitely more than doubled. Well, it's about doubled by this point actually, which is kind of intriguing. And now it becomes this trend that is, this is the trend until we break it. And I love that about it because it gives us an idea of how much time we can spend, you know, at an area without, having to worry about the trend breaking. Because I'll tell you one thing, even if this level that we're at right now is so strong that it sends us straight down, do you think that that amount of energy is how much energy we would need to break the trend? Do you think it would be a very effective trend break from right there? No, 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 no. So getting closer to the trend is a lot better to be able to break it. Now, it doesn't mean that we're not going to come down to this point before we break the trend. We totally can. We got all the space in the world to come to this high. So why is that important? Well, at the end of the day, it's a green zone to an old red zone. We can see this range used to be used, and it actually was used already today. We could see that when the green zone was established as support, it specifically led to the red zone and then back to the green zone and through it. But it's true that it had a small relationship while it was there. And it is also true that here we are now at this 61. Or sorry, 261. My bad. This is the 261 I was talking about on the other chart, all the way up at the high. Basically the 261 that goes to this one. We're all the way up there. So just like we had it before, this is exactly the same way as this was. So this one came down to a 261. I'll try and clean that up a bit, but basically by circling it, it should become clear. This is related to this, and this is related to this. And basically, we can see within those levels that we have a 100 at the B point, 100 at the B point, just like that. And the 261 is the next move that comes off of that B point. Now, just because we reversed off of that 261 before doesn't necessarily mean that it has to do the same thing here. It can be a little bit problematic. We can see the red zone, of course, is a little bit higher than the 261. I believe we will see the 261 from above, though. That's something that is it's teetering on the idea right now of touching this from above. I find it very likely that we do end up getting back to that point, which is like the high of this node. So, very easy to do that. And it's also very much like the high that we had, I guess, here. Yeah, that could be an interesting level too. So I mean, it's okay that it does that. Obviously, it's not an incredible move to be able to really take advantage of, but given the chance that this was like the hourly or something like that, it would be a very, very important understanding for the situation to be able to withstand this movement at least. Now, with all of the movements that we've had against that range at the high, it would seem like the goal is to try and step on top of it. And if we are to double the entire range, as I mentioned before, um, that can involve us getting up into these levels and really taking advantage of that distance to the upside. Now, I find it very likely that we test these red zones from above. That's going to look like the 261. So at some point, we do have to find that that test. Now, what this actually reminds me of, interestingly enough, is like the daily, where if I take these off for a second and take a picture of this and explain that this could be something of what it is interested in doing on the daily, where we start wicks and spikes past this high. Everything that we do beyond this high is subject to trying to come back to it, no matter how big the move really is. Like I said, if it doubles the range, the first thing that it's interested in doing is what? Coming back to it. Because like an S wave or like a W, what we do is we take that initial portion and we double it just to end up returning back to it. And like the S wave has, we double it just to come back to it kind of thing. So I mean, this entire area here is like one of those areas, and it creates, you know, a very attractive high to return back to. One of the most being this blue line. Like, how many times have we seen that the blue line has been on the support side of things lately? It's strange to really see it be on the resistance side of things. But this move, it definitely made that line clear, and there's no real retest of it yet, right? So I think that that's going to be in store in the future. As if you think about it, this line has a force that is working in favor of it returning back to it. Like, I'll tell you one thing. We've established how it takes time or negative movement to respond to any barrier. So in the event that it wants to respond to any one of these barriers, it will have to spend time or it will have to make movement on any one of them, and effectively doesn't have to be much, but effectively it gets us closer each time that it does spend um, any time or negative movement. It's not progressive with this trend. It gets us closer. Like, in the event that we spend time, imagine we did that, at any one of these levels, it gets us closer to that level. So whichever one it does pick to go sideways at, it can decrease the amount of time that it takes for us to break the trend. But right now we can see that there is so much time between now and that trend that we could fit nearly an entire pattern in there. We can see that the entire reversal process, each time that it has reversed, could easily fit within this environment. And given that we were this close to that trend, things would be a little bit different. Because on average, getting that close to the trend does present some kind of risk, that we're going to break it soon. And that's one thing that we could see that could prevent that from happening would be increased movement with the trend. But because it's steep, it's difficult to do that. It's the steeper it is, the more difficult it is to maintain the trend, because the more energy it has to exert to stay with it. And that's tough. And especially when it becomes the need to get back to levels like that, I'm like, how on earth could it get back to that level and not be close to this line? Soon it will become the case that if we cross this point, it will have to break this line in order to get back to that level. So, that's an interesting threshold, given that it becomes the case that we have to break that line to get back to that one. We could then understand it like, when that line is breaking, it is one step closer to making that move. And, God forbid you take the thing holding it up out. If it falls down, well, don't be surprised, right? So at the end of the day, that line, it plays a vital role in understanding that it is the uptrend until it breaks. And until it breaks, there can be many patterns that can form within this time that it has presented. Now, there's other levels, like B points and so on, down below, that can present us with barriers that really intrigue me, because at each one of these barriers, they're capable of taking time, or they're capable of presenting negative movement. Right now, we've only really hit the 127 or 141 of this major move down here, which basically insinuates that in the event that we are to take all of this volume that we had down here and try and double it to the upside, we would be looking at levels a little bit higher. Like, of course, the 188 200. This 200 would mean exactly double. Not always does it make it exactly double. There are some things that can be in the way of that, like this distance down below. This distance down below was no part of this node. And in my opinion, that distance was what a good Wiccan spike really looks like in this environment. Like, is it not true that it's very similar to the Wiccan spike that reversed that last trend? And it's also the wick and spike that sits on top of this node at that level. And I'm not making it up, or like it's true that it does sit on top of that node like that, right? And then if we look at the other side of the spectrum, is it not true that that one sits on the bottom of the node? I'm not making that up either. So like we can take both of these and understand that they're on the high and low of that node, and that any movement that we did on the upside or bottom side of that node came back to it as quickly as it left it, and that's a fact. So I understand that as vital information in this environment, to being able to understand that we might be able to make those wicks and spikes prior to breaking the trend. Now remember 60-degree trend? It's interesting that this one is, what was it? 53. We've seen that trend before. I call this conditioning sometimes when I see this, because I'm like, when I see that they've used the trend before to break, not quite that time, but basically we don't even notice it, but it's like they're using the same angle so many times. We can find that the angle on the bottom can be very similar to the one on the top, and in this case we've just met a 161 and the high of the VWAP band. Like, remember how important that VWAP band was? Well, we've just hit the high of it and essentially just responded very particularly to that level.
We're at a 161 right now.
Mm-hmm.
There's one.
And one. So it definitely is interested in making that the case. That I think that we have doubled this area already. I think it's done a good job at doubling. I don't think it has to get to the 200 in order to be considered doubled. Everything should be made safe by this point if you do have exposure to it. Um, that's the way that I see it. As of course, the one thing that I do see here is that anybody that drags their stop above the blue and white line is subject to getting stopped out. And in the event that we decide to make this pullback, the amount that we did, that's acceptable. I can see that that pullback was also used here. And it is like how much we've pulled back when we pulled back in this trend. And in the event that we want to pull back that much, it could be something like a fourth wave. Because since the last trend break that we had, this has been 1, 2, 3 has definitely been large. And I just want to point out as well that the one most, you know, the most significant factor of the morning, in my opinion, has been the fact that it's not been 3 highs that have ended the expansion, but 4. And then at the bottom, we could see that that same 1, 2, 3, and 4 ended that trend, just like it did the one before it. And I'm curious to see what the impact of having 4 highs, even on the short term, can be in this environment. Due to the fact that something like that is so particular, I would say that it would be unnoticed by the majority. And I think that we could continue to use specifics like that, but things that are made obvious will change frequently. I think like things basic like triangles and S waves and so on. We can see that different ways to make them are on the table, and I'm like, hey, what about this level right here? Have we ever at any time ever tried to test that? on the passing there, never from any specific level. In fact, it's never really been interested in responding to any level but the 161 in that fib set. Now, I'll tell you one thing. The most effective reversal fib for the day today has undeniably been the 261. Like the 261 from the high and the low, we saw that there was, and I'm curious that if this one was also a 261. No, it's a little bit past it. That's okay. The 188s have been pretty frequent as well, but not since these last two 61s have played out effectively. They were the end of the expansion that we saw it here. Like basically, it's become not incredibly even anymore. Of course, the doubling process has begun, and I think that it's met some resistance at the same level that caused it the most problems before. You see, if I click on this level, it highlights this one because it's literally related to it. It's in association with it, and it's a comfortable amount of distance that it makes away from it. Getting on top of that line is something that we could expect, but it's going to be in a different way than we made the move here. Like, it could be very spiky and choppy, and it could move with a lot more of an inclination to overlap every advancement that it's had since it breaks that high. Of course, the one play that I think that you want to be aware of is the move back to the white and blue line. And like I said, if it becomes the case that we pass this white line here, that white line marks the threshold that the yellow line has to break first before getting to it. So we know that an expectation, it would be an invalid expectation to assume that it could get to this line before breaking this line. Everything becomes about, okay, how do we break this line? When do we break this line? What is the risk of breaking that line? Of course, spending time at any level is getting us undeniably closer to that line. And then when we spend time at a specific level, it has a negative impact on momentum. You can see since we've stopped moving up at a level, what's happened to the momentum? Well, the price has continued to glide along this level absolutely fine, and the momentum hasn't. It's come down a little bit. Sure, okay, you can look at what it's done in the past. You're like, all right, well, it only came down this much before, and it wasn't that big of a deal. But that was when it was that high. And this is when it is this high. I can see that we've got an incredible difference between the two, and the more time that we spend acknowledging any one of these levels, the more likely it is to have a negative impact on momentum. Now, a moment ago, when we were at the low, we can see that momentum was starting to develop in a different direction, and that's when it all started. It was off of those 3 or 4 consecutive lows that momentum started to develop a little bit while it was going down throughout that time, essentially showing us that things were changing throughout that environment as well. The same could be said for the highs when we see them. Of course, there hasn't been 4 highs here. But in the event that it decided to make 4 highs and decided to use that as the process of closing the gap between the yellow line, we could see that how that could become more attractive. You know, given the fact that what this reminds me of is it reminds me of trying to shoot a target from a far distance away when you have the option to shoot it from a closer one. You're undeniably taking a shot from a farther distance, and there's a lot less likelihood that it'll be easier to hit the target from a farther distance. So it's like you take the target and put it a foot in front of you, and then you just put it on the bullseye and say shoot. Okay, fine. Like it's a lot easier to say that you're a lot more likely to be in for the trend break, because the first step in breaking this trend is undeniably getting to it. And if we don't get to it, I mean, having the hopes that it will break it from such a far away distance could be naive, because in the event that we do decide to fall straight to it, we may not even have the energy to break it. Like if it decides to go like this and then spikes to it, that could be interesting. That spike could then be produced on the other side of the range, and then it could come down. Something like that easily could form. And basically what it could do is it could take everybody that's short in here and all of these levels, all of these people that are short, typically it will find a way to spike through the high of this consolidation. I would give it like a 75% chance to spike through the high of the consolidation, literally. So it's very interesting to consider that. And any kind of erratic movement that it makes out of the bottom of this is subject to being placed out of the top. And you want to know what's funny about that is even the move that gets us to the blue and white line, even the move that gets us to the blue and white line, it could be doubled to the upside when we're done with it. Very interesting theory, but depending on when we hit it, just remember that the blue and white line is in fact coming to us in the event that we were to spend, in a hypothetical situation, an eternity growing this node. Do you know that by this time we will have hit it? By 2 p.m. actually. That's today at 2 p.m. we hit that level. Not necessarily. I think we hit it far before. So this is the controversial time that I had marked. I'm going to remove it so we can see what's going on. But this is the moment where there's no other time that we can get to this blue and white line without this yellow line being involved now. It becomes the fact that every single thing that got us up to this point has to end in order to ever get us back to the blue and white line. And it can't be just a mere pullback like this to get us there, unless it was from this time, which would be like 1140-ish. And I'm like, okay, well, that's a long time away. This time itself is having an impact on the market, which I find intriguing. It's very intriguing to me. Now, like I said, any spike that we did at the bottom of this node could be sucked right back to the middle of it and produced out of the other side before actually coming down. So we have to be aware of that. I can see that the lows that we've passed have been presented as small B points. Just keep that in mind. I marked them because it is a fact that they exist. And they've never been tested. So it becomes important data in the event the market decides to leave such easy B points untested. Could we see that same characteristic develop in larger patterns too? It becomes necessary to understand the small movements because we can see that the smaller movements, like this original pattern at the beginning of the first range where it made a head and shoulders and decided to fail that pattern so hard that it doubled the entire space of the head and shoulders to the upside. That's how hard it failed. And look at what happened here. Right after that pattern is we went left shoulder, head, and right shoulder. It's working out a little bit and smoked. Absolutely crazy, right? What a cruel pattern. When this pattern is designed to do anything but what it just did there. It's designed to go down. And what's funny is you can see that even the first one was presented on a uptrend where the pattern itself was literally on, how many times could you fit that pattern into the previous trend? It was quite relevant. It was nearly 3 times, 3.5 times the entire trend before it. You would think capable of being able to actually reverse the trend, but no. It just created a smaller version of the bigger pattern that it was going to fail. So my point is understanding this smaller pattern that happens that's only visible on the 1 minute and lower and so on is very important to understanding that it actually played a vital role in understanding the larger pattern, the larger picture range in the future. And we can either choose to accept it or neglect it, but it takes a matter of seconds to be able to understand that level. And why neglect us? Why neglect it? I don't understand. We can see these levels are getting hit on the short term right here. And this is just a typical kind of movement. These are all smaller moves that would be expected to get hit in the short term. It doesn't necessarily mean that we've really bought much time with that trend whatsoever. Really? Like, if you think about it, are we not still at the same level that we were consolidating at, give or take my inability to draw a straight line? But that is where we are. Like, what I could do to prove it is to take the node that we're in right here and drag it over like that. We can see we're inside of it. Undeniably, we can't see the candle anymore because it's inside of the node. So I'm like, all right, well, could we produce that spike out the other side of the range? Well, you know what's interesting about that? Where would we be if we did? Would we be at the 188 200? The 200? To this move right here. And I'm like, well, that's an interesting level, because with it being the case that sideways, down and then up is a bearish pattern because it creates an uptrend. And it's a bearish pattern, which is interesting to me because and you won't find it on Google either, but this is a bearish pattern to me because of the fact that it creates an uptrend. And that uptrend is designed to break. And what's funny about it is the largest part of this pattern is an upwards move. And without it, it cannot be the bearish pattern I love it to be. That's what's interesting about that. And let's see. And of course, what could this mean? Could it mean that the last thing that we did was a fourth wave? Like, was it not true that the last pullback that we made was roughly the same size as the other pullback that we made and this pullback? And what else? Was it the size of the entire pattern that began this range? Sometimes it is. It's not in this case, but that's okay. And obviously, these levels right here are like incredibly dangerous of getting hit. We have to watch out for those levels. Like I said, any movement that we get on the top of this blue, or sorry, what is it, purple line, it's subject to being different than the way that we were below it. And you know what I find that's interesting about that is, if it was the same way, then we must move this far above it so that we can pull back the allowable pullback. And I mean, the only allowable pullback that we've really had has been that pullback. Like, it's been strict about it. It's either we can notice it or we don't, right? But it's true. I mean, since this trend started and the last one ended, how much have we pulled back? Is that the right answer? Well, there's another right answer too. We've got this little one, and it's incredible how much it's been visible. Like here, 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 here. It was the size of the range, the size of the node almost. Could that be the next best? Well, I tell you, it happens nearly twice as much, probably more than twice as much, right? How many times has it happened? At a quick glance, like maybe, I don't know, 5, 6. In comparison to the two other larger ones. Now, when we can see that there is a allotted pullback in this trend for it to make, like those two distances, sorry, I'll keep that other distance handy so we can see it and acknowledge it and use it. The next time that we do pull back, it may be that distance. After all, does it make sense to drag your stop within these distances of the high? Well, at any time, if it does decide to pull back and it chooses to be one of these distances and it costs you your position, well, that's not very good, is it? Especially if it's going to make them this many times, right? So that's another logical way to look at it. Now, of course, one of the next pullbacks that we're going to get has a higher chance of being more than just a pullback. Because did you know that since we formed this trend right here, which is a very important trend, I couldn't help but make it red yellow now. But the one thing about it, because everybody needs to really understand that that trend does exist and it is that it's the end of our ability to go up when we break it. Basically, it's one of the major thresholds that marks our uptrend and the support of our uptrend. And without it, don't be surprised if we don't go up. That's the idea. Because like it's like, well, like Jenga, if you take the support out, the whole thing comes down. If this is one of the blocks that's holding it up, basically, if you take it out, it might decide to come down. That's why it's critical. Like, as we get closer to it, it's like we're getting closer to pushing it out. Now we can see that that has spiked right back to that point there. Now we may see more of these. Could this be the second of 4 highs maybe? Because I tell you, 4 highs at the beginning caused the biggest dump. 4 highs at the low caused the biggest run. And have we done this move? I'm like, oh, I mean, I can't help but notice. It looks definitely like it did decide to do that. So we want to make sure we're aware that that's a move we're going to see a lot more of. And even when this line breaks, like we're going to see this like all the way to here as well. But it undeniably becomes a really intriguing threshold when we get to this time. And I would hope that it doesn't make a consolidation that long. But what else took that long? When I look down here and I can see this took that long, I find that very interesting as well. It is the case that that is very similar in time. And, at the moment that it broke this uptrend, you know, this environment started and its ability to go up ended. And what's funny about its ability to go up now is it actually, I'm going to do something here. I'm going to drag this up here. Have we not done that? We did exactly the same move that brought us into this range on the other side of it. Can you see that this movement right here, if I make it a different color, like green, I guess, and then I make the same arrow again right here, green, I guess, right? That high is exactly there, right here. And that's where we are, right there. And you know what happened when we did that? Is we did that move, which is interesting. It's just a fact. I'm not saying it has to make it, but it is true that it did make that move. And I mean, is there a danger in making things even? There actually is an incredible danger in making things even. It's important that everybody recognizes that it is even at this point, and that what separates it is that consolidation in the middle. And we've never had anything like this consolidation, obviously on this screen. We've had two of these moves now. Essentially, like instead of drawing it so rudimentary, I'll draw it like on this chart. Like this movement right here that we had, that entire red box, right? If I take that red box and I place it on where we currently are, that is where we ended the consolidation. And I mean, it gives us this environment, which I find quite remarkable. We've just hit the 188 now. Undeniably, there's every single part of that consolidation down below has doubled to the upside. And we're nowhere near close to the red yellow line. Like it is the case that in the event that we decided to make the entire move that we just did again, it would get there. It's intriguing to me. Because do I really consider this cleared? Not really. I think that we're going to continue to see wicks and spikes to the purple line. Now, I'll tell you that creates a very strong ultimatum. Because in the event that we're to continue responding to this line, we cannot continue with the trend until this time. I mean, this time becomes a very, very intriguing threshold, 11 o'clock. That's, very close. So it is true that, before that time comes around, we'll have to see what the second and fourth wave trend will look like when it gets tested or broken. We get to experience exactly what 1, 2, 3, 4, and 5, what the result of this is, having broken the second point connected with the fourth point. And why I think that that's so important is because we have to consider in the 5-wave move sequence, there is no other time that we have this line. And it is only on that 5th wave that we create that line. And I'm just going to point out, like, look at the distance in comparison with the two lines that we can have. Like the support line being like really far away, you know, and like the very support line, and then this one being very tight. This is typically the first trend to break. Well, it has to be the first trend to break, in order to break the second one. How do you get to this one without breaking this one? You can't, right? So you have to. So it becomes part of the process of every 5-wave move that's ever worked to start by breaking that trend. And if it is to make a 3-wave move against it, like it's designed to do, to look like a head and shoulders, we could see this kind of characteristic used again in the future. Like in the morning, we saw it was here, and then it continued down, and that can be acceptable as well. So it's really important just to have a awareness of where we are with this pattern and exactly how it's managed to play out. But we can see well before the W made it to the 261, the idea is that it could be even on both sides. And it is true that this 261 had basically no impact. And its idea is, I think that it will in the future. This is a level that I think I'm going to mark as a gold dash line. Because typically when we make it through a VWAP and we don't test it, we pay the price for it. I think that what's likely to happen is that this VWAP is going to come up very slowly to this B point right here. And by the time that we hit it, it's very likely to be very close to the high. Like these two levels are going to be very close to each other. And it is the case that everything that we've done out of the bottom of this, it's been more. But if we take a look at what it's done since that high there too, on top, we're approaching, that doubling point for sure. So it's really quite interesting to see that, this entire move at the bottom has doubled up. And I'll tell you one thing, every single time that we've done this, that has been the case. Like when I was explaining this earlier, I said that when we take one portion, we like to double it. And we've done this right now. Like sure, I use this, but I could make it a circle. We've done that. Like this is here. Like it's very much doubled, right? So that's fine. To understand that that can lead to it taking back every bit of what it has doubled and coming back and basically clearing this high, that's an attractive kind of move that does happen very frequently. Now, not always is it from the exact point of it doubling. Like today, we saw that the last most impactful move, this entire move began off of what? Where did this all come from? Well, it came from not doubling. It came from this not doubling. It was more. It was the 261. So what if it is true that this is the larger example of that? Maybe it's the 261 that we should be interested in, just like it was on the low. Just like on the high of day originally, it was 4 highs. 1, 2, 3, 4. And then on the low, it was 1, 2, 3, 4. They're literally, it's just like I mean, I'm not making it up. It's true. There's 4 new lows there, and I know they're not the same size, But how many times have we seen it, like the smaller version conform, and then the bigger version conform? And then we choose to neglect that it made a bigger version for highs and then smaller version for lows. I'm like, no, 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 no. The most impactful reversals of the day have been either smaller versions of the inverted side or larger versions of the inverted side. So is it not true that we should be considering the 261 above? If it's the smaller version that we've come from, it could be the bigger, like, are we not undeniably in a bigger version? Like, I mean, this is the biggest version of any move that we've seen today. And of course, on the moment that it breaks through the 188, it'll be one step closer to doing the smaller version. Because let's take a look at what it did on the other side. Like, is it not true that we created the same kind of pattern? It's like an M, except the goal is to get back to the B point, and look what happened at the 188 200. It kind of came down on the M and fumbled to get to the 261. That's what happened. So it ended up looking like that at the 188 200. So that's what it did. And let's say, for instance, it does that at this 188 200. What if it just fumbles here in an advancement to try and make this into a W, basically, that fumbles at the 188 200 and gets to the 261? I mean, this is the same kind of pattern, sorry, as this one, except in reverse. And undeniably, this one is smaller than this one. Like, sometimes what I like to do just to confirm that, it is a fact that they are doing the same kind of moves is you can look at how many points it makes from here to here to here to here to here. And effectively, on the same sequence, it is true that we are presented with a W instead of an M, and all that remains after is to make this movement. Basically, the one thing that's different is this move right here. And you want to know what that move does? Is in the series of harmonic patterns, this move to this move is never used. Like, it's not used to click on at like any fibs or anything like that. It doesn't matter the size of it in any regard. What it does do is, in the event that, let's say, it's high like this, that can create another B point that you can be interested in, but that's about it. Like that. And right now, it's the case that we're fumbling at that 188 200. There's no fast fear here, it would seem. But a node does grow. And it gives me deja vu to the one in the morning. Like, in the morning, we had two nodes. And I highlighted them both with a square. And they've been overlapped so much that it just looks like there's one node now. So there's a lot of similarities that I can find, and they are kind of complicated today, but at the end of the day, it's like what I've noticed to summarize it is that there's been smaller patterns and larger patterns. The confinement areas of those smaller patterns have nearly been exactly the same as the larger ones. In many cases, they have been exactly the same, just like the head and shoulders being here and here, and both failing to new highs. And of course, the four highs into the four lows. And then what we haven't seen much of today is effective 5-wave moves that have managed to get it past the fourth wave. Like, if we take a look at the movements that we made early on in the day, this is a trend that's pretty impactful, right? And you could say that when we were in that trend, we pulled back, a certain amount here and a certain amount here. Those were the heaviest pullbacks that we could find, right? Or you could even say that there was these two here, where under no circumstances did any pullback make it past the fourth wave. And then if you were to consider this whole movement here as the second wave and the fourth wave, notice that it didn't come past this point. Very intriguing, because this is a characteristic that we've seen in pretty bullish environments. Now, in the event that we show the same kind of movement to only being able to come back to the fourth wave or within the fourth wave, sometimes only the high of it, but that that could provide an environment where, like, I'll draw it again, like just like last week, and I drew it like this, and then it comes back down to the fourth wave, and what do? Like that. Now, isn't that deja vu? Because you want to know what that is? This is exactly the same as the last post that I made when we were looking at that. Basically, this environment is very much the same, very similar. We can see that right now we've pulled back to the fourth wave. It's been very, very quick and sharp and fast. A lot of people will try to chase it. Curious about that, because at the end of the day, I think that we've created a couple more B points up here. They're both very small and short term. But I'm watching this fourth wave to determine whether or not it is capable of actually making it through it. We've seen that it now has made that distance back to the fourth wave, the very minimum. And in doing so, it's left a couple B points up top, 2 nodes up top as well. Now it's got another B point, all the more likely to hit that one actually. The 188-200 was the high of this move. Let's take a look at the other chart. The red-yellow line will have broken. And the blue and white line definitely hit. So we do have to keep in mind that this line right here, like I said on the other chart, incredibly likely to get hit. And any stops that have been placed above the blue and white line have been knocked out, but any positions that are still held from the low are safe, because what we did was double it. We took this entire range and we doubled it and returned back to the high. And that's exactly what it decided to do. And the entire movement, like I said, is one giant S wave. Now, it didn't happen from the 261, but I think we're going to go to the 261, ironically. Anybody that's still holding long gets to watch the show. At the end of the day, if you're fighting for the long, they've made it really difficult for anybody that bought above the blue and white line, and really difficult for any. I guess if you were targeting this low, you're in right now, but it's tough. Make sure you're taking profit to pay yourself if you are trading from the middle like that. But these B points here have been cleared, and I do think that, what I'm interested in seeing is actually that 261 again, above. Right, well, not again. We've never seen it before, but it's this level right here, just to make that clear. Let's take a look at how it's moved on this other chart here. We've managed to come back to that 261 from above. This was the original 261, and you can see it's bounced off of a VWAP. This target has been hit. There's 2 more above, basically. And we've also got, pretty minimal volume in that area right there. I'm just curious to see what it looks like. Oh yeah, we spent a ton of time here before. Jeez. Like this level right here is debatably the POC. Like, if I just mark that in right there, is a very strong level for the POC. The red dash line or I'll make it a red line. Maybe I'll just make it a little darker because it's old. But it's true that we come back to it now like it's the POC of this current range, and it may want to be. You know, at the end of the day, just because it's not volume that we've been presented with today doesn't mean it's not important volume. At the end of the day, we did manage to come clear this B point. So when we get to the 261, it may not have to come all the way back down to the B point. That's another interesting point. And it's all happening right on top of the old all-time high. You know, which is suspiciously particular to me. Everything that this move did that was, you know, I guess extraordinary in comparison to the previous moves, all originated from that white dash line. You know, like this entire move, everything that was good about it was from that white dash line. And that's a level that marks the POC of the lower range. Mm. So can you see why originally the entire move that, like before we left that range, you know, what I was explaining was that we could take this area, and I did it with a red marker, um, and basically said that this entire volume area is what we could have on the upside. But what we do, we could take all of it back. And we did that. You know, the entire movement that we did out of the top came right back in the form of a giant S wave. Now, I know there's a lot going on that chart, but I was just basically showing that that is the case, that we did that. And you know, it's like, well, I look at what's on here. I'm like, is it not true that these levels down below have been used incredibly well in keeping us contained within these areas? So I'm like, you know, we understand that the red zones and green zones were areas that it used in the past, and it used them flawlessly today as well, in combination with other levels like the 261. Then we could see that it left that range and decided to double. All of what it doubled, it took back. Every single person that dragged a stop above the blue and white line was then taken out. And we can see that, you know, this was part of the expectations originally. And effectively, you know, did I not mention that the head and shoulders could look like this? You know, we could look like that, where the two lows are separate. And if you go back in today's recording, literally, it's like I was explaining that. We do have that as the case now. It doesn't mean that it has to play out the same way, though. Understand that in the event that we create a head and shoulders, connecting the head and the right shoulder gives us a trend line like this one that could effectively break to get us through the head. One thing that I find incredibly effective, especially today, is if we were to make three consecutive lows. Like I can see we did here, and it's really strange. It's funny to me that it managed to get back specifically to that first of the three low. I think that we're trying to wear it down to get through it, though. Ultimately, this area has just been made the equilibrium to an S wave. So basically, just like that, it's been made the middle, and it has minimal time really to get to the yellow line. I can see there's a very large gap below, and it's representative of not having put volume inside of the areas where there isn't ranges. Like, we can see that these areas above, they were used in the past as old 61 levels and ranges that we've marked as 261 clusters and so on. Like, ironically, the high is an old 261 cluster in combination with a 200. Levels that I do think will be worked down in the future, though. Insignificant. And it could take some time in order to get through certain levels, but that's fine. Just like it took some time to get to the red-yellow line. It is true that the second trend here, when that broke, it really caused problems, right? And that's the line that every 5-wave move has to create in order for the 5th wave to become impactful. Every single time it makes a 5-wave move, this line exists. Oh, sorry. This line exists, and then on the 5th wave, this line is created. And it is that distance that creates the big threat and the allure to making that pullback. And in this case, sure, it managed to get to the B point very particularly, but everything that it's done past that 4th wave has been a wick and spike back to it as quickly as it left it. And I just want to take note of that, because typically the 5-wave moves lately have been notorious for just making it back to the 4th wave. Sure, made it to here. And that's a pretty controversial move. We saw that earlier in the day when it did this. And that's why I brought it up earlier, because I was referencing this point. For it to make a head and shoulders as crappy as that. I mean, like, you might be thinking, what is that? A head and shoulders? It's not a head and shoulders. The shoulders never look like that. But it's funny that that was a smaller version of what we did right now. And so far, not a thing is out of line with it. Even with the fact that in that environment, it went up once, down twice, 3, 4, 5. 5-wave move. Just like we could see here. 1, 2, 3, 4, and 5. Like, that's literally what happened. And when it made the 5-wave move, it resulted in it looking like not like your normal 3-wave move, but a crappy one. And the market followed with that characteristics. I'll make a video on today, and I'll show you that literally that is what I suggested before it happened. But it's a very complex thing. It's not like something that's like easy fish to grab. These are all new things that might be considered uh, you know abstract and may need studying more, which is fine. At the end of the day, one thing that doesn't need studying more is the fact that we took that range at the bottom and we doubled it up, and what we did beyond that doubling point, just like a W, as I was explaining before, comes back. Just like an S wave, just like I explained before, it comes back. And that's what it did. As simple as that is, that's what it spent its time doing. Very interesting. And of course, it goes without saying, anybody that didn't expect it to come back to the blue and white line, I said at some point, when we break that red-yellow line, of course, that is the door that needs to open in order to get to it. And this is the line that needs to break to get to that door. You can use that information as accordingly, but there's no other way to comprehend what I've said than to be positioned for the halfway point. And if you're just observing, that's absolutely fine. But like I said, there's one move we can consider at all given times, and right now I think it's a battle to get back to the high. Doesn't seem like it. It's not going to seem like it. Like I said, it could take some time. What we've done right now is just come back to that POC yet again. The longest term POC. It's just a red line there, right? And we can see with that red line, it's been tested with absolute precision. And it does rival the yellow line in its ability to hold. But this arrow right here, it marked the blue and white line no longer. Does that arrow need to exist? And I find it very interesting how common the 50% retracement has been today. If we go ahead and take these fibs off for a second and just go ahead and apply them from the low to the high. Just for a second here, I want to take a look at what these offer. The 50%, do we notice the 50% is right here? And that's the only one I'm looking at. I'm not looking at any other line on the screen right now, just that one. And that's the 50% right there. And we made it back to that 50%, no other line, right? Now it's interesting that that level was a level that was used to explode the market. I remember because I was part of it. At the end of the day, the 50% retracement has been incredibly impactful in the previous ranges. And it was to begin the range. We had two back-to-back 50% retracements, and I'll show you right here. Look at this one right here. This was a 50% retracement. We can quickly analyze the fibs on there. You can see that it came down to that 50 right there. 50 right there, right? And then it decided to make that same move again right here. Boom. Straight to the 50 again. Notice that without any hesitation, it moved exactly to that 50, not the 61. Now it's interesting that that caused such a breakout and that it was indeed, like I call it, two humps and a pump, like that. But effectively, very easy to remember. Whether you hate it or you love it, it's going to be stuck there because that's the intention of it. Like I am so like I cannot have it not be understood the way that it's supposed to be. So I understand that that move, it has two things that we can understand as the humps, essentially those two 50% retracements, and then the pump is the last thing that happens after. Of course, that's incredibly important to understand. You know, we can see that uh, today it's not really the same way, but you know, maybe here, you know, with these two pullbacks like we had them there, and then this incredible push. Now, of course, it doesn't necessarily have to be a 50% a 50%. That's not the two humps and a pumps. The fact that it has this movement, and then it goes up. I don't care what the retracement is, but the fact that this movement and this movement are very much associated with each other. They're like overlapping each other. They're very slow. They're very, uh, you know, they're very much 1, 2, 3, 4 at this point. 1, 2, 3, 4, waiting for a fifth wave to absolutely blow the roof off. That's the name of the game. Advancing on W's. Looks like how much do we move up when we move up? And since we've pulled back this much, could we move the same way? Well, the first thing we did when we pulled back that much is move up this much. Are we doing that now? It is true that that is the case, you know, and I'm like, all right, well, what happens if we do pull back that much when we've popped up this much? Is it true that it could do the same thing? And I'm like, well, you know, it is true. Now, I'll tell you one thing. It might not be interested in doing the full pullback, but to this line, this green dashed line there, you know, effectively, it does become the case that when we pull up to a 61% retracement, things can get a little bit controversial. At this point, this 61, it's in a crappy area. It's easy to step on it. We have to be very, very careful with this. It's dangerous because I mean, this 61 is not far from the B point. And I mean, what if we make this B point into a 61? What would that look like? You know, it starts to become the question because how many B points on average have become 61s? And it becomes an interesting question that if I was to take this up and we were to create this B point into a 61, it could look like this red zone. And I'm just going to write in there real quick. So whatever it tests it now, I'm like, yeah, sure, It's unacceptable to drag your stops above that level at any point, right? Just like I said, this one at the bottom, like, but and I said about the blue and white line, but it was very aggressive with that blue and white line. We can see that it stretched as far as it could to get back to an old POC. Now it's interested in getting to the 261 from earlier, which is all the way up here. Sorry, and I'll remove these fibs just to get that back on there, which is all the way up here. Oh my goodness. You know what, actually? You know how I was saying this B point could be the 61? What if they make this one the 61? And it was at the 261. Yeah, I think that it will be. Okay, like what we're gonna do is we'll go on to another chart because I don't want to put too much on there. I know I can comprehend it, but I don't know if it will be the case for many. So I want to make sure that it's clear. The one thing that I'm explaining at any given time takes my full attention. And this right here, you can see that that would put, if it got to this point right here, see how that would make that the B point, and it would also be the 61. Now, let's go ahead and apply some fibs on that level. Whoops. Now, if I applied the fibs on that level, like I usually would, is it not true that right in this little area right here, we have a 261, and that's where it ends? So we can go ahead and just make that into like a extremely like visible like gold zone, incredibly, out there, right? That's a level. I tell you, that's a level that it has decided to make the case for a long time. And I'm like, okay, if we did that, it would be like this fifth wave would be longer. And it was off of 50. And I'm like, where did I see that before? And I mean, like, is it the second 50? Was this a 50 too? Because that would matter to me, actually. Let's take a look. Oh, oh, geez. Was that a 50 right there? No way that was a 50. So just like the other time when I mentioned that it did a 50 and a 50 and exploded through the roof, absolutely insane, this is 150. And then this is another 50. And this has been an intriguingly effective pattern given the chance to form. Now, of course, this is far larger than the 50 and 50 that I've seen before. Curious about it. And I could count on the fact that the majority of the public hasn't found out that that's even relevant, so it's not like people are going to be in the way of this working. The particulars that are a little bit more advanced are the ones that I can see reinforced on a regular basis. It's the ones that are basic, like the triangles and so on, that change often, and the S waves and the Google patterns, as I call them, the ones that everybody stumbles on as soon as they type in trading patterns into Google, and they find those. The cheat sheet, and it's ironic, just like the point of control is. It's just like I say the point of control is the point that they control you. Nobody's in having a good time from the point of control. It's a tough time for everybody before it gets easy. Now, it's not like we don't leave the point of control, but damn, is it ever tough for the people that are in there, until it leaves. And that's the funny part about it, because it's like you'll see that again and again. And you also see we took a portion and we doubled it, but we also took a portion, and are we doubling it like we did? Got to be careful with that. Every single one of these short-term targets has been hit after having it come back down and hit the levels. Now, you want to know what's funny is I even said the people that are in from the low, you get to watch the show. You don't have to take another risk to be in from the middle, because what you have is undeniably better and safer and farther and more profitable than being in from the middle. And it's true. So it's like very, 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 very clear. This level is a good level to understand. It could cause incredible problems. Every bit of advancement that we have until we get to that level could be taken back at the moment that we get to it. And you know what other things could make that level attractive? Is if we specifically made a move that would make it so that it was doubling it by the time it got there. And it is the case now that we are halfway to that point. So I'm curious if it decides to make this point into a B point and then double it so that it could come back to it. Oh, geez, is that ever something that we could be interested in doing? So let's be careful with that. Also, there's a short-term B point or a short-term trend line right here, which is like it's about how we're going to break this, not if. It can break like crap. I suspect it breaks like crap. Anything it does break with that's exciting and fast and quick and sharp gets taken back as quickly as it was given. That's the way I see it. And I mean, like, sure, sometimes with the Bears, because they're being treated in a tough way today, it gives them hope for a long time and leads them on just to take it all back. And that's like it's a tough environment. Tough environment. But also what it reminds me of is how we made the lows. You know, when we broke a trend on the lows, is it not true that it came back to the point that it broke the trend? And I mean, we could see that right at the point that it broke the first trend of the day, you know, right in here, like it came back to grab them all. Oh yeah, and even here. Like take a look at this one right here. So we had that high, we broke the trend, right, from this point and came all the way back just to get them. But it's true that the people that were positioned from before the trend break could still be in for the advancement beyond, just like I say they can be from here. It doesn't have to be too like to give up for this level. Like think about how easy it is to hold from here and then to fight for this 11 low zone. It's like that low is tough, that low is tough, that low is tough, that low is tough, that low is tough. Hopefully one of them didn't cost you money because you could have been holding from the bottom. That's my point. So that's the idea. And I'm like, okay, well I can see the same thing here. I'm like, okay, clear, and then it goes tough, tough, tough. Everything's tough in here, you know, while it doesn't have to be when we know that everything that we had on the bottom was going to be doubled and then it was going to come back to half. So if you allow that to happen, you're in from the bottom and you're still waiting to find a point to hedge it. If you hedge that move, it's a benefit, but it's not a necessity. At the end of the day, what's a necessity is maintaining exposure. The hedge is second to that. At the end of the day, the next very attractive hedge point would definitely be that 261 above. It is true that at the beginning of the day, we found a 241 that was extra attractive as well. I cannot help but notice that this 241 has a red bar as well. There could be some initial problems there. Like, what if we did this movement right here and it managed to get off of the 241? Okay. Don't you find that that's interesting? The distance that we had from this point right here and the pullback that we had down to get up to that new high is the same distance that we would have to get if we did a 241 with that same pullback. You know, it could involve actually getting this high in a weird way. It's a little bit shy of it, sure, but then moving up to get the 261 beyond it could be on the table. Wouldn't be surprised. And it's contrary to popular belief that it did fight back up to the highs. Many people thought that that downwards move was the be all and end all. It made people get out of their long trades. And I say to get back in where? You know, at the end of the day, when we understand that it's supposed to double and then pull back what it's doubled, you know, it makes it really clear that we want to maintain positions from below the range. Of course, um, I don't see it being an incredibly long-term thing. You know, I think that this area is going to be relatively choppy. You know, like there's a good chance that the highs fight back for the middle of the range. A good chance that it continues to try and gyrate around this area, which is okay. You know, this point up here will be made into a B point, the way I see it, similar to what it was on the bottom. And I'm curious about that also because every time we've ever made three extremes today, it's come back to the first of the three. Does that have to be the case for the rest of the day? No, 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 no. But if it's been the case for every move so far, well, I'll be damned if I'm preventing it from happening, right? the end of the day, that would make much sense. If something's happened 70% of the way, and then you put your stop in between it happening, like that's like, ouch, you lost your position because of something that's happened 70% of the time of the day. I mean, like that's rough, right? So if something's going to happen so frequently, like this pullback that we had here, or like one of these small pullbacks, like I said, if it's at any time within the distance of, or sorry, if it's within the ability to make one of these smaller pullbacks or one of these larger ones, it's really the case that the majority of our moves that we've had today have been contained within these little areas. So on the short term, it's like it's really considering this one. Long term, really it considers this one. Like it's a very important move. Now I can't help but notice that in this case we have 1, 2, 3, 4, and 5. It's notorious for coming back to the fourth wave. In this case, it came past the fourth wave a little bit to make a head and shoulders. Like we saw earlier, could it do this and hit this area a little bit lower than the fourth wave? Because if it doesn't make it through the fourth wave, I'm more bullish on it, honestly. And sure, this was like a little cheeky jab at the fourth wave, but everything that was sold off past that fourth wave was literally bought right back up. And I'm like, well, I see that. Somebody valued it. I'm like, well, let's see if they value this fourth wave. At the end of the day, fourth wave is taking some heat right now. We're seeing already it's coming back up to the underside of the initial node, which, I mean, when we leave a consolidation, sure, this consolidation, what did it do? Did it double? Sure, it did. It just doubled down. What if it wants to take back the move that it doubled? Is it allowed? Well, it did it on the big picture. It certainly can do it on the small short-term picture. And that's what it seems to be wanting to do right now. Because at the moment, like if we zoom right in here, right, and take a look at what's going on, like this area, it totally doubled down and then just took back what it doubled. And I mean, we can either accept it or neglect it, but this is what the market chose to do through the time that it spent moving. And nothing incredible, but it's just acknowledging that that is still the way that it likes to move in this environment. And we can either understand it or not. And I like to see that even it does come back to the tips of the triangles. Like it's very triangular. We can see that that's the case in this environment. And the tip of the triangle was tested again. We can see that the 5-wave move didn't take it back past the fourth wave, in which case I said it was more bullish. So in the event that it does, I mean, I don't like that change. I think they're going to change that change. And then the fact that it went below, you could see they turned the robots on. They were like, hey, everybody, just like literally, we're buying the crap out of this. And it's like they think they can make it through the fourth wave. We'll show them. That's what that reads to me. And then they're like, okay, next fourth wave, we're ready for you. You didn't make it past the fourth wave, not at all, because they were on it, you know? And I see that. They didn't let anybody else have any value past that fourth wave because they wanted it all. And they got it all. Now they did the same pattern again and it's smaller. Like, I'll prove it. The idea is we did 1, 2, 3, 4, 5. And it came back to 4 and reversed. At the end of the day, if you don't consider wicks and spikes like prime reversals, just because it broke through that level, I think it's incredibly naive, right? I think that those were the best points to consider the reversal, if any. Not and aside from the part that it was the middle, but in this environment, when it was finished that fourth wave, if we know that that's something it's willing to do, well, you know how I depicted it earlier? I said this: 1, 2, 3, 4, 5, and then it comes back to this, and what does it do? Goes up like that, right? And I remember showing you guys that this is exactly what it could look like as well. The circle with the 2 green arrows on either side, just like I was trying to explain here.
I have a bit of a analysis with the clouds.
Mm-hmm.
So on the 1 minute, so usually when I see an open cloud, it means that it's fake pressure. But if there's the red or the green line, red and green lines in the cloud,
Like the
then
bars.
it, yeah, the bars,
Mm-hmm.
it's not fake pressure. But when we were looking at the 1 minute, it was coming down, and you see the cloud with the bars, right? So in my mind, I'm saying, okay, we're bearish. But
Interesting.
then as we're on our way up, I look at the 5 minute,
And it changed.
and well, if you look at the five
Oh,
minute,
5 minute. Okay.
yeah, so that was on the 1 minute.
Mm-hmm.
It wasn't really giving me like this
Ah,
true bullish
this is bullish though.
flashing. Yeah, yeah. So then the cloud on the bottom with no lines is fake down pressure.
Yep.
And so the 5 minute showed me, hey, it kind of looks like we want to go down, but actually we kind of want to go up.
Yeah, yeah, yeah. And
So yeah,
all the other
so the
time
one
frames
minute
are
versus
just
the 5 minute. Yeah,
all the other time frames are just screaming upwards, and they're not even below the.
exactly. And then the 15-second actually on those two spikes that we just had, you can see a bullish divergence on the RSI.
Hmm.
So
Yeah,
yeah,
it's,
this move might have been a little tricky for anyone trying to go for it, but it did have signals in there. It was just hard to find.
yeah. My question is in the future, will they allow the people that caught the middle to be safe?
So that being said, I think if we're going to be on a bigger move on a bigger time frame, and you have a better position, meaning like a lot lower on a bigger spike, then I would look at higher time frames to look at the clouds. Depending on how big the cloud is usually indicative of how much of a move we're going to have in the like in the other way.
Oh, and another thing that I would question is what made it do that on the 1 minute. Because that's intriguing.
Because that there is a bullish divergence on the histogram on the 1 minute
Oh yeah, yeah, yeah. Well, also on the RSI, if you look at the two lows right
on the
there,
RSI.
it made a bullish divergence. In the histogram, the cloud, you mean? Yeah,
Yeah, yeah.
yeah. The cloud was going screaming up. Yeah. And what's
So
interesting
yeah,
to me
that's why
about that?
I was confused by it, and I didn't know what it was trying to tell me, right? That's why I went to the 5 minute, and I was like, but what does the 5 minute tell me? And if the 5 minute has the histogram cloud on the bottom, but it has all the lines on the top, it just tells me like, hey, we're coming back for like
A test of
just a retracement. Yeah,
it's like you want to see the cloud try and test the flat zero line now.
that's where we're going, I think. Yep. So yeah, the best entry to go long on that bottom cloud would have been obviously the peak, the first spike, because on NinjaTrader, the first spike is actually lower than the second spike on MNQ,
Yeah, it's weird that it's not on here.
right? But the second spike on TradingView is lower than the first spike.
Yep. Bet you it's not on like a Wanda or something. But you never know.
Yeah.
Yeah, I'm curious what QQQ says. Oh, it's lower on the second. That's interesting. So many of the stocks will probably have experienced that as well. Oh yeah, Apple was like, I'm definitely lower on the second. Facebook, or they're not Facebook anymore. They're doing their own thing. Yeah, Tesla was lower on the second. Oh yeah, Microsoft. Microsoft was slightly lower on the second one. It had 3 though. That was kind of weird. Let's see what the Dow Jones ended up doing. Oh, that was higher. Oh, that's really weird. Something in the Dow was higher, and it had an impact on the Nasdaq. So it was also in the Nasdaq potentially, or maybe it wasn't actually. Sorry, in the Nasdaq. Let's see what the Dow did. Or sorry, the SPY. Oh, the SPY was second higher. Oh, that's interesting. Hmm. Regardless, it doesn't really change too much on the future. Yeah, each one of these levels, I look at them and I try to consider. I'm like, okay, this one could be removed. I suppose this one could be readjusted. Um, not
Let's
by
just
too
look at
much.
the giant triangle here. That's what we're doing.
Mm-hmm.
Triangulating.
Yep, definitely, definitely. Especially with this new move that we have here now.
Yeah.
B points hit, and I suppose you could take this line Put it across the highs. Creates a new B point in the support line of this area up here. This area has had relatively low volume, and you know, the spikes and wicks that we see out of the bottom of this range could be presented on the top of it shortly after the break of this top line. Ironically, this line right here, I think it's actually more positioned to be like a purple line, to be honest. And it's that top line that we really have to watch out for, not the support line. Contrary to popular belief, as it should be.
If you cut the spike off, the second spike, and then make a support line, basically look like we've made a smaller spike at the bottom of the support line like we did the first time. Just one
Which one?
more up.
The bottom?
See the two spikes that were kind of beside each other there?
At the bottom or the top? Oh,
Yeah,
mic
in the
check.
middle there.
Oh, here?
Nope, just to the right. Yeah, on the first spike. And
Mm-hmm.
then I didn't attach it to the second spike. I attached it to 11:15.
Yeah, right there. Okay, that's an interesting line. Um, I don't think it's
Possible channel, maybe. I don't know.
that line's hard to have in play for long though. Like first we would have to exert energy to one get on top of it, and then exert energy to stay on top of it, which is okay. I mean, it's just it's hard to ask it to stay in the picture for long. It's easy to get underneath it, and hard to test from below. Because every single moment that we don't test it from below, it goes farther and farther and farther above, meaning that we have to move even more to have a relationship with it, which I think is hard to do. But we shall see. We shall see. At the end of the day, it's not level that I would ever trade from, but maybe back to in the event that you're scalping or something like that. But it's I just don't see like if I think about what the purpose of it is, I'm like, well, what is the purpose? We create.
I just found it as like a if you cloned it and then moved it up,
Mhm.
it got roughly the same angle as.
Okay,
See
like
how
that high.
yeah, but even like move it downwards to the left, all the way at the bottom, uh, somewhere in the like that.
Oh, like it's already done this one before. I like that. I like that.
There we go. Yeah.
Yeah, that's cool. Got that going on there. It's like we've got that bar basically. It's replicated again inside of the range that we have right now. Kind of the same angle, the same area. Yeah, it is intriguing. It is intriguing. I'm not sure. I got a lot of data on this chart right now that I got to take some off. This is the two most important things in play, and these are all horizontal levels that basically I'm like, under no circumstances do I think that they should be removed, as well as the channels that depict horizontal movements in the past that we know can't change in time. It's the things that are on angles that need to be removed or readjusted, and I'm like, you know, I
The
find.
fibs I had
Mhm.
from last week, the one that was working quite nice with those levels, the
Okay,
diagonal one, I still have them on, and they're still responding to those levels.
interesting. I think I have them on this chart. Maybe not. Yeah, I was considering them over here. Yeah, the amount
Can
of
I post
pullback.
your chart for you?
Oh, so good.
Sorry.
Yeah, the amount of pullback we had was exactly the same as what we had before. Really kind of interesting. Let's take a look here. So you got fib channel levels from this original low here. Like I like to just highlight these areas because that's like where the original channel started, and like where that channel started, you can see it like doubled the range, and when it doubled, it had an interest in coming back to the point that separated the two. Like if I change the color of this one, so that you can see the difference between them, um, that high and low was separated by that white dashed line in the middle, which marks the 100. And we basically just come back to hit it now. And I like the view apps that you got on there too. They've been sniped as well. This is the average counter trend pullback that we've made many times in the past, and we seem to have made it again in the process of creating another downtrend, which could be viewed like this. The support line I don't think is nearly as impactful as the resistance. The pullback was just a necessary one to basically get back to the halfway point of this movement, and the moment that we did that, we also cleared the other charts, very important blue line, and in doing so, we've now advanced at the high again. I can't help but notice that it's managed to make a high with a higher high, and even though it failed to manage to play this out effectively, it still has another high. Like, oh sorry, the people of like the 5 minute may only be just recognizing this as the first high. A lot of them will not be able to see that it made, one head and shoulders and actually failed it. So they're all ripe for the picking. Everybody that doesn't consider short-term movements does not even recognize how badly the head and shoulders have been treated today, because they don't even get to see that they've played out because they
Yeah,
neglect them.
bullish move of what we did.
hmm Oh, today it's been crazy. I don't know if you were here for it in the morning, but the first thing that I saw throughout the day today was the fact that we made this head and shoulders right here, and it was like wow, it was like crazy. It blew through the top. Literally the entire pattern. It's like it doubled. Like whoever thought that the head and shoulders was going to benefit them positively to the downside effectively was met with the entire pattern nearly doubling to the upside. And then we just remember what that looked like there, and then we see that that's the smaller version of this whole pattern that formed exactly the same way and blew right through the top, like it had the left shoulder, the head, and the right shoulder forming perfectly before blowing right through the top, a bigger version of the smaller one that it just had right there. And the same characteristics are all the same. And each time that it did make that third high, so you can see that it made the 1, 2, and 3, and it was interested in coming back down to the first of the three highs. And also when it made 1, 2, and 3, it was interested in coming back to the first of the three highs. And even in the future here, when it did 1, 2, and 3, it still came back even farther than the three highs. So that was kind of intriguing. The triangulation can basically have snap arounds until we end this the relationship with this node right here, this POC, the level that has the most volume than any other level on this consolidation in particular. And another thing I see that's really interesting is when we broke this trend here. So that trend down, it managed to break up, right? And every bit of that upwards movement that they had, right, on the other side of that trend break was taken back. And it means that unless the people were trying to catch the wicks and spikes at the bottom, not only did that double and come back, but it came all the way back to the point that it was exciting. Any point that anybody could have been excited about was then taken back. And the market was like, oh, you didn't find value in going in below the trend break. And I mean, like anybody on the other side of the trend break was treated very terribly. And we can see that that's the case with this trend break. We can see that that's the case with even this trend break coming all the way back to the highs just to get them. When does it stop? just because literally, if you're not exposed from the extreme, the market wants your position today. That's the way it seems to be. Because if you're in from, like, let's say this trend break right here, it's funny that they came back for you, and it's like every single time, if you're in from this one right here, they came all the way back. But if you held from the bottom, then you're safe for the next run at the least, for the next new high. Obviously, until the next major bearish pattern, the next 3 consecutive highs. So, contrary to popular belief, many people don't see the need to come through the high. Many people would not have seen the need to even double the original consolidation, given the fact that it ended with a high and a higher high and a lower high. And it was like, hey, I'm working, everyone, I'm working. Boom. And it just took everyone out. And I was like, well, that's a head and shoulders right there, with the left shoulder, the head, and then the right shoulder, you know, separated. Even the neckline, even the shoulder level was even, just like a head and shoulder should be. And then you can see up here too, it leads people on. I think that this is a very interesting pattern when it makes a head and shoulders and comes down to a low and then makes this pattern to end it. Is it not true that the thing that was bearish was the fact that it had a high with a higher high and a lower high? And now we have a low with a lower low and a higher low, a left, a head, and a right, just like we had a left, a head, and a right. I call this an all-in-one. It's very even on both sides. And it does have 3 spikes on either side until it's done. And it's a giant triangle. And I think it's a terrible pattern, ironically, full of traps, and effectively it gets people. You know what it does is it makes people think that this is going to work like that, and effectively all it does is end up making the inverse and staying along this specific level, creating a triangle, and doing the exact opposite of you know, what Google says it should do. And that's the interesting part about it. So here we have an all-in-one. I am very intrigued. The left shoulder, the head, the right shoulder. The left shoulder, the head, the right shoulder. One of these patterns is going to fail. And the objective of both of those patterns so far, I'm just going to make it very, very clear. Both of the patterns, the objective has been to cause these people trouble. Because the people that decide to trade from that point have got the worst price for going long or for going short than any other price since we've been doing this. And that price right there has been crossed over more times than any other price since we've been here. And it has been strayed away from equally more times than any other price that we've been able to since we've started here. Since this upwards move ended, this is what it's given, essentially. It's given a relationship with this middle line that has been incredibly equal in every single regard back to that level. And I think this is the long-term POC, which is designed to be support. And it has been anything but support for how long? Here it was grinding and grinding and grinding. Wasn't really a support there, but that's where it all started. That's where that line came from. I guess it's here. When I just consider that consolidation's volume, this is how it peaks out basically. It peaks out at that red line. And then I basically overlap that red line with something that we can see in the future where we're stepping on top of the heaviest volume node that this had inside of that consolidation. Anybody that tried to go long in that consolidation was met with very great difficulty, just for it to be bought back up. It's ironic that they would have been right if they held it. but so much difficulty was presented for those that decided to do it. And obviously, that's Monday, the holiday. So it was really slow. And this is where it peaked out. Basically, right at that red line. The interest becomes in testing this triangle. We can see I've applied some fibs on there, and we're almost at the 261. And just to be clear, like the only thing that I am considering on this chart right now are the levels that it has presented in this area and the movements on the other side of the triangle. Like all of this is incredibly irrelevant. You don't have to try and figure it out. You don't have to try and look at it or anything like that. But I know that if you're new, you might be trying to squint and see in this area or these areas that are congested that are all the way at the farther end of my screen, which I'm not even considering at all. So I'm like, I'm not trying to clean up those areas because they're not really used. But my center of attention is just on this little area and it goes back and forth like this, basically. And that's the idea. And the relationship with this trend, we know that it has to break in order for us to get back to that triangle. We know that there's no way that we're ever going to get to this one unless we break this triangle. That's why I put this line as a support blue, or sorry, purple, because effectively, I think that that line will have a relationship with the price like it's the low of a symmetrical triangle. That's the idea. There's one here too, sure, that could be in the way. But that's what I basically see them as, is lines that could be in the way, lines that could be construed as the support to the symmetrical triangle. And of course here we are at the 261, a level that's been pretty controversial all day, that's worked out relatively well. You know, like deja vu from before, we could see this W has led to this M. And here we are at the 261 again. To me, that's deja vu. Seeing this setup again is exactly like we saw it earlier. You could say that this is the method of advancement, except the way that we saw it earlier was actually in reverse. And that's the way that it worked before. I can go ahead and draw that triangle back in there as well. Even draw the bigger one. Both of the purple lines are representative of the support of the triangle. This is an old 261 that I had from today. Basically at this level, this B point down below, it provided this level right here with the 261. At no time did it pull back to get to that 261, but it certainly paid the price. If you look back today when I said paid the price the last time, it was in referring to that level. Well, it was at that time, but we were referring to the fact that in the event that it doesn't get back to VWAPs or 261s like that, even 188s in some cases, if it blows right through them, typically it pays the price. Like if we see that it's like, all right, an M, and it's got down, 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 and it gets to the 188 and blows right through it to the 261, typically we go back to that 188 that we blew right through. And it's like taunting them, like I said earlier, I'm like, well, we go back to the level that they thought was attractive just to give them the opportunity to take profit, or well, to break even. And it seems to be interested in doing that. In this case, we've went farther than the average level. I am curious to see what the distance was that we actually ended up making it away from that. It was beyond the 461, more like a 561. More like a 500% retracement, actually. Let's take a look. Hmm. Not quite the 561. 541. No. Yeah, it wasn't really related to that B point at all, as I see it. This is dead in the middle of exactly where, the um, range is. Like we're right smack dab in the middle of the previous area. We're right at the 50. There's no more middle than what we're at right now. I think that we will see this middle less than we have seen it before. Mark my words. So every time that you can see we've been here before, I think we're closer to the end of not being here. Expecting it to come back here is naive now, I think. We've come back here so much that it will work less for people that expect it to come back here than it has worked well for them. Now you know that it's worked really well for people to trade back to this point. I think that that's coming to an end, simply put. And it will change, with a trend that will get us away from the middle. Of course, grinding can be part of it. We are in a triangle. Making things even on both sides can take some time. Getting to the end of the triangle is another threshold that marks our ability to not have to go back to the triangle anymore. We know that its ability to confine us ends at that point, and our ability to retest it also ends at that point. Sure, the triangle itself can create a tip that we can be attracted to in the future, but not really as impactful as a triangle that can be tested itself. Like everything that we do beforehand, like when we break a trend, it could involve us trying to get back to the triangle. Now, of course, the triangle's lines are pretty steep in comparison to many other triangles that we've had in the past. They're typically easier to get to because they lack that steepness. So keeping in mind, trading from the middle is something that's frowned upon, in my opinion, in this environment at least, as it does offer complications for anyone that's tried it in any one of the ranges beforehand. Of course, for the one time that it does decide to leave the consolidation, that's what you're betting on trading in the middle is going to be. Because if it's not, then more of that middle is what we're likely to see, unless it's that one time that leaves it. So, or unless you want one of the standard moves in that consolidation, like a small short-term trade that doesn't amount for long-term longevity or anything like that. Which is most of the trades that happen in the consolidation until it ends. The only thing that ends that short-term confinement area is for us to break the extremes, and right now we're at no extreme. As strange as it may seem, this is one portion and this is the next. We're at the extreme of it, I guess you could say, but it's halfway point, and it's like it's like a trap essentially for those that are associated with it, as it has been for anyone else that's traded there in the past. Essentially, any position must have been you know sold for a profit, or else it's doomed to meet that break-even price when it comes back to the middle. And if it comes back to the middle more than it does anything else, it comes back to the middle more times than it makes extremes. Like, think about it. Think about how many times it makes extremes in this environment and how many times it crosses the middle of them all. Like, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 times it's crossed the middle. Do we see 9 times on the top or 9 times on the bottom? No. So at the end of the day, it gives them a lot more stress. It's a lot less likely that the people that have chosen to position themselves from the middle are going to be trying in the next trend because they've likely burnt up all their energy trading in the middle. And you can see that as I move this over into the next environment encompassing the majority of the volume, it's not too far off what the middle was for the old range. And it's made things very relatively even around that middle point right now, which is roughly the tip of the triangle. But this is an area that we have got the least amount of volume, which is also an intriguing factor. That spending some time in this area could fill the gap that we've had in there. Now, of course, the market has worked hard today to make sure that it's spent the least amount of time in this area. And now this is like the most amount of consolidation that we've managed to do in here. The 61 of the entire upwards move becomes the next major barrier. Again, it is not like it's not the middle at the 61. I'm, you know, it's got heavy cringe value for me. Like, I'm cringing heavily at thinking about this level because yes, it might look like this and that and everything. I'm just it's tough being in from this point like this, especially so close to the VWAP, an area that could kill the volatility. Like, the volatility that's been somewhat, you know, gravitating back to this point ever since it started to become really juicy, and then now we're here, the point where every single juicy move has come back to or started at. Now, I'll tell you one thing. We can't spend much time here without breaking the initial downtrend. I can see that it's broken a couple times already. The third time, I expect it to break well. And the red zone could be part of it. But doesn't mean that it's not going to cause trouble for the 61 traders right after it does the red zone. Like, I can't help but notice that when we did meet this range right here, what we did was very, very particular on the top, and seemingly we did that move right on the bottom. The sizes of the wicks and spikes outside of this range are incredibly similar. We could either accept it or neglect it, but I'm not making it up. It's very much like an observation I have, and we just acknowledged the VWAP again from both sides. It is true that there's a B point untested in here. It's not. It looks like it came off the 141 to hit it before. Something, I don't know, 127 even, and it did hit it briefly. But it's, I don't care what we do underneath this VWAP or underneath this this range and this VWAP. It's very likely that we end up back at that point. So we have to be aware of that. There is one untested B point down below, but it too was hit off of a 141. And we can see that it chose to build off of that. Like, it came down and then it went up and then came down off of it again and built off of that. And if we look at that, it looks like it's managed to play off of the 141 and then off the 161, and that was good enough for it to continue going. Not really having responded to any kind of major fib to get back to that level, which is something I really want to take note of because, when do you see that, right? It's not really that, it's not on Google. It's not supposed to happen like that. But in the event that it does happen like that, it's important we take note of it. One thing that crossed my mind about the B point that we had at the very low down here was the fact that it was like a 500% retracement, remember? And it went all the way up to the highs up here. Well, what's funny about the other side of the spectrum is that if you look at this B point here, we're getting into that 500%, 423% retracement. Like if I go ahead and put on the 500% retracement, I'm curious where that's going to look like. You know, it's close to the other B point, but not quite. It's intriguing that at the very, very extreme, that we decided to make a W that didn't play out past the 500%, and then we do a W of roughly similar size and movement. Like, is it not true that this W had this much movement and it took this much time? And I look over here and I'm like, wow, geez, this is not similar. So, at least in time. The distance between the two extremes, the amount of time that it spent, you know, contracted into this environment, is incredibly similar to what it did in that environment. Just a small sketch can show that. And effectively, what that small sketch shows is that it was capable of moving how many times beyond before stopping? 1, 2, 3, 4, 5, 6 times. You know, and we had that same thing here, and we've managed to move down like pretty drastically into that movement. Not quite 6 times, but it's certainly come back to the point where it broke the trend. You can see that the last yellow trend that it broke right there, you know, if I put a level at that, you know, where are we? We're right at that trend break, right at exactly where it decided to break that trend. Because anybody that wasn't part before that trend break gets that move. And we've seen that, you know, even here, and you're part of the trend break. This one was really tough on people, but sideways, up then down is a bullish pattern, remember? And it creates a downtrend every time. And if it wasn't a bullish pattern, we would still be in one of the downtrends that it didn't break out of. But it's true that every single one of them have broken to get us to this point. And the steeper they are, the more likely they are to break. Like I said about this trend, the next time that we decide to break it, it tries harder to be better than it has been before. You see all those other trend breaks that it's ever made on this trend line? They've been absolute crap, right? Now, things have changed. It's never broken a trend from below the VWAP before. But that's the one thing that's different about it. No, there's a couple other things that are different about it too, but the fact that it hasn't ever broken 3 times before. You know, the fact that it has 3 consecutive lows and it hasn't touched the first of the three. That first of the three is marked with a green dashed line just above the VWAP. And of course, initial negative response is fine, but ultimately looking for more out of it. And the VWAP becoming a support in the journey to the red zone is something of an interest to me. And the VWAP's the white line, the only white line. Which marks the average price, of course. You know, people that buy below it subject they're technically getting a better average price than everybody that's traded since that VWAP has begun. Anybody that buys above it is subject to being at a worse price than all of the volume uh, that there has been since the VWAP began, because it weights all of the volume, um, and finds the average price since it begins, and basically that gives you a good idea of where the medium point is going to be, the average is going to be. And you can see that that can slow things down when we meet that average, because it's not typically an opportunity, you know, for the people that are getting there. It's typically a profit target. for the big money at least. And typically we can grow nodes here because it'll spend so much time here. So people will find the inclination to trade. It's almost like they have a built-up timer where if they haven't traded for a certain amount of time, doesn't matter the market environment, they will force a trade just because they have been sitting at the computer. And in an environment when it doesn't provide anything but the middle for a prolonged period of time, then you should take it as face value and understand that, it's not worth as much as what you would think, and the risk is not worth the reward. And there's many different reasons that you could say you shouldn't be involved with it. And time has nothing to do with it. Because patience is key when it comes down to doing it right. Waiting for the right times is really, really key. And it doesn't spend a lot of time at the best times. So it's very intriguing to see that when it does get there, it often takes a lot of patience to get out of the previous time, which is typically slow and centralized in the middle, and offering minimal long-term opportunities, but plenty of short-term ones, like the short-term B point that just hit right there, and we turned the VWAP into support as it was supposed to. If we took part in it, then that's great. If not, then that's fine. At the end of the day, it's not an important move. You ask me about this move 2 weeks from now, I won't even know what you're talking about. So at the end of the day, it's insignificant in the middle. But God forbid you would prevent it from happening. At the end of the day, I think that's the main thing, is to understand that this is the way the market does decide to move when it is here. And if we can see that change, it's vital data as to how we could change the bigger ranges as well. We've seen it so many times. The small, short-term patterns have resulted into creating larger versions of themselves. And if we hadn't have noticed the small versions, we would never know there would be anything to compare. But because we consider all of the data, the long-term, short-term, and everything in between, it gives a great view, big picture view of the entire situation. Now, of course, the longer term moves are infrequent in comparison to the short term ones, and there may be a lot more to talk about in regards to the short term movements than the long term ones. Uh, there are a lot fewer times that long term moves begin. There's a lot fewer times to be in from a long-term beginning. Like that's the idea. You can find plenty of short-term trend breaks, plenty of short-term targets. Um, it's true that the next long-term move might be on a short-term trade. Like when you take a short-term trade and it's to get up to this level, and you've taken your three, and you've taken one off on the ignition candle, one off at the price target, and you've got one left, can you choose to let it run in perpetuity? Oh yeah, you can, and hedge against it. When this 3 becomes NQ because you've built up enough of a cushion, then you can hedge against that one with MNQ. There's no better way to do it. It's designed to do it like that. So at the end of the day, when you open an account, they ask you if it's for hedging or for speculation. People neglect the tools that are given to them. That's the case because they'll tell you. They'll be like, all right, here's a 600-page manual. Have fun. Nobody will read it. It's impossible. It's not impossible, but it's unlikely. I sure as hell didn't read it, so definitely, definitely, they make it daunting. And there's definitely no good advice. They'll speak about it in a very cryptic language that's almost, you know, like the language they use on like C-SPAN or something like that, which is not like human English, not like friendly person English that's meant to be understood. It's meant to make you seem smarter than you are, and I got no time for that. I don't like that. I like to make things clear. I like to dumb things down, to make sure that everybody understands them because I'm wasting my time if they don't, right? Like at the end of the day, I want to make sure that it's as clear as I see it, and if, we're going to go and step on top of the VWAP and everything and hit the B point, and it's going to take some time to get out of this area, and I'm like, well, that's the way I see it. If I had the choice, I would never choose for it to move like this. But I don't get to decide. It's like I understand how the moves are meant to be interpreted. That's the interesting part. I believe that the moves are meant to be interpreted in a certain way, and that way does change. Like people do not think that that if there is a best strategy for 1987, uh, the best strategy will have to change for 2023. That same strategy, no matter how well it worked, no matter how well those patterns worked in 1987, doesn't mean that they have to work the same way in 2025, or something like that. They certainly don't. If 2023 is any example of it, that's for sure. They took all the patterns that worked well in the 90s and early 2000s and literally made sure they failed more than they worked. But Google didn't change. You look up those patterns, it still shows you 12 pages of them all working and none of them failing. Unless you look, sometimes there's people that have explained them wrong and they tell you that it's supposed to work and it's literally wrong information. And I'm like, yeah, I don't know what to tell you about those ones. But Google doesn't take them down, so you got to sift through the BS, right? And that really like kind of irked me when I was first starting. Couldn't find a straight answer. Had to find everything out the hard way. Luckily, I wasn't too I wasn't too that wasn't too new to me, I guess you could say. That it's not always the necessary way, but it was for me, and it takes a long time that way. But right now we can see it is being slow. After it met all the targets of the short-term area, it came down to turn the view up into support, which is the white line, and we're kind of just drifting on it before we try and make our way to the red zone, which is just above. At the end of the day, whatever wicks and spikes we had out of the bottom of the green zone, we could replicate on the top of the red by the end of it all. And all of what seems difficult to catch will be made. It will seem strange in retrospect to look back, because it will seem like it reversed and cleaned up all of the lows that were once difficult in one swift go, most likely associating itself with the triangle and trying to get back to that tip by the end of it all. Of course, the tip is a time. That's the beautiful part about a triangle, is that it has a tip, and that tip is a time. Every tip, you can draw a line that marks the time right at the point that it finishes. And at that point, you can say that it is physically impossible for it to test the triangle anymore. Obviously, it doesn't have to be a scribble. It can be an actual straight line if you wanted it to be. And at that time we know that it is impossible for it to touch that triangle anymore. I guess you could move it here. And yes, sure, you could readjust the lines of the triangle to make it seem like it had more time, but it wouldn't be this triangle, because one of the angles would be different. And if you look at what a triangle is, it's three angles, triangle. And if one of those angles is different, is it a different triangle? Oh, come on. Of course it is. you know, so we all know that, and that's clear. And the way that I see that, it's it's good to understand that. We all learned that in school. They had different names and everything for the triangles and stuff, but here we call them other things. But you know what's funny about what they called those triangles in school, like the acute and the obtuse and all that, the triangles, is what did they refer to? It was the angle that was different. That's the only thing that you can really change about it. It's like its whole existence is the three angles that make it the triangle. And anything that's not one of those angles is not part of the triangle. And if it doesn't have all three angles, well, it's not a triangle. It's just like, this is a fact. We understand this now, and it is very simple. Of course, we all knew this, but it's just good to have it clarified, I guess, in that light. Because you know what it means is, it means that if you have a clarity, you don't have to sit there thinking about it in the moment of uncertainty, or in like in the face of danger or something. It doesn't have to be a consideration that we're trying to like scramble together to find a solution, because we have clarity already. And I noticed that is the price of having clarity. If you have clarity in a certain environment, you're scrambling less, you see things clearly, so you're trying to take advantage of the clarity that you see. And it's like, well, how do you do that? First, it's understanding that there's some things that can give you a better edge to finding an entry. Like, first thing that I haven't talked about in a long time that I need to bring up is no buying at the bottoms of green. Sorry, at the bottoms of sorry, you want to buy only at the bottoms of red candles and not at the highs of green candles. Like if anyone's ever buying at the high of a green candle, it's against everything that I've said. From the get-go. If it has to move up so much for you to find value in it, that's not what I like. And I don't agree with it. You've missed the trade and it's better to find the next one from the beginning. Like I'm that strict. Like 100%. And it should be like for you too, because if not, you're settling for less. And I would never want that, my worst of enemies, right? Like you you don't want you don't want to be buying at the highs of green candles. Like you want to be buying at the extremes that offer you the most elasticity back to the mean. So in the event that we understand that every single candle that there is has an average pullback of how much? Let's look. How much does each candle have a pullback? Now for the ones that don't, they stand out. And we can count them on our hands how many stand out. How many candles don't have any overlap to them? Can you find me a candle on this chart that doesn't have any overlap to them? So like you can see how like this red candle slightly overlaps to the next one, and then this red candle has an overlap there. You can see that this is overlapping the previous candle. Every single time that we see a candle form, and it's like, well, how much? Well, if we look at from the beginning of this trend, this first candle that was right here, it initially pulled back about a 38% retracement. The next candle pulled back about 78% retracement. The next candle pulled back about a 23% retracement. The next candle pulled back 61% retracement. And then again, the 61% retracement. So if you're buying at the highs of the green candles, you're subject to being part of any one of those retracements that I just mentioned. But if you're in from the bottom and you're holding a stop at the extreme, what one of those retracements can affect you negatively? Well, only a one that gets back to the 100. And it can make whatever retracement it wants to make, but it won't affect your exposure if you keep your stop at the extreme. Now, what's funny about that is you could have tried to keep your stop at the extreme here, and here, and here, and here. Is 4 times too much for you, though? Because that might have been too much. But was it the wrong thing to fight for? No, no, it wasn't. Not at all. It was the extreme. Wow. In that moment, but it's nothing like this extreme, sure. But if you were awake at 3 o'clock in the morning, you could have caught that, sure. But if you want to be awake at 9 a.m., I mean, good luck, staying awake until the close if you're up at that time. And I'm like, why is it the case that the Nasdaq decided to make the low at that time? Like, who's doing that? It's not the American public. It's not all the options traders, not all the stock traders, not all the bonds traders, not all the GIC traders or the mutual fund traders. They can't trade at that time. So none of those people in the American public made this move. Somebody else did. And they have to trade derivatives that are not available at the times that the majority of the American public can trade. Now, isn't that kind of scary that the moves that we've seen, like the old all-time high happened at like 2 o'clock in the morning? And like, why is that the case? That this mysterious entity is creating these highs and lows that are after hours that don't actually line up with ordinary people being able to call the shots. It's like, do they not matter? Can they not fix it? I'm starting to think that it's very minimal, their impact. It's just getting smaller and smaller every day. And it becomes more and more about the agenda of big money and their ability to retain that control. And we can see every day it's like a show of force at how these big entities can literally maintain, and obtain that control. And they're really good at it, and they leave a footprint, and they're like, they won't even notice anyways. That's what I think. I think they're laughing to the bank, saying they won't even notice anyways. We'll make the pattern so clear, we'll double everything, we'll make it very, very simple grade 3 shapes and everything like that, and they won't even notice anyways. They won't notice how simple it has moved from one side of the consolidation to the next, how even it has been, and everything like that, how much of a retracement it's made, and how often it makes that retracement at whatever time it values it. And I'm like, you know I think that understanding everything that it does differently gives you a better advantage when you're faced with something different. So if you've studied every difference that it's ever made, every change that it's ever made in the past, when a new change comes, you're likely to find the necessity for it a lot sooner than somebody that only looks at opportunities. Because if you only see it working the way that you want it to work for you, and then it provides a pattern that's kind of wonky or doesn't work the way Google says, like 90% of the patterns are, um, It's very, very interesting. Because you could say that the morning today began with a pattern that was clearer than any other pattern that we saw today. It was a head and shoulders, and it failed absolutely clearly. Like, there's no more clarity than that. You can go on Google and you can't find it clearer than that. A head and shoulders meeting that shoulder level exactly the same way on top of an uptrend where the pattern itself is literally like, it's literally like 5 times the size of the trend. So is it capable of reversing it? No, clearly not. Wasn't good enough. And like I said, people from this trend break, people that trade from the middle, still getting difficulty. Still getting difficulty. After all, the one specific target that there was in there was hit, and that's about it. The rest of it was presented as difficulty. This trend is the new downtrend. And until it breaks, we are in the downtrend, and it's not a matter of if it will break, but when and how. How effective will that trend break be? Will it be something that we will see out of the top of the red zone? At the end of the day, it could be um, equal on both sides of this middle area. And what could tell us that is like the need to spike back to the baseline of this range right off the bat. If it's going to start by making a spike out of the bottom of the green zone and making that same spike out of the top of the red, well, that's first objective of getting back to where the spike started from is the first step in the right direction. Because it means that by the point that we've tested that green zone, everything that we've done below has been rendered into a spike, essentially. Where in this case, it has minimal time with the red-yellow line. The trend break was more significant than any other one before, but still crap. At the end of the day, only fulfilling the mere short-term targets and everything beyond a little bit more dangerous. Now we are coming up to the threshold that marks the tip of the triangle. And the tip of the triangle can change the characteristics, can change the volatility. I can see that we're already changing in our movement prior to meeting that time. There's one B point that's untested down below. That's the only B point. And immediately on that B point's test, there will be other B points that have formed, like this one here. Levels that are short term, seemingly insignificant, easy to test. Uh, orders that are placed on there, like sell orders, will likely profit. So I'm like, it's regardless of where it decides to reverse from. I know that orders placed there to take profit will get sold. So I'm like, well, what do you do with that information? I'm like, at the end of the day, in the event that we're presented with a short-term movement that offers us the ability to take profit at a level. I don't care if it's at a 188, 200. I don't care if it's at the specific level. I know that shares will be sold at that level, and as they are now. And I honestly think it'll be a thing of the future again. I don't think that this move is the last move that we'll see at that level. But like we will buy things up to this level again in the future. Would not surprise me. After all, this is the uh, edge of a red zone. If we use the green zone that we originally stood on top of in wave 2 of the first 5-wave move here, it was 1, 2, 3, 4, 5. We are now at 2. That's where we're at, right here. This level, it's something that wants to get seen a bunch of times. I think that's fine. God forbid you obstruct it from getting to that level. In the short term, it's something that it finds value in getting to. The downwards B point, the one that is below, is at the green zone, roughly at the edge of it, like this B point is at the edge of the red zone. The people of the 61 have been given trouble. Like think about this. This 61, I think we're going to see it again. You see that 61 right there? That 61, like look at how crappy it essentially has worked, right? It's going to pay the price for that. We will want to see that level again in the future. I am looking at that as a level it's been neglected, and I mark this level as a gold one. Just like I marked other levels too, eh? Like this level right here, we did see that again in the future. And it was like the pinnacle of the reversal because it was like it paid the price to come back to that level because it didn't respect it on the way through. Look at how it paid the price in the future. And this is that kind of level except really small and weird. Hold on a second. Now when I look at that, I can see that this is like an N and that this is kind of like an N as well. That's weird to me. I'll have to think about that. An N wave is a wave, though. By the way, it's not something that can't happen. The market can move like this. It's definitely something that it does do. It did it up here too, um, and does it up here too, right? Like that. You see it up here as well, and here as well. It's like when we make a 5-wave move, we do 2 of these every time. Like what's that? You know. So it's kind of interesting. Short term, that level, I don't know why they like it so much, but a lot of volume has been pieced out at that level. It's like there is liquidity there. I could see that they wanted to put some liquidity there, and they did. I'm like, that's fine. You know what I think about this level though? We've got a gap up top and a gap down below. These two levels could be used in relation to each other in the future. So breaking the support line, or sorry, breaking the red yellow line from this general area could involve us making a move back up to that gap at the high. And that's absolutely fine. There is nothing wrong with that whatsoever. Getting involved with that area up there, that's absolutely fine. And this level is designed to be support. And I wrote that in there because it's contrary to popular belief. And I can't, I mean, it's supposed to look like that. Effectively, kind of hidden in the middle right now like it was before, but something that I think we will step on ultimately. Of course, anybody that's exposed from the extreme is basically waiting for this move to come back around. If you're not, then you could be fighting for exposure to the red yellow line and aspirations of getting through the high, but it's not as safe as being in from the extreme, of course. And the extreme was had, but it was at a time where most people were not around. So it's like at the end of the day, the 4 consecutive lows at the bottom still hold as the very, very pinnacle of reversal of today. The red yellow line decides to break. But an environment like this is the nail in the coffin for a lot of people. I think that on the other side of this triangle, the triangle was designed, I think, to flush people out. And I think that's what it's done. And at the end of the day, what are we presented with here? We're presented with 1, 2, and then we've got 1, 2, and 3. Is it true that this is 2 highs into 3 lows? You know, a way for a head and shoulders to fail. Like if you look, if I type in 2 highs into 3 lows, you will find this pattern. And I've explained many different times how the 2 highs into 3 lows can literally cause it to break through the top. And just like we have today, holy crap, isn't that similar? Hold on a second. That movement that we have right there, where it literally made these 2 highs so close into those 3 lows. My point is that this low, and this low came next, following these 2 highs. And yeah, sure, this is supposed to be a little bit of a right shoulder first, and it fell right through it. Today we have a little bit of an exaggerated right shoulder. This is something where even on the bottom half of this, right? If you can look in there, where I would say this is how it would work. A head and shoulders into 3 consecutive lows. That is designed to fail the head and shoulders. You can see that the objective is to take this circle in the middle and to make it go like this on either side. Just like we had in the earlier examples of the day. Here, at 10:47 I was going over that and the necessity to make that the case, and when it does that, it had the same kind of environment that I took away. And basically that can look like the 2 highs form up here, and then you get the 3 lows in here, and then it continues. So curious about that. Of course, the people from the low just have to watch the show, and it even rhymes and everything, because everybody that doesn't has to try and fight the bottom. It's like, I guess that's the next thing that you want to find value in, because I see it going through the high by the end of it all, like I've said from the beginning of the day. But if you found exposure at the beginning of the day, you've had to do absolutely nothing but wait. So that's the truth of it. If you've traded against it, it's a bonus. But if you found value uh, in the break of the red yellow lines that there were, I've since removed them. But basically, let's take a look at the post. When I posted this movement right here, we can see that, like I just explained it on the short term, the red yellow line existed to break back beneath to get to this blue and white line. B points below have all been filled since. The only one that remains is the one at the bottom. And if I was to interpret that chart, if you go back and if you pull this out 2 years from now, and it's like completely in the past, and you ask me what's going to happen after this chart, well, I'll tell you it'll go back to that blue and white line. So the most impactful move from the very beginning of the day, from reversing at the 241 right down to a specified B point, to making that entire range double up to the top and then basically pull back. The entire area here has been very sideways, and anybody that's tried to get exposure from the middle area, it has been very, very tough on them. Like I said, it would be from the very, very uh, beginning here. At the end of the day, it's not not an extreme. The value is in being exposed to this top line. If you're in from below, it's so much easier than if you're in from here. Like, think about it. In the event that you capture exposure and you're looking to let it continue, like I explained in the morning, and you focus on hedging against it, that means that you can take profit roughly in this middle area. Doesn't matter if it's at that low, doesn't even matter if it's at that POC. But now you can just wait for it to continue, knowing that you have your stop at the extreme, knowing that you've taken off enough profit to be able to pay. You've been able to been paid to hold. Essentially, all the people that are just in from here and are experiencing this pullback are all like feeling like regret and everything, like dread. But anybody that's traded back towards it, they have extra money on top of while they're waiting for this to continue. And they're positioned from the extreme still, the safest point. And they've taken off enough profit to ensure that you're paid. And then that profit that you use to hedge against. And if you targeted the levels like this one and the blue dash line, the majority could be off at the blue dash line. We can see the market's inclination, like the big players stopped their selling where? Because this wasn't the work of the public, but the work of people that constructed this in knowing that it was supposed to make a move that was a right shoulder that was supposed to be lower than the left. And I will go over this in a video today as well, of today, where I explained it because I experienced this environment. Like I experienced exactly what this was like. And I knew that it was capable of doing this, and I knew that this was in the chamber, and that's why I literally expected the right shoulder to be lower. It's not the first time we went over this. But you know, are you comfortable enough to act on it is one thing, and is it like it's something that I've never even seen before. It doesn't matter that it worked well or not. Can you find your way into it? Yeah, it's risky to do so, but these are the moves the markets have presented so far. Whether or not they're new or not does not matter, but they are clear. And the ultimate goal of every move and every consolidation that there ever has been has had a clear designated endpoint, and doesn't mean that it's not 4 or 5 lows that are required to catch the trend break, and it doesn't mean that the entry cannot be absolutely brought to us like a fish pulling on the rod. It's like there's nothing I can do about this environment being in the middle and the fact that it chooses to spend the most amount of time here, and I can't do anything other than tell you to be ready for the moment that it does provide something that is attractive. And don't be surprised if it takes it away so quickly. Like 20% of the time is spent giving those amazing, really, really nice reversals, and the rest of it is meant to just try and get you to be part of this node where everyone else is, where it's been terrible for them all the entire time they've ever been part of this node. So that's the reality of it. Best prices to be in from are down here and up here. And how much time is it spent there when it spent all of the time doing this crap, and all of the time doing this crap, and all of the time treating people like crap down here? The people from the extremes are safe, so long as they have the ability to hold those positions. If you can handle a 78% retracement, then you can be in from the low still and not have to take another risk in the 11 lows that it presents here now. But instead, most people can't handle that pullback because they're not trading and making money off of this move too. Because they look at this as, oh, if I'm up 1,000 and it comes back, so I'm only up 200. They worry about that. You can count them out the next time that it gets up to this high. You can count them out. It's true. Most human beings will fold under the ability to see the same profit again in the future, let alone the target could be far higher. This is when the B point becomes the 61, and I still think that will happen. It's just a matter of time. But at the moment that that level gets met, this B point will become the 61, regardless of it hitting already, which is interesting. But like like it's funny because effectively the way that we're moving this right now, it is not on a third consecutive low, but it was just shy. Obviously, the VWAP is right there. Um, but what we have is the extreme of this original range, where originally we were in here, and it managed to stray out of the top just to come back to it. But now here we are inside of this extreme again, where we've only managed to make wicks and spikes out of the sides, where every single thing that we've ever done out of this line and this line has moved right back as swiftly as it's left it. So we can see at the moment that it decided to finish this time where the triangle ended. Effectively, it broke the trend only to retest it multiple times. Again, another difficulty for those that trade above the extreme. It is true. And I can't recall how many times last week it was the case that at the open there was a trade that held the entire day. There was a trade that would typically involve being exposed from the beginning. They could offer you exposure to the largest move of the day from the get-go. And it seems to be the case that, just like that day where I told you there was two 50% retracements, that was at the morning, beginning of the day, you know. Started out 8:30, effectively. This was the beginning. This was the morning. And 9 o'clock, the morning. And what am I supposed to do if it's, that's the case and it runs? And effectively, if you come in halfway through the move and you're closer to the end of the move than the beginning, um, to find interest at the extreme is the next best thing. So to have patience for that next extreme is to have patience for something that's better for you, essentially, something that will offer you more, something that will offer you the beginning of the next new trend, because the rest of the existing one isn't as good as it would be from the beginning of it. And I mean, to settle for less is to settle for less than those that started the trend, because somebody started the trend, and it was as good for them then, and we settle for less. Why? Because it could be as good for us on the next trend, but we decide to make it our actions within, the 80% area where most of the people trade, or in the slower areas where that are contained within the middle section of the ranges, like 61s and stuff. Like, I think they're good for targets, but like reversals and everything, I'm like, yeah, I just like, I don't like to start the first trade of the day off something that's not, going to give me a concrete um, reversal. And the 61 is only ever the lower middle range and upper middle range. And not to say it doesn't work, but there's always a better price than it. And why aren't you in from there? Because at every single time that it makes a 38, it means it's come back from somewhere that was the extreme. Why is this attractive? No. I'm like, sure, if you're already in, it's a great way to be able to manage it and stuff and understand you shouldn't drag your stop above it and everything. But to position from there is to settle for less than these people. And that's just not the business I'm in. And I have the patience to wait for when it is at an extreme. And I mean, I think that that's the name of the game. It's like, it's like you're out deer hunting. You've got like two rounds in your gun. You shoot them at the wrong thing, you're not eating. That's the way it goes. I'm like, it's the same way for me. I look at it like that, and I'm like, well, I better get something that can feed my family if I'm gonna shoot, right? Because squirrels ain't gonna do it. I know there's 20 of them right in front of me, but it doesn't mean that I have to settle for it. I might feed myself, but if I've got 10 kids, right, that's a problem. And there's deers on the land. You can choose to wait for them or not, right? It's like, and let's say sometimes that you see a deer and you say you're too far from it. You say you're not positioned in the right way. You can't get the right shot. You can't get the right angle. Do you just fire anyways? You'll never see that deer again. So, are you better off positioning yourself from the right spot next time, or just trying to run at it and throw the gun, shoot it through the air like Rambo or something? I don't know. But it's not going to work as smart as if you were to position yourself accordingly, and everything that you found was wrong about the first time that you were going to take that shot, rectify it before you take the next one. And that's the same way that I would go about this. Like, let's say, for instance, if you miss the high of day, does that mean that you're incapable of missing the low when it does decide to make one? No, 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 no. That previous experience, if it affects you in a negative emotional way, it is only holding you back from your next positive experience. And and that's the way that I look at it. It's very much the case. Now we have three consecutive lows that have come back to the first of the three. Small short-term movement. Of course, I'm not interested in catching the lows because I already have before the day. I'm not interested in really jumping into a range that I think is offering peanuts for range for like a lot of hard work for a little payment. because that's all it's been so far in this little area here. A lot of precision just for a little bit of reward. A lot of risk for a little reward. A lot of risk for a little bit of precision. This is the final line by the end of it all to break from the way that I see it. Very much, it becomes a line that is it's very far away, but it's not a line that I don't think we're, incapable of getting to. Of course, the end of the day is very much like at the current level that we're at. If we were to get to the end of the day at this point, it would be designed to break at the close, but that would be a hell of a consolidation. It'd be like this one. Hmm. If we did that consolidation here, how would it not look like a head and shoulders? Like if it made a a right shoulder to this left, I think it could fail miserably. It could be like the third and largest version of the first pattern that we saw. Head and shoulders fail up, and then head and shoulders fail up, and then head and shoulders fail up. Or it doesn't even have to go down at all. It can just go straight up. Like, could these be the two humps that have the pump after? Very interesting to think of. It makes this level kind of controversial, not gonna lie. If it's difficult in the short term, it wouldn't surprise me. Because the way that it's provided the difficulty for that move in the past has been to reverse very sharply. Each time that it was getting ready to make that right shoulder, like look here, it made the right shoulder up and it was sharp. And then on this one, it made the right shoulder and it was sharp, right? We're not doing that right now, which is kind of interesting. Every third low that we've had has had a fourth that's been the most effective. Like today it was like 1, 2, 3, right? It did play out, but it also made a fourth one. And just like the first one played out, the next three played out. Just like the last three played out, the next three played out as well. And if it had one more three, I'm sure that would play out. And it did. It's not like any of those highs have been uncleared now in this move. I guess the very first one. By design, it reminds me of a head and, or sorry, of a head and shoulders, yes, but one that can have a 11 low zone in there. Like let's take a look at the original schematic for 11 low zone. Again, another thing you won't find on Google, but something that I've created out of my experiences with the market. And this is it. And show me any difference here, like that we can see. This right here is kind of very similar to what we can see going on. We've got this initial falling wedge, and it's followed by the next component, which is a run up, right? And it has that next component. And then at that run up, it has a very like strong triangle, and it does not necessarily have to be a triangle, but it's a consolidation. And it consolidates up there, but then it finds a way to break the trend. Like that consolidation comes to an end and it breaks the trend. Everything comes crashing down to basically the point where this pattern started, right? Like you can see that this falling wedge was exactly where, it marks the low and it falls right back to it. Now, it chops and it's difficult for people. It hasn't provided this move yet, which typically gives people hope. It's like it's been tough and tough and tough and tough and tough. And when it pops up and it takes it all the way back, people quit. The market has experienced this. So it does this because it works. And we see this again and again. if you follow it through to the end, you understand what the entire schematic looks like by the end of it all. And that's how I've come to draw this. But this is something that can turn into a less of a pullback. That's what I was explaining there as well. But in some cases, when we're looking at there is some cases where we can see it go beneath the initial, and that's when we're in the middle, when we're in an area that's not the daily extremes. We can see that at the daily extremes, it respects those that have the extreme a lot more than those that are trying to trade in the middle. And in the middle on the daily, this can happen. So basically, like as I was saying in this here back in the beginning of 2023, it was apparent that we could get these kind of pullbacks that would make it a lot more difficult for people to stay exposed. Because what's funny about this is the target the entire time for these people. And it's always difficult for these people. And at the very extreme on the daily, the very, very best price on the daily extreme was made like this. And if you were there, you will understand that this is the way that it was. And the very best price that there was on the daily low, like I'm talking about this price right here. On that day, literally. No better price than that day, right? That's the day I'm talking about. And the way that it was when it was down there. So, very, very interesting. I made a video on that day too. But this is the untested B point that we are very, very close to right now. Effectively, the retest has slumped all the way down to a new low. Like I said before, 4 have been more common than 3 today. It has been, ironically, the 4th that has been the most controversial. Now, one thing about this 4th wave is regardless of if it's able to play out 50 points or not, it doesn't even break the trend. Like it's literally got, if it was to go vertical, like 93 points it would have to get. Where I would say that in the event that it went vertical like that, it would be closer to doubling the range and having the need to take back the majority of that move. So yeah, at the end of the day, making it a little bit slower could be a better option. Overlapping the lows more frequently, making retracements as we continue higher, making it only the wicks and spikes that remain at the lows, that could be something to look for. The 4th low has been the more controversial one that has managed to get us going into new trends a lot more than usual. But I would suspect on this large move that things would be a little bit different. Like we could put fibs on this major move here and the 161. Most controversial one. 150 is what we're at right now, and that's a little bit strange. It's not actually a fib level. It's just 1.5. That's all that is. It's not necessarily that important. The 161 is the next most important one, I would say, but still underdeveloped at that point in terms of what fibs we've been usually responding to. It's true that today the day started as an expanding wedge. Like we can see that, effectively the uh, the expanding wedge started at the very beginning of the day. And this was the last major expansion that we made on the high. Having to make that expansion even on the bottom might be a bit much to ask. The green zone leading to the red zone, this is the first time it's ever done that. And I just want to go over what the difficulty was in order to get that to be the case. It's true that since hitting the green zone, it's come back to it multiple times in an attempt to make it difficult for those exposed to the red zone. And it was with absolute precision that the red zone caused, even more difficulty, to no surprise. This is also right near that low of the node. What's interesting about that is that this is the first step in the sequence that we can see here. That step is on top of an untested B point, which is intriguing. The only thing that separates is to the green zone. The edge of the node literally ends at this point that we've responded to now. Very, very, very close. This trend has been readjusted or not readjusted, but retested enough to be readjusted. I think that right now the most important trend is the one that we're trying to break and obviously retest as well. And the last trend that it decided to break was not very, very important in terms of breaking like crap. It definitely broke like crap many times. Like it reminds me of our typical 11 low zone. It's like you can see from the first time that it ever decided to break the trend, it immediately came back for two really harsh retests. And you could say that that broke there again. And you could say that it tried to break there again. And then here as well. And I don't know if you could say another time down here as well. I mean, like many times as it tried to break the chart. Maybe not 11 or anything like that, but you can see many times it's made new lows. And for the people that are trying to capture exposure to that trend break, you can see it's undeniably difficult. And it's not like it's even developed at any reasonable level that we've, reversed at ordinarily today. This level has been the most effective reversal level today. This level has been second to it. These levels are what? Absolutely nothing. So it's kind of intriguing that on a bigger pattern, it struggles this much at these levels. And if you really look at it, it started to become difficult for the people that first tried the middle. And that's the case with this, where we can see that at the middle is where it really started to become difficult, where, everything that it gave, it decided to give back. And that's when this node, like, it was like it was traversing through this node in that way. I wouldn't be surprised to see the other side of the node again. That's why this circle exists. Doesn't mean it's not going to be easy or not going to be tough. At the end of the day, if we look at how the 11 low zone is meant to form naturally, it's on top of that quote unquote clear entry that comes back the majority of the way and creates this chop, where in the event that it chops like this, like down like that, I wouldn't be surprised for this move to just wipe out that chop and come right back to where it started in one really difficult to capture move. It's like pretty normal to see that kind of movement. I see it all the time being exposed from lower because at the end of the day, you get to, I call this the show. This is the show where People jump through hoops to fight for something that's not even as good as what you have. It's true. And like many other patterns, one of the best things about it is when it ends, because the bleeding out. It's something that generally, even when you're hedged, you don't really you're not really sweating buckets about it inching a little bit past the point that you've taken profit. But the people that have given up their long trade and they're there trying to buy it back again from a higher spot than they had it originally, it really becomes easy to give up doing that. And it becomes clear that if you look at the hedge fund strategies, the people with all of the money, their goal is to retain those funds. They don't give up the fund every day, at the end of the day, like the average human being does, you know. And then what they do when they have something good is they hedge against it, so that they're the ones taking profit down here while everyone else is stammering to try and, you know, go long. I mean, this is liquidity for them to be able to take profit on the hedge while they're holding from the bottom. And they're not in from here. They're in from way lower. But I'm just saying, don't be surprised if you see this work out very many times in the future. Because like the 11 low zone, you know, they're in from the daily low and they get everybody out by saying, hey, everybody, look at this really clear pattern. It's out of 188, it's out all these things. Go into it. This will be sure to get them out. And if this doesn't, it chops them out. And then a little bit of hope, it's and then they take that hope back. If they can survive all that, they can keep it. Most people can't. I think over 80% of the people fold in that environment because they don't have the patience to go from one side to the next, or it's the crushing defeat of having, that 1,000 turn into 100 and then have it sit there and then pop up to a 300 and then come back to that 0 point again, just really crushing all hopes of continuing with a B point, just taunting everyone up top, essentially untested. The people think that they're about to get it, it's finally going here, and then it's taken back. That is a psychological ploy. People from here are laughing because they haven't had to try any of this. They haven't had to go long in here because they're already long. And if you've seen that this has happened, not only once, um, but twice, on top of, uh, let's say if I draw it out real quick, and then we can start the next one. If the market decides to move up like this, it is very difficult for people to retain exposure. And I'll tell you another thing, that this movement could be referred to as something like that rising on ducks like we've seen before. Like if I take the entire area that it has been consolidating and remove this, what we're left with is an environment like that. And if we go back to the daily lows, daily chart, so every candlestick is 1 day, look at this, how much they pulled back. Look, 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 first day was all the way back here. Second day was pretty strong retracement, but nothing like that one. These people had to endure like a 61% retracement right off the bat. And then, if they managed to find any kind of long trade in there, it was all made wrong by this pullback, unless they held that spike. And then if they caught any of this, you know, all of that was pulled back. And if they caught that pullback, then they had to endure this pullback. And then if they caught that next high, then they had to endure this pullback. And that high pulled back to the whole thing. So that low was tested. So like all of these lows were getting pulled back to so frequently. And then we saw less and less and less. And then it could barely even pull back. Like this right here was the consolidation that didn't come back to this B point down here, or this B point down here. And it was rising on W's. Rising on W's as well. Untested ones. So it's kind of intriguing. to see that that's the environment that it created at the extreme. Now, it's anything but that extreme now, and yet we see these kinds of moments, or sorry, movements that reflect how it was at the daily extremes when they were developing positions at the very, very bottom and making sure that, all of the people that found that attractive movement were crushed by the weight of the pullback, and if not the pullback, then the sideways chop, and then if not the sideways chop, then the hope that it gives inside of the first pullback, the first trend break, the first lead on, and then it takes that back. And I'm like, well, having to experience that over 150 times before the market broke the final downtrend. I would say, like, if we look at the entire downtrend, like on this chart, 100 times, over 100, easily, we experienced that in this. And it would take the majority of each one of the days in there, but like through the entire time that we were seeing the need for it to pull back like that, it took 120 days in there. But since we met that level, it was literally 224 days. And if you count that one, it's 257. So almost a year, good part of it. So intriguing. And it's like now I'm under the impression that everything we do on the daily highs beyond this point is wicks and spikes that lead back to this point. But nobody can see that we're totally going to crush those levels. And yes, it's being made difficult for you, and nobody has the time to do this and so on. But the exposure to the high, yeah, it's hard to keep because it's valuable. And you'll see in the future that that's the case. If you hedged it, then it's a bonus. If you didn't, then you're still waiting without the hedge, regardless. Enough profit should be taken on the long trade in order to make sure that you're safe to continue holding, like I said at the beginning, so that you could just continue to hold with a stop at the extreme and you don't have to take part in this very, very, very like hostile nature. But I do want to just point out one thing. It is for 1, 2, 3, and 4 consecutive lows that we have got at the bottom. And to make a fifth one would involve us getting to that B point. The fourth low has been really important today because we've seen it here 1, 2, 3, and 4 at the major lows. We also seen it here 1, 2, 3, and 4 at the major highs. So at every time that we've broken any kind of trend that was otherwise controversial, we've made 4 major extremes like we have here just now. And we can see that it's come back to test this blue and yellow line, the one from the morning, the one that I find very, it is parallel to the blue and white line. And everything that we did on top of that blue and white line, we did on the bottom of the, on the bottom of the range. So coming back to test this from above could be on the table. We do have to watch out for that. Of course, we are traversing to the high of this node where I do believe I did have a circle drawn in there. Where is that? Yes, it is true that we swiftly swiped everybody out. And this could be the ploy on trying to get everybody's hope together. And hopium is a powerful thing for people because, like, it wears their energy. I've noticed. That's not a good thing as well because hopium's on the other side of having control. Having control is having understanding, having clarity, having a purpose for what you're doing. It's very much it can be the case where many people believe it's impossible to have that. Why is it in the circle then? Is it not true that it did move exactly as it should? I said it would be difficult. It was on 4 lows. People from the very, very first trade are still holding, but I'm not saying it's going to continue to be easy. And basically, what I posted in the chat is exactly what it looks like here. This circle representing the value of the break of that trend, because there's not really a B point or nothing in there that I was like, oh, it's interested in wiping everyone out. All of this difficulty, anybody that decided to lose money in that difficulty was, it's like it's taunting them with this move, because I know that like everybody that was able to fight through that, doesn't matter where you went long, you're able to take profit in that circle. Just like I said, at the very, very bottom somewhere, I was like, well, it's very, very likely that you're going to be able to take profit at this green line, wherever that green line was. I think it was on the other chart. But now we've hit the red zone of this other chart, undeniably interested in hitting the blue and yellow line from above. And that's one thing, we have swept the range. Who's to say that the people of this trend break don't get a move that comes all the way back to clear them out? That comes all the way back to clear the people out that broke the trend. How many times have we done that? And I mean, I don't really care if it does happen now, but if it affects you negatively because you allow it to stop you out and you haven't taken enough profit in the range, I mean, it's a situation where this is an area where you have to consider taking a profit, and whatever you hold left, if it decides to get stopped out, it shouldn't affect your account negatively, because whatever you decide to pay yourself should be significant here. That's the interesting part. From every single point that anybody has found difficult in this range, from this red zone, or what did I say? From the 50, right? Anybody that has been trading from the 50% retracement has been given relief now. 50% retracement. Every single one of the people that were in this environment were just given relief. Remember, I said it started at the 50, it just ended at the 50, because it let them, every single person got an opportunity to break even if you bought at the worst price in that consolidation. That's the beauty of it, you know. Now, of course, it's fallen through the yellow and blue line, but enough profit should have been taken for, and if the event that it tries to come all the way back down to the trend break, you're okay and you don't have to try and go again. Because if it wants to come here and chop the crap out of these people and play this whole game again, you don't have to play it. You don't have to play it. Not from here. So that's the beauty of it. And if you're in from the beginning, it's like, wow, what a show, right? All these people had to go through all of that just to get this. I mean, how many risks do they have to take? The third drive gets back to the first. If they don't take profit exactly on the first, well, it's over. And I'm like, wow, oh God. So particular, so precise, such a small time for all of this failure to come down to one moment that they take back anyways. And I'm like, oh, this is interesting that, like my schematic says, the the move we're experiencing is kind of coming back, which is exactly what it did do in the first place in this schematic. I mean, coming back to the move is exactly what we're doing right now. Like it's done this like a year ago. Like I remember from a year ago. This chart's from a year ago. So like the schematic is from a year ago. It's from 02/15/2023, which is pretty freaking close to a year ago. And things have not changed. Very slightly. It's so particular. I'm like, where is their line, like, for any other kind of understanding? In the event that, you expected it to go anywhere but that point and be difficult, it's very, very interesting that it still follows the schematic. Now, this is a schematic I invented. I didn't find it anywhere. It's through my experience that I've discovered this. And it's intriguing to see how it follows along. Yet, you can't spin it to be something else that exists either, which is great. It's not anything else. It's not a Wyckoff. It's not. It's not anything else. Not a pattern. It's not anything we could find on the internet. But it undeniably is following the rules of the schematic. Everything from placing the clear falling wedge at the bottom and the 4 lows against the 4 highs and the need to hit the B points. And I believe at that time there was even a move that was so clear that it got to a specific red and yellow line on the other chart that I then made blue and yellow, and then it broke that level to step on top of it and move beyond it with the aspirations of doubling the entire range, and it doubled that entire range for everybody that was associated with that low, and that trading back to that level and in on that 261. That 261 still holds. What 261? Well, the 261 from this high right here. Right down at that bottom right there, that 261. And effectively, no price that it has presented is as good as that 261. Yet it has offered hope and taken it back. B points still remain above, not as many as my schematic would show, but it's like it came back up to hit this B point. I'm like, what is this B point? This B point isn't even on the other side of a gap. Typically, that's where we like to go. And I mean, it really puts a lot of emphasis on this level. Like, I understand the need to get back to that level. I'm going to go ahead and remove some of these other levels, or just turn them down. No, that one stays up actually. That's the one. That's, hold on a second. Yeah, that's also the long-term POC that ends up being a support as well. So that's an interesting one. Very, very intrigued by that one. The current level that we're at right now is the 61 of the entire move. So it's like we've basically pulled back not 50, but 61 here. You know, it made it to the 78, but where we currently are is at a 61. Hmm. It was remarkable how much it actually decided to stay inside of that range, between that supporting blue line and that resisting uh, uh, level, which is exactly the same as what we had on the bottom down here. And for it to have run into it like that, it could only, question. I'm like, well, it's very strange that this distance tripled, because it started here and it doubled to get here and it tripled at the point that it started. Now, you know how precise it has been sitting on top of the point that it doubled? Strange. Strange to me. So precise. The point that it doubled being used as a support so clearly like that. Yeah, we haven't seen that steepness in a long time, and for it to be used twice. But the only reason why I think this works is because people don't understand it, don't see it. People don't obstruct it. People do not understand the way that this is a ploy on getting their ability, their liquidity. So imagine this. Imagine hedge funds like, oh, there's nobody trading. It's absolute crap. And then it's like, all right, let's make a pattern. Show everybody exactly how they move again. And then they move the market really hard. Everybody gets involved. Everybody's chasing. Everybody's like, oh my goodness, I got to be part of this. Look at that volatility. And the short traders are like, damn, that's great. And then by the point that it comes down, all of these long traders are likely to have been made into sellers along the way. And it means that from whatever opportunity they've been, essentially provided, they're likely to buy in and to sell out throughout the experience. And that means that where there was no buyers, people have found an interest and ultimately ended up selling to somebody that maybe intends for this to be the environment, somebody that knows that you're going to give this up when you have it, somebody that knows that this pop is the last hope for a lot of people, somebody that knows that this is an environment that they orchestrate for the benefit of themselves and the disadvantage of the public. I see it that way 100%. It is definitely for the benefit of the few and for the disadvantage of the most, because the most can't handle this chop. You can count on it. The most can't handle this pullback. You can count on it. You can find them being attracted to a simple Google pattern that works. And the next time that they try it, look at all the difficulty it gives. Oh my goodness. Very, very interesting. But those that have retained exposure to the break of the red yellow line have been in no better position than now. Those that have retained through the exposure, retained through the pullback, and kept their exposure at all costs to the break of the red yellow line and aspirations of turning the long term POC into a support. There's no better way to be exposed, in my opinion. And of course, like the original trade of the day may have been a hedge trade or a short trade. And, basically off of this B point here, we decided to come back from the third high to come all the way back down to that level. And if you found a hedge trade for that move, effectively, if your interests were to be exposed to the doubling of this range and to the breaks of the other trends charts, which are this trend, breaks of the other charts trends, which were these ones down here, with the aspirations of getting specifically back up to these targets and specifically getting back up to the green zone. That was the original movement. This movement here, undeniably a lot more difficult, took more time, and the red yellow line still remains. There's a good chance that we try and go for the blue and white one too, which is tough. In the event that we get to it in a very strong way, it's likely to respond negatively. But getting to it in a very strong way is something that's going to probably entice a lot more people to get involved with the situation, or those that are left. At least after the 11 low zone kind of environment, it's very few that can retain exposure. At least that's the way it should be, because that's the way we made the lows. And does it mean that those that were in control of the lows are in control of this situation too, because they demand it to be this way? This way? Because there was no better way to see the daily lows than this. Because you know what's funny is no matter what strategy you had, this was the daily low. And unless you could go through this, you didn't end up keeping the daily low. So your strategy had to entail you being able to endure these pullbacks in order to end up with the best price, or else you don't know what it's like to keep the best price. That's the irony of it. And I can even see it here. Like, this untested B point that was here from a long time ago. And, well, it was more like it was tested. But basically, it was very, very difficult the entire time. And then pops up to hit it and comes back down. Basically to the point at which it broke the trend. is where it came back to. Anybody that was beneath the trend break and buying at the low of the node is still safe. And undeniably, buying at the low of the node is safer to future pullbacks than being in from the middle of the node. Like all these people are not in from the extreme. They're not in from as safe as a spot because if the market pulls back, it better not be to the middle of the node. These people at least have the extreme of the node. These people do not. And it's intriguing that that's the case. The VWAP did play a vital role in decreasing the volatility, but then it began yet again from that point. Um, the next time that we get to that purple line, it'll be easier to break it. Most people aren't thinking about that yet, though. And I think that all of this move was a ploy on trying to get long traders to sell their positions to somebody that's willing to keep them. And like I said, all of the upwards movements that we get from beyond this daily high are likely to be wicks and spikes anyways, but it doesn't mean that we're not going to do them. So we want to see wicks and spikes beyond that high, but everything is ultimately likely to come back to that point, is the way that I see it. So it will offer a lot of hope to the upside, just merely taking it back countless times. Kind of like what it did along this level here, where it just kept spiking on the short term and then spiking and then spiking and everything just kept coming back to this point right here. Sort of like what it did up here. Spiking and spiking and spiking. How many times did it hit that baseline? Before finally just being like, all right, it's done. It got close enough to what trend? To this trend. Because it had all of this time in here to get there. So it spent it like spiking and spiking and spiking along that level. But no level was given, no level stayed up there for as long as, it was taken back as quickly as it was given. And that's my point. That's fine. And I see a very similar situation becoming the case on the daily here. Are we interested in it coming back to the blue and yellow line again? Of course, it's been on equilibrium since the beginning of the consolidation. You could say that at the beginning of the test of that line, it was the beginning of this. The entire need to make everything a wick and spike out of the bottom of that green zone as quickly as it's made it, it's been bought back up as well. Now what's interesting about that is it's not very even. We have these moves on the other side. It has never made those moves on the other side of the range. Yet you could say that every move that's associated with this level since it's began has, started from the range and ended at the range. Even the ones that have happened on the top. And I believe we're closer to the end of that than the beginning. I've noticed that today we've even been interested in returning back to the upwards trend breaks. So when we break a trend to the upside, like break it all the way up here, we swung all the way back up to hit that level. And on the last major trend break, like that purple one, I think that that level could become a pretty attractive one for the break of the red yellow line. And perhaps it could generate this exact same kind of movement when it does break it to get there. Could be intriguing. Because I know that if we broke it from this time, getting back to this spot would be of an interest. If it wants to go sooner, I will not complain. But if it goes sooner, it comes with penalties, to be honest. The penalties will be that it will have to retest the red yellow line. And there's likely to be some sort of drawback to it, which is okay. So long as you're not in the business of dragging your stop into a profit, or at least the whole position, it won't cost you your entire exposure. Now, the initial movement that allows you to secure the enough profit to be able to retain whatever uh, exposure you have for the continuation, it's very similar. In this movement here that led to this pullback, like I'll actually draw it on the other chart. This movement right here with this pullback that led to the big continuation in a very similar fashion to this movement right here at the beginning that had a small pullback and led to a large continuation. It's true that the pullback down here had a chop and led to a high, where technically we haven't been able to experience that yet. What we've done in the bigger picture is not this far along yet, which is interesting. What we've done is just managed to come back to this high and start that chop. We haven't managed to do this portion. Everything else exists though, so far. The volatility at the beginning of this consolidation is lower than what it is now. I think we're going to get more volatility. The ATR should increase, still hanging in there at 8, which is pretty high. Momentum still very centralized around the middle of the range. This level becomes weaker now. I see it like this. I'm like, alright, still there. It's still something we will respond to in the future, but it is a matter of getting through it now and not just getting to it. Could this be the two humps that lead to a pump? I'm very curious about that as well. We do undeniably have two very, very strong pullbacks into each other, and if they lead to a trend break that's actually quite strong, it has been known in the past to turn this level into a B point right here. So I'm curious about that. After all, it did come from an M. Could it be interested in making a W to end? Because like that M itself, it kind of came from a W. Wasn't necessarily the prettiest W, but it played out like one, and certainly it's acceptable. Um, Very curious about this. Short-term trend break could be applied. It's like, well, if we are interested in what time it could take, well, this presents a time limit that it has in order to increase volatility again on the break of the downtrend. I can't help but notice that these people were in choppy situations and it broke the trend and came back. And then these people again are like a very similar situation. Is it not true that basically they were under the same experience where their crappy choppy movement came back to where it started? It effectively did this maneuver again. So having completed it, is it interested in making more chop? This is the area that it has made the most chop since we've been in this node. No more chop than this spot. And that's fine. I mean, it doesn't have to essentially stay here for as long as it has before. I think we're closer to the end than the beginning. Of course, the downtrend is getting closer. Like, do you understand that when we were here, the downtrend was this far away, right? Like, you see how far away that is, right? You know, and here it's like, wait, it's not that far. It's definitely not that far. You can see that we've made this much progress, you know, throughout like a pretty long amount of time. Sure, it's not like it's not easy, but it is that it's effectively that's what the time is worth. This amount of time is worth that amount of decline to get closer to the trend. I mean, we don't have to move that much anymore because we've spent this much time. You know, in theory, it doesn't cost as much to break the trend now that we're closer to it. Like, think about it. It's true that less money is associated from here, or sorry, less money is associated from here to here to break that trend than it would be from here to here. That's the whole point. And if you go sideways and it becomes easier to do the thing that it ultimately is going to end up doing, uh, one, you can build momentum, so it makes it easier to break the trend. And I mean, how is the momentum building? Well, we can take a look here. Since we started this trend, you know, it was like this, and you could say that it all started right there, right? You know, it's like whoops, that's the point that it all started at that point. And you can see the momentum at that point. It definitely has that critical reversal, right? It's like, wow, okay, at that point that this consolidation started, this momentum is showing us that throughout the entire time, regardless of the lows that it's made, the momentum did not respect those lows, didn't make them. It didn't make that low in the middle. So throughout the entire time that it was doing 3 consecutive lows, the entire momentum was diverging upwards. And therefore, it put a lot of stress on the trend and broke to the target. Now, it's not exactly the same way here. I would say that the divergence that's most into consideration is shorter term. Like, it's like a very short term divergence here, where it's across these lows. And it is bullish, but not on the 1 minute. It's even lower. And I'm like, again, here we are at the 61 area, where the 61 was this gold dash line before. We came back to that 61 so many times before actually leaving. I'm like, what is it to put a little bit of fuzz beneath it and then continue? Could we do that? Because it's like what we're doing now at this 61. And this 61 might have some wicks and spikes beneath it. Of course, we've got the low of the node there. Reaching to it on those wicks and spikes is pretty normal. And I'm like, well, I can do that all at once, but does it really buy it much time with the break of the trend? No, not really. The break of that trend is likely to happen, and it's probably going to lead to a movement that gets us closer to this red yellow line. And I'm like, all right, yeah, true. There is a line there, and it does have to break before we get to the other red yellow line. And I mean, could it could it increase the volatility when we break it? I mean, there's a lot of things that could happen on the break of that next line, and it is quite far away. So let's observe this yellow one and see exactly what the deal with this 61 is going to be. If it's actually going to matter or not, it'll be a first in a while. But it's not like everything wasn't bought back up to the 61 though. Like, this was the 61, like I said. And it's not like everything wasn't bought right back up to it. So many times. It's like they're not letting it through it almost. Every move that we've seen has come back to it. And when it had to break the trend to get back to it, do you notice how much of an impact it was? Like, notice that this is the 61 here. And we got back to it fine underneath the downtrend break. And when that trend actually broke, though, you can see that it had a little bit more power in getting back to the 61. Like, it was like, yeah, the mission since this consolidation's low was to accumulate back to the 61. And then when it got to the point where it had to break the trend to get back to the 61, it became a little bit more powerful. and it actually went through the 61 to the point that it could step on it. Now, of course, we're beneath it again, but for how long becomes the question. Now, there is a typical time that it does like to actually spend away from it. Ironically, it's very similar, you know, every time. There's one time that's not, and that's the middle time. So it's true that now we will have 2 times on either side of this middle. I'm just putting that out there because it is a fact. And at the end of the day, that's it's strange. It could be viewed like an inverse head and shoulders almost with a double left and a double right. It's true that on either side of the head and shoulders, we do have a move that is exactly spaced the same amount of time away. Suspiciously particular. The work of the public, highly unlikely. And why is it the case that these spikes, if I was to take the points of those spikes, they're not quite on the other side, but I do notice that we do have spikes on the other side. And that is the case. Like, is this how do they make this level more clear of an equilibrium? You know, because like everything since we've been here has come back to this level. It's either started or ended at it. You know, both. Every time, actually. So I'm like, well, okay. That level is put to the test significantly when we break the downtrends. Because the first downtrend break was here. I mean, that's done now, sure. But that first downtrend break really put that level to the test. You know, it was really the only thing that could ever get us this far above that level. So I take note of that. You know, it is true. It's the only thing that's really managed to get us that far above that level. Being on the underside of that red line was no good. Couldn't make it that far away from the 61. But without this holding us down anymore, look at how much farther it can go. What do you think it's going to look like without these lines holding us down? Because there will be no more lines to hold us down beyond that point, you know. So don't be surprised if it goes up, right? That's the idea. And I mean, it could be quite cruel to everybody that tries to get a position before it gets even close to those lines. Because think about how much time it spent getting to that level. Like, it nearly took this amount of time, and then again, almost that amount of time to really break it. Isn't that strange? Like this amount of time in this area that it spent doing that, it literally put that amount of time again in that area before it allowed anybody to really get any kind of action. It was like that was a time threshold. And here we have this time. That that raises a question. Who, you know, it's like, who thinks we're going to be right here for this time? You know, could it be the end of this level to be there for that time? I mean, I tell you one thing, I wouldn't be opposed to it. I'll tell you that. And I'm like, well, sure. Could this time mean something too? There's a chance, but it can't mean as much as this time. Because, you know, this trend can break and there's still another trend after it, but this trend can break and there's not. So I'm like, well, what stands a better chance at being able to break through this area? You know, if we can relinquish every downtrend along the whole way so that there's no more downtrends, do you think that this area will be easier to get through? Having no downtrends holding us down, this will be the only thing holding us down. And clearly that thing's kind of a problem. You know, it used to be a range, and we used to put volume in here. And it's not even an old one. Oh, here, you know what? I'm going to leave those on there. Just because I'm curious. I'm like, have those times in the past had anything to do with each other? Usually, that's it's intriguing that it is the high of the consolidation. The two times that it had at the low were very, very similar as well. Curious about that. Definitely giving the people of that last trend break a problem, that's for sure. 100% it's got a lot of space to do it, so everything that we can see inside of this range is subject to being wicks and spikes back to the red zone. It has created a B point in here, which is untested. Very close to that original B point. Again, the green zone is the only thing standing in its way. But being wicks and spikes, a lot of the movements that we see below that red zone are subject to being as quick back to them as they were away from them. And it's interesting to me to see that if it manages to make any kind of movements in these ranges, but if it doesn't do anything but leave them, it'll get us closer to the red-yellow line. And if these ranges are capable of keeping us in this range, we're even spiking to what could look like a 188, 200. Where we came from was this purple line. And if you see I click the VWAP, click the VWAP, this line is highlighted and this line is highlighted. They're the lines that are otherwise quote unquote appropriate for it to move away from the range. Now it is in conjunction with the 188, 200. Doesn't necessarily have to hit, but in the event that it does, I'm certain it would be interested in hitting the green zone from below. Just like the red zone was interested in hitting from above, the green zone can have that same kind of impact. Obviously, it's not at an extreme. The previous 261 still holds the extreme. But what's funny about an area like this is that in the event that you capture a short-term profit off of a long trade in this area, how much do you have to take off to be able to keep your stop at the extreme as those that caught the best price of the day? Like in a hypothetical situation, if you took, let's say in a hypothetical situation, if you took 5 and you took 4 of them off, what is it to keep the last one at the bottom? Well, you know that it would have to go down, essentially 4 times the amount of your profit. So that would mean maybe you wouldn't even have to take off 4, you could take off 3 and still get away with it. Because you could afford to keep your stop here, and if it was hit, your account would be reflected profitably. If you took 4 off, your account would be reflected by this much profit still. So it becomes that much easier to hold the more profit that you take off. And basically, just on one contract, it could amount to taking off 91 points in profit and retaining a position that's otherwise means that you don't have to fight the 11 low zones, and you understand the amount of risk associated with taking new trades is, so you want to be able to keep your stop at an extreme, so you could do that by taking off enough profit off of a move that targets a level like this. And that's like the other option to having gotten in at the extreme. But if you're going to fight for it anyways, it's like, well, you want to fight for something that's worth, keeping and that has good long-term exposure. And going long from the B point on the daily or from the all-time high is a little bit rough, like I said. So it's like no, hence the difficulty, right? So, but by the end of it all, I see clearly that the red-yellow lines will be the last to break. And the first step in breaking them is to get to them. Change the hour in a minute. Green zone led back to the red zone. Of course, the B point still remains untested. And the only thing keeping it from getting there is the green zone itself. And of course, we can see that its design was to bring it back to the red zone. And of course, the red zone prevented it from getting to the B point above. So is it the case that the range is more important than the pattern? Because, it's like the people with only the pattern might not recognize why it's working the way that it is. But this is clear that there is a range here. It's from before. It's not an old one. It's not too old either. Like it only started here. This is not an old time. Like very intriguing how this was the appropriate move away from the range and it was followed by that movement, and that in the future we saw that same movement again on the other side of the range, exactly the same distance away. And everything that it did when it broke away from the range came exactly right back to it. Like all of the exciting part was taken away. Curious about that time, I tell you. That's one time that really could be the end of the consolidation, and if not that time, then this one. This one rivals a break that gets us up to this VWAP and tries to get us into that range. And I know that we can't get to that red zone. Well, it's not that we can't. We've got this much time to get to that red zone, like right there. If it manages to really get there before, it may be viewed as too soon. It could have a negative response. Like in the event that we lunge to this red zone before that time, there's a good chance that it involves coming back down to the green zone. In fact, it's very, very difficult for me to say that it won't test these levels from above as it passes them. But the idea that the 11 low zone gives hope and takes it back to the point that it began, all staying roughly within the same kind of consolidation, it's not uncommon for the ranges to take sideways movement, take upwards movement, downwards movement, and then produce it out of the other side to the point that we can actually double that move to a level like this one. Where basically this is what we're looking at. Short term, green zone and red zone have had the opportunity to work together again, preventing the B points from getting hit. We've got very minimal node left on the bottom of this area. And of course, in order to get to the red zone ever again, it will involve this trend having to break in order to get us there. It is somewhat on a sideways up and down sort of movement, like the one I just explained, where the largest part of the sequence is a downwards move. And that's what everyone gets to look at right there at the best point of reversal. Ignition candle. Beware of like pretty heavy retests. That's okay though. It's very normal. So it's imperative that profit is taken on any kind of exposure that's been created. I think that days like today, it's very, very, very good to be able to start it as a short-term position. Target short-term levels. Have the ability to take off enough at those short-term levels to leave long-term exposure. You understand the long-term exposure is hard to fight for in environments like this if they continuously overlap new lows. But if you understand that being in for the break of the red yellow line is the best way to be exposed, regardless of the current difficulty, does it matter? I mean, at the end of the day, you've either been trying to this point or you've been waiting to this point. You know, we're getting closer to the red yellow lines. The trend breaks mean more. They undeniably get us closer to the red yellow line more than we ever have before. And hey, this is the red zone. If anybody's ever taken a trade in the green zone and it gets to the red zone, you don't make it's safe by that point. And if it comes all the way back to the other side of the range, you can't experience that being the case. You must make sure that you're safe enough to continue holding in the event that it gets to the other side of the range. It's like that's the perfect ignition candle, obstructed by none other than the red zone and the POC. You know, the B points have really been getting a lot of flack right now. They're not working at all. Like the 161 tried to bring us back to the B point, didn't get there all the way. The other B point down below has been neglected absolutely. It's not like it doesn't exist, and it's not like, people don't understand that it's there, but we can see everybody that was associated with that trend break. Effectively, it came right back to the beginning. Only those that valued being in for the trend break are safe at this point. And of course, anybody that didn't take any off in the red zone is now in an uncomfortable position. You don't have to have taken the trade to learn from that experience. Because the market's tough on them. And I'm like, it is true, the market did break like that, and just like that market broke that trend, it will break another trend that will get us farther through that range, that will get us closer to the red yellow line. And one point, it will get us all the way through the entire range, and it will be a trend just like that one, except it won't treat people like this. And it's funny that sometimes the trend breaks treat people like this. It come back all the way to the beginning. Anything that was exciting, anything that was worthwhile, all came back to the beginning. And it means that only those that valued the red zone could really profit off of that trend break. And that's why I said it was very imperative to ensure that you have some off at that point, because in the event that you value the green zone, yes, you've been paid to trade it just back to that red zone, and that's it. That's the irony about it. And it didn't pay anything else, but to have that, but to find value in the trend breaking to the red zone, because it came from the green zone. Of course, this is the B point down below. Finally, we just made it to that B point. And it could be on that B point test that it tries to reverse yet again, breaking the trend and getting back into that range. Now the 188 200 still is untested down below, means that it's not as good as if it was there, but this is a green zone and it could have a relationship with the red zone, something I wouldn't obstruct it from having. In the event that it wants to make things even on both sides of the ranges, a little bit of spikage out of the bottom of the green zone is acceptable, but it can be very quick, you know, and associated with that purple line below, that would be the line that kind of caused the whole dump at the high. We can see that there was a line up there. It was associated with the VWAP, and basically things changed when we ran into it, and everything was wicks and spikes beyond it. And when we broke a trend to get away from it, it really had a heavy impact. So much so that it didn't only bring it down to the VWAP, but it brought it past it nearly all the way to the other side of the range. So with the B point down below now being cleared, it's true that we have one above here. There's tiny ones that have hit down here now, of course, but there is even ones that are small up here that haven't been hit. Very neglected. And the trend break can be viewed as something that's allowed us to create another trend. This other trend still does exist, so it's not completely worth removing, especially given the fact that we have to break it to get to the next one. It still can have retest value. And I believe that this will be the baseline to any wicks and spikes that we see at the bottom. There's very good chance that any movement that we do below this point comes back to this point. And of course, it doesn't affect the people that are still holding from the beginning. And it's like, given the chance that it does come back for everybody below this purple line, or anybody that's keeping their stop at the extreme, it will be that much closer to the red yellow line that your effort will be that much significantly less in trying to capture the exposure again. And on the other side, it's like all of these other times have been avoided. So it's a good thing. Because all of those other times have amounted to, you better have taken profit or it's turned into a loss. That's the interesting part about it. But having held from the low is still the way to go. We're at the 188 right now, about to be at that purple extreme line where I do think that everything ends up back at that green zone. And the 200 was hit almost that purple line. The yellow trends might obstruct a little bit, but ultimately getting back to that range, making things equal, is the short-term prerogative. It's insinuating that there's going to be a little bit of liquidity in the green zone. And that's the funny part about it, is it's unseen. People don't see the need for it. I'm like, well, here's that liquidity in the green zone. Market's providing. Any position that anybody's taken off the 200 can be made absolutely profitable by now. No questions about it. It'd have to make an entirely new extreme again if it wants to make it into a loss. So at the end of the day, understanding that that liquidity is meant for a short-term profit taking in a in a very small scale, those that value being exposed to the red yellow line, may be interested in fighting for those lows. But you can see sometimes when it's a very, very particular short-term target, they'll put people to the test right after they've hit it. Now it's like roughly a 61% retracement, a little bit past it, just to come back and get that 188. The green zone will be seen again. But I'll be right back. All right, so it looks like we made it to the 227, past that purple line there, and we're approaching the first trend break. The 200 and 188 basically had a spike that was as big as the one that they had off of it, below it, turning it into an S wave, which basically looks like this. And that's where we're at with it. Doesn't change the fact that it's going to end up at the green zone. And the last lines to break will be the red yellows. When it tests these lines from above and turns this into the POC, that'll be the end of it all. The trend breaks should be allowed retests. A lot of the retests have turned into fake breaks, and acknowledging the 188 200 for more levels to come. It could be the case that after we're even at the green zone, we could be interested in testing the 188 again from above. So dragging stops above this level are really not on the table. If you do have any kind of exposure from the purple line or below, the trend break is something that can lead us back to that green zone. And like I said, everything does end up back at that green zone. It's wicks and spikes that can be, as quickly as we left the green zone, we'll be back at it essentially. A little bit of a bigger move, a little bit more profit, a little bit more equality. The movement that we had on the top of the range being very similar to the move that we could be having below it. Another thing that's intriguing about it is the fact that it made a M, and a W could form after hitting the green zone as well. It's an appropriate distance because if you look at the distance that it made on the M, we could see that that distance could be made in getting back to the green zone. If we are to make that distance again like this, it could be very much like the M into W that people are very used to, in a strange way, using the same kind of confinement area to make it down here. Now, as time goes on, from this point on, it will be easier. There will be less traps. Most people don't get to make it to this time, though. Mark my words, though. It's all about, like, if we understand that there is liquidity in the green zone, and that what we have bought below it will be sold at a profit on it, what do we do with that? That's the way I see it. At the end of the day, when it meets that level, everything can be put to the test, as it's shown with every other short-term target today. You know what's funny is every single short-term target that's ever proven difficult will be bought out by the end of it all. And it's just been made difficult for the people of the American public during the day. It's ironic that the move started at the pinnacle of reversal at 3 o'clock in the morning, and then here again at yeah, no, that was during market hours. Here again at 9:52. The 227 is a weird one that they haven't really used much of today from my experience. The 241 was the first fib of the day to reverse. The 261 has been a very common one today. The 188's been pretty selective. Because in order for the other ones to work, the 188 has to have failed. Like, how do you get to these levels if you don't break these ones? Of course, you have to break these ones in order to use these ones. And if these have been working quite well, what does it say about this one? Well, it's not effectively if you think about how much profit the 261 has to offer in returning back to its B point, it's like, how much risk has to be taken and versus how much reward. Like in the event that it goes past the 300, it's certainly unacceptable. It's definitely not responding to that 261. But then, that risk can be placed inside of the reward how many times? 3? And that's being pretty selective with a 300% leeway room. 14 points. Jeez. But still, even just looking at it like that. Here we are. Everybody that has been targeting the green zone, doesn't matter where you bought from, you're able to sell right now for a profit if you were targeting the green zone at any given point. Since I mentioned the green zone should be a target, it is profitable as of now. Doesn't matter how much it went down or whatnot. This is the target if you held out for it. And if you are able to sell some here, then so be it. If not, then that's fine. At the end of the day, it's not a necessity to be in on this range, I wouldn't say, but it's a range that will lead to a trend that will be quite significant. And all of what you see in every single level that I've depicted should be used as a specific level in this process. We shall see if it is that way, because I've got very particular levels out there. Do you know what it looks like if my stuff isn't drawn on here? It looks like that. Where are those levels? What's going to happen? Can't tell you. But this chart, just like a sentence, like if you open a book, I'm like, you tell me like read, be like, I'll tell you exactly what it says. Just like this. I mean, like if you take the pages out of the book, though, how am I supposed to read it? What am I supposed to read? There's no language on the chart until you've placed some obvious factual information on there. Like it's a fact that this trend line exists. It's a fact that it also did a minute ago and it broke like crap. The people had to persist with that trend break and find value in it, regardless of how tough it was for them in the past. Everything was made very significantly around this consolidation, a spike on either side. Very, very, very clear, like we would usually see it. It reminds me of a thing that I draw earlier in the day, and it might look a little bit choppy on this chart, but I seriously think that for the amount of times that I've pulled this chart up, it should really be considered. And the thing that this chart is meant to tell you is that there was a consolidation in the middle. There was a move that came exactly from the bottom of that green line all the way to the top of that green arrow right there. It's just like that. And on the end of this consolidation, on the moment that it broke through the high of that consolidation, it made that move again. So you want to know what's funny? This consolidation's double, right? But you want to know what they do if they have a spike before? Well, they might decide that the spike is worth doing instead of doubling. Because is it not true that if we had a spike here, and if I did it out of the other side, it would go farther than just doubling? But that's why I say it doubles at the minimum. And God forbid the spike was smaller. That's an interesting one actually. Because the spike will effectively what it could do. Here's a trick question, or not a trick question, but a trick pattern basically. If the spike was smaller, like is it not true that this spike having it out of the side, it wouldn't mean doubling the range, would it? It would be about half. So what do you do if that's the spike? Well, the funny thing is maybe that spike on the bottom comes out of the top, and that's not the way it's meant to double. Maybe the consolidation doubles this way. And these moves are just preliminary to it doubling. So it's kind of interesting when you think about it like that, because a spike out of the bottom and the top of a consolidation can lead to a trend far bigger than the consolidation. And in this case, the spikes are way bigger than the inside of this consolidation, which is kind of strange to be honest. Usually the consolidation is equal to the size of the spikes. Like, yeah, other ranges I'm looking at, like I'm like, oh, what about this spike happening over there? And I'm like, okay, what about this spike happening under here? Is it not true that they had spikes on either side of those consolidations? I'm like, we can either accept them or neglect them, but it's like it was trying, obstructed by the public perhaps. Now things are getting easier. A little bit less people can be here because it's literally inhumane to be here by this point of the day. It takes a lot of understanding, because if you're meant to just look at a chart like this all day long, and like you don't know what it's going to do, you don't know what it's going to mean. Like let's say like you're looking at this chart all day. Imagine that, right? Imagine that. You don't know what it means, you don't know what it does. How are you supposed to make money on that? Nobody knows. I don't know. I don't know what you're supposed to do with that. It's a complete waste of time. I accidentally clicked on this earlier and I thought, what the hell is this? But at the end of the day, I was like, at the end of the day, it's not the Nasdaq index. It's nothing that I can trade. But at the end of the day, the even if you could trade it, and you could buy and sell on that chart, it's not a normal chart. And like I said, it's all about finding that clarity. And right now, I can see that right now everything is presented around this being the middle zone. We've spiked out of the top, and before that spike, we had a lesser of a spike. And it's like we had two spikes on both sides. Is it true that the spikes can often have springs? And is this what it is to have a spring to this spike? At the end of the day, is it not true that making this trend break involved a retest? We've taken this here and spiked out of the bottom this much and chosen to spike that much out of the top. And after having done that, we've come back to the medium point and secured that as an equilibrium. It's so interesting for me to think of that this is the line that separates these two triangles. And if those two triangles are to be separated, could they be individualized? And in the event that they're individualized, um, could we see them again in the future? Like, what's up with that? Why do we see that before? Has it been used in the past? Are these levels that are these moves that we've already seen before? It's like suspiciously particular to the other moves in the last consolidation. It's like they stole them from the last consolidation and decided that they should be appropriate for this one. But I do think that the people that are in control of these last two trend breaks believe that they're seizing control of the environment and that people are now effectively out of their way. So we shall see. At least that's the communication I've been given from the movements in the candlesticks. My impression is that the least amount of people of the day obstruct them from being able to get what's done properly finished. Like here, we also have a low, with a lower low and a higher low. It's true that that does exist. As much as I'm not spinning it to be anything that it's not. It's true that we do have a consolidation that's with a spike in the bottom and a lower right shoulder. Impact, the red zone. Let's see. After all, everything we're doing right now is turning the green zone into a level that nothing has managed to make it through but wicks and spikes. And do we understand that every single thing has been bought up as quickly as it was sold off past that green level? And it has provided liquidity for those that found value in obtaining a position below it. And just remember that in the future, the trend break, if it happens above the green zone, it will expect you to keep your stops below that trend break at all given times, because if it comes back to stop you out in the future, look at how close it made it to the low. Is it true that people with a stop at the extreme are still in? They did not have to catch this 227. And it's like all of those lows just to amount it to getting through this high, and this was the best trade. Never in here, ironically.
227, eh?
Yeah, it is. It is. But what's interesting about this level is, like I said before, is enough profit can be taken off now to keep your stop at the extreme. Because I mean, like, yeah, what are you gonna? You keep it here, sure. And it's like, well, do you have to have it go a little bit farther, or do you have to take off an extra contract just to make sure that your stop can be as safe as the people that caught the very low? Because it comes an interesting situation. Any time that people decide to go long up here and try to get this action, they're not going to be able to put their stops at the extreme. They just won't. I mean, it'll be a loss, unless they take like 10 in the middle and try to take off like 9 of them up here, and maybe it might be safe down there. But I'm like, geez, that's tough. That's an emotional roller coaster I don't even want to think about. But hey, we've never been closer to the break of this particular red-yellow line. And there's only two on there. One of them going down could change everything. We can see that even approaching it is changing the... it's changing. We can see the fact that it's not grinding with small little candles that nearly have a 95% retracement over every single candle that there is. And every single time that it does any kind of effective trend break, it amounts to a new low and, just crushing new lows. I mean, like, for the people that didn't find value in the beginning and to hold the entire way through, I mean, like, you can count on the fact most people didn't hedge it, and you can count on the fact that most people throughout this entire pullback will be eliminated. So that means that if they found value in this position right here, and if they bought shares, like let's say 1,000 people bought shares right here, if you can convince them to sell you their shares at any given time, then that means where there was no liquidity, you have made them provide it. And it doesn't matter if they sold up here, it doesn't matter if they sold down here or whatnot, they're eliminated and those shares became up for sale, whereas they weren't in the first place. And if you can do something that makes most of the people give up their shares, and if you learn that this pattern is something that actually has an impact on the majority of the people in a certain way, well, don't be surprised if that pattern is just like imposed onto the market more to like make people into liquidity. Because I think about it, the people think that it's all other people they're trading against. The institutions exist, and they understand other institutions exist as well, but also the people do. And everybody else that's out there, you can count on the fact they have less information than the average institution, the less experience, less time on the market, less money, less everything. And then they uh, they have to consider the fact that the institutions are sorry, difficult to knock out, and it's a lot easier to take out these batches of people that essentially find value in the market on the short term, long term, and so on and so forth, and they become liquidity, I think, for the larger players by the end of it. Because my other argument would be, what individual not only is strategizing about how they can make a profit, but how they can ensure other individuals' failure? Why would they ever make patterns fail? If they've been trading from like the 80s and they're like, oh yeah, falling wedge works out really well, why would they ever decide that it should fail? If it's been working for them for so long, they just wake up one day and say, hey, the strategy's got to change. We got to do everything differently. We're going to do everything differently just because we wake up differently. And what's been working for us for years and decades should change on a dime. Out with the old and in with the new. You think most people are like that? Or do you think when they find a strategy, they cling on to it and try and repeat it over and over again to squeeze as much money out of it as they can before it changes and throws it all in their face? That's typically what happens, I would find, with you know even personal experience when I was first new. It's like I literally, you find one thing, you think that that's going to be the thing that you can use until you find out what environment it doesn't work in. Like, you know, there's days where every single moment of the day is spent coming back to the view app. There's days where there's no view app in sight because it just makes new highs or just makes new lows. Those days are different types of days, and one strategy is effective on one day and the other strategy is effective on the other. Because what works on a day where you're supposed to hold from the beginning and sell at the end, because it only moves in one direction, doesn't matter if it's up or down. There's one effective way for that, and it's not to have sold. But in the event that, we get a day that moves around a lot like this, if you haven't sold, your initial position is subject to getting attacked. And trading it back and forth on the short term, understanding that there's a red zone and green zone and everything likes to end up back in the middle, is a really good way to understand it. And that's an effective way to look at that. But when we're moving like this, or when we're moving like this, it's very much not an effective way. So, you know what's interesting about it is, let's say for instance the market's going to do one of those all day up days. You know, if you look, if you go long from the beginning of the day, you can capture the majority of that movement for whatever reason. Let's just say you are long. Now, let's say you have the mindset of, when a barrier comes up, you're not trying to sell your entire long position, but rather hedge. Does it matter if this range is small here or large here? When you take a hedge position, you're going for it to make money against your long-term core. So you're not selling out at the high of a short-term range. Because if you've hedged it up here, you get to make money off of that decline. But if you're in the business of just selling, how do you know if it's going to be a large long-term profit day or if it's just going to be a small short-term profit day? At the end of the day, those that hedge are undeniably positioned so much better than those that just go long and try and find a place to sell before the market takes it all back. At the end of the day, this experience right here where the lows are so close to where we've pulled back to, yet every single pullback has amounted into a new low since we've made that low. But that low itself was the most valuable in catching because of the fact that no low has managed to surpass it ever since. A mighty retracement back to that level though. And I mean, this right here, one thing that it shows is that this level it can take an eternity. It's like absolute, and it was kind of cruel about it too. It went like that. But except the falling wedge is a little bit lower. So it's like, okay, in this schematic, sure, the falling wedge is here. And it came all the way back down, but not quite, or else it would have crossed this green dash line, which it's not a green dash line by any means, but it was just, I was just marking it. After all, this schematic is quite appropriate for the environment because it has everything from the upwards move back down to the consolidation from the falling wedge that started it. So at what point was it out of line with what it's supposed to be doing? Because at no point did it cross the lowest point of the entire move. It had the big move that came into the consolidation. It was tough for everyone in the consolidation, remarkably, and that's what it was designed to do. The 11 low zone, it's supposed to have 11 lows. It didn't even do that. We call it tough. I'm like, well, it made 1, 2, 3, 4, maybe 5. And I'm like, well, it can feel like 11. If I was just to say glance at this chart and tell me how many times it broke the trend before getting to where we are right now, you could think, oh geez, like tons of times, dozen times, like starting from the first time here, broken, 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 all these breaking. And then it just to just fall right back down and start the process again where it's just breaking, breaking, breaking. All of them suck and they don't matter until the final one. But it's like, do you have what it takes to be in for the final one is the question, right? I'm like, geez, it's tough. Easy to hold from the bottom, but I said that from the get-go. And I mean, if you're in from previous days, like, it's quite the show. Like I said, it would be a show though, where everyone fights for something above where you're in from. That's exactly what I said it would be. This is the situation. And we get to choose our battles in this industry, fortunately. And you know, today has been a day where every move we've ever had has been contained within another one. Where at some which way, shape, or form, since the very, very beginning, we've been contained within other moves. Oh, I guess the high a little bit was out the top. I thought it was in there, but yeah, for the very small amount of time it wasn't at the extremes. The majority, I would say 90% of the day has been spent inside of other moves. And you can see that little bit that it did manage to get past the high, they managed to overlap that like really sharply too. So it's like ultimately what I know is today's a battle for the right trade. The right trade is to be one that gets you through this high. If you can handle being in from any of these lows, that's fine. If you're in from before, any other time I said to go long, so much easier. But it's okay if you have to fight the battle to get in from where you have to start from. That's fine. And at the end of the day, let's say for instance, it's like the beginning, where you're fighting for a long trade, and then it goes up, 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 and you find a hedge trade. That hedge trade could amount to being so much bigger. The hedge trade's going to amount to being so much bigger. And it's not necessarily going to be from there, but it could be a week from here. But if this trade holds for a week, it will be significantly easier to find a juicy hedge trade from a nice level like I was going over in the morning. That level is a nice hedge point for this. Close call for sure, but it didn't make a new extreme in this. And under no circumstances did I say to keep the stop anywhere but the extreme if you caught it. And it's a matter of even when you were at the low here, it's like, well, can you take off enough profit from getting back to the green zone to afford a stop at the same spot that everyone else has? Because by the time we get to a point like this, like I said earlier, it's going to be tough. What are you going to do? Buy 10 contracts here and sell 9 of them up there to be able to put one contract down below? I'm like, oh my God, that's killing me thinking about that. It's like, please no. you know? Oh yeah, crap. It's like the people don't even know it, but they're gonna go and trade at that 61, right? And they're gonna add volume right to that long-term uh, POC right there. And it's like, yeah, of course we're meeting the equilibrium. These levels have to be considered. These levels have to be considered. The crappy time, it wasn't right, but it got back to that level. I don't know if I was talking, but might have been muted. What I said is it doesn't matter that it didn't hit it at that time. If you were targeting that level, you're paid. Not to say that I would sell here though. I was saying that what we could do is potentially make an inverse head and shoulders. Yes, we could be in the business of making a right shoulder. And you want to know what's interesting about that? Is it's worthy of hedging. If most cases might be a little bit extreme, but I do think that most of the right shoulders have ended up as freaking 3 drives today. So I'm like, all right. At the end of the day, depending on one situation, I am curious about that. Given the fact that if you're hedged from the high, you may not be interested in any kind of movement like that. But I do think that this. But yeah, basically this is the POC. Could it grind here to meet the break of the trend? After all, I mean, it's not too far off at the point at which I was designating the appropriate time to break the trend. After all, it could still be that time. Do I really care? No. At the end of the day, it doesn't matter what time it breaks the trend as long as the trend breaks, period. That's the number one thing. Unless you're trading options or something, it shouldn't really matter what time the trend breaks. At the end of the day, it's the fact of the matter is, can the trend have an impact? One great enough to make a move as big as the one that brought us here, perhaps. Who's to say that can't happen? Big N wave. The 61's under a lot of pressure. I think that could be the value of the break of this trend very easily. Could it be from that little circle? Well, honestly, I'm not going to complain if it breaks sooner, but if it comes back for a retest and hits that circle, I wouldn't be surprised. After all, it's exerted a lot of energy to get to this point and denied a retest of the previous trend, so it's running on legs that it hasn't had today. I'll tell you that right now, 100%. Things have changed, and it's for those that have the discipline, patience, determination, persistence to be able to maintain with it. And it doesn't matter if you were either catching the lows or keeping them. It was hard. So I'm like, what the fuck? At the end of the day, it's very much a tough time. And I'm like, for what? To be exposed to this trend where you could have held last week and you have all the exposure in the world, having not to have make a single trade today, you avoided every single part of today's difficulty. And it's true. And I mean, what did you work hard for today? Think about tomorrow. Because is there a chance that all of the difficulty that there has been today could hold into allowing you to not have to take part into tomorrow's difficulty because you took part into today's? At the end of the day, it's true that if you hold the extreme from today, there's a chance it holds into tomorrow. And the value is, sure, by the time it gets up to that long-term POC and everything, it's definitely made safe, made more than profitable, and it set into a point where it's safe to hold overnight, I would say, at minimal size and so on. Because it is at the high. If you're trading from a point like today, it's not like I'm incredibly inclined on maintaining long-term exposure from the daily highs. It's insane. But if I see that there are going to be further wicks and spikes beyond the all-time highs, having exposure to them could be of interest. If you're in nothing, and of course spikes come back to the baseline. And just like every spike that we've seen today, I think that the current all-time high will be like the baseline. So we'll get a lot of crap through the top and everyone will be like, it's moving, it's going. All these companies are releasing really great news at the high. Buy in, buy in, buy in. Look at all this money everyone's making. And it's going to go down. After they've done that. But watch them do that first, because they do that every time. And everybody just eats it up. They're like, look at what this guy said on CNBC. Look what this guy said. And I'm like, well, it doesn't matter what they say. Everybody can be moving, saying one thing, and they can all be wrong. In the name of it, doing the one thing, meeting the one target that it's supposed to be doing. And from what I can see, the communication is from the market, we will make wicks and spikes beyond the high. And that means getting to the high in order to do that. So being a part of that journey to get back to the all-time high, back to 17,000, you'll see in the video that I'm talking about right now, before that big move even happened, You know, the video, I'll have it out today, but this video that I have, it's about this move. And the entire day was right here. And it was the last day of the year. And that was the day where I referred to a meltdown. And I said it maybe about 17 times that day. Like a lot. About the meltdown. Whereas the level, when do I say meltdown? I've never said meltdown, ever. You know, it's always, that's the first time. I wanted it to stand out. And that's why I used the word. That's why I've said that. I said it's going to have a meltdown. It didn't seem like it. The whole day was grinding sideways. There was small short-term trades that there were on top of that move, but that ended up being an 800-point move to the downside after I said it would be a meltdown. And you'll see that I even go over in the video of it being oh hey yeah, this is the last day of the year, and everything like that. Meltdown will cross that screen so many times. You'll see. And it's like it goes in one ear and out the other as we're going through it, but like if you look back at what the history says, what the recordings say, it's been very clear that that move was necessary. And you want to know what I said about it? Is that it would go right back up after it was done the meltdown. Right back to 17,000. You'll even see out of my mouth I said 17,000 will be where we go. And the meltdown hadn't even happened yet. You want to know what's funny is on that day on the video, I talk about moves and I show moves that were on the 29th. And I'm like, look, meltdown, it's melting down. Look at how much it moved down. It moved down 200 points that day. 200 points that day. All right? Just remember that when you're watching the video, because that's literally what happened after all of that. And I made this 200-point day seem like it was a meltdown. That was nothing. It was a cherry on top. And I did say that it was going to keep going through the ground of that day. So you will find that that was the best possible way. Like, I wouldn't change a single thing that I've had to say about the market. Not like I can't remember. Like, so yes, it's tough. Like all of the things that I've said today, they've been very, very tough to retain exposure to the targets. But what target hasn't been hit? You know? And this is not a target down here. That's just marking the low. But what target hasn't been hit? It's managed to get all of the targets. How many targets have there been? Over 30? It's like, it's true. It is true. And I'm like, well, I'm not saying it's easy, but it's true that if you manage to get any shares to any time that I ever had a green dash line on that chart, it's been taken off. And you've been able to take profit at it. And I can't even tell you how many times that's been today. And obviously, these levels that we're seeing right now, we don't get there on easy reversals. Not always is it going to be a clear entry. But if you know that that's going to be the destination of where you're supposed to find an entry for an 11 low zone, which is a raw, difficult area where they're trying to make it tough, where you can't find exposure easy because everything leads to a new low for hours. Yet the last thing that there is to be exposed to is the red yellow line, because all of that difficulty just gets wiped out with one swift buyout where the institutions just come and buy all of that difficulty. They're like, oh, you thought it was tough? Look at all this profit right now if you had have held. I know you took a loss on it, but it doesn't matter because they bought everyone out. And if you took a loss on it, because you've sold your position, they've ended up with it. And I don't let them have that. It's tough sometimes, but at the end of the day, it's easier to hold from the bottom, and going through this experience can make you more interested in holding the bottoms when you keep them. It's true. How many of these times do you have to go through fighting the 11 low zone before you say, right, you know what, that's enough. I'm going to hold this bottom and I'm going to keep my stop at the extreme, and we're going to watch it. We're going to literally watch it come so close to a dime, like just like right on like that. And I'm like, geez. It's like, God forbid, if you don't have a hedge, it's that much more crazy. But if you've hedged it down, it's like, well, it doesn't really matter if you get knocked out at the bottom because you've got the top. And I mean, on Wall Street, they position themselves accordingly. They fight for it. And they consider it to be winning when they have that situation, when they have that core and it's protected by a hedge. They know that the core is safe to continue holding. They know the hedge is profiting off of every moment that the core is not continuing. If they choose to secure some of that profit while they're waiting, that's a bonus on top of holding the core. Simply put, but I wouldn't be surprised if it all started in that first 11 low zone that they had to fight for in order to develop that core position so that they can get the opportunity to hedge it. It all starts with that first initial battle, and it all starts with winning it. And once you've won it, then you only get the opportunity to hedge. That's why I say it's a luxury. You don't get to decide if you're going to hedge. First, you have to have a profitable trade in order to be able to hedge it. At the end of the day, that's just a fact. It wouldn't be a hedge if it's anything else, right? So, of course, everything has amounted to it coming back to the view app. Question becomes, when can we develop enough energy to be able to break through the VWAP and get to the red zone? Does this green zone require such a consolidation to be able to get above it, to test it from above as it passes them? It's so interesting for me to see. So briefly, I went into the chat and I saw, such a clear example of basically any stops above the blue and white line are subject to getting stopped out if you took a hedge and let it continue. And that was at that point where, the interest of coming back to that blue and white line was on the table, and it did a lot more than that blue and white line. I wonder if there's going to be something similar across the highs of this one. Like if we are interested in getting above and beyond this line, it could be stepped on very similarly to many of the other blue lines that we've seen in the past. Seems like it's coasting towards the time at which we have circled there for the trend break. If it wants to be that amount of time, it's absolutely fine. I found that that was a mathematically appropriate time for it to take. Doesn't necessarily mean much more if it breaks now or then, but if I was to, be waiting here like, oh man, I wonder when it's gonna break. It takes energy to do that, And I'm like, well, to have a point where it's like, hey, it's supposed to break from this point, that you're not sitting there waiting like, oh my goodness, when's it gonna break? You're just like wondering, and it's like me, no, I'm not wondering at all. I'm like, here's the appropriate time. If it wants to take this time, then that's exactly what it should be doing. So I'm like, fine. If it wants to be sooner, that's a bonus. I'm like, that's the way I look at it. But until it takes that time, I don't even start to question it. But well before it even made this dump, this long-term POC, we knew it was designed to be a support, regardless of how much they convince people to become sellers beneath it or whatnot. I think that everybody that has sold beneath that level will be bought out by people with tons of money. They will buy all of the positions that exist beneath that level in the name of owning everything. Watch, you'll see. It doesn't mean this is a good spot to buy it. It's in the middle, but at the end of the day, if you're in it, then you know. That's the 61, in other words. The long-term POC is pretty much right at that 61. So basically, we're here at the green zone. Nothing too crazy going on there, but that's absolutely fine. And basically, we're approaching the VWAP. The 61 is still the major interest to me, and that's up there where the last writing is up there. Eh? So I mean, like, yeah, sure, we're allowed to step on top of these levels. Like, what does the writing say here? It says, test these levels from above as it passes them. You know, test these levels from above as it passes them. So as it passes them, we do not allow it, or we do not drag our stops above them because it has to test them from above. So it's like, oh, it's like, all right, I don't care if it does that or if it does this, you know, or like, I don't care how it wants to do it. But when it steps on top of it, then it has stepped on top of it. And then it's finished stepping on top of it. I mean, it's as simple as that, really. I mean, but until it stepped on top of it, it hasn't, and it can. That's the interesting part. Typically, it does. So I'm not saying it has to, but I'm like, well, if we prevent it from stepping on top of it, we could lose our positions. Why would we do that? We would end up being stopped out relatively in the middle, roughly stammering around trying to find another position back to get exposure from a centralized area that doesn't allow you to keep your stop at the extreme. It's like once you capture that objective where you've taken off enough profit to keep your stop at the extreme, that chart goes on the side. You open the hedge chart now. You've done your job. You've been paid. You've caught the low. You have exposure, and you've been paid. And if you sell it or if you drag your stop, if you do anything, you lose. Essentially, that's the way I look at it. And the name of the game is to focus on hedging it because that's now deemed a long-term trade. You put it on the back burner. It's literally there. Focus on that. That's fine. Now it's literally about finding a hedge trade for every single moment that provides literally any kind of obstruction for it to be able to continue moving. One of the best ones that I think, actually the best one that I think is actually up here, this gold bar that I've written hedge on. That's a nice one. And it's a nice one to come back to this high after. But most people won't be able to survive the day to get to that point. It's true. It's just too tough, and there's simply too many reasons that could be interpreted as tough, like for it taking a long time, people see that stuff. Having too many lows, that's tough. Having too much of a pullback, that's tough. What other thing could they add to this series of movements that could make people quit? And you want to know what happens when they quit? They become liquidity for the best players that have to be there for the end of the day because they're managing assets, the majority of the assets that exist on this earth, as a matter of fact. So they have to be there by the end of the day, and they don't have the luxury of quitting early like many of the individuals. So it's interesting. Then, therefore, they learn more. Therefore, they understand more. Therefore, they retain their money more. Therefore, they make more money. Therefore, they are effectively in a better position. And I don't give that on them. I don't give them any more time. They don't have more time than me because I spend all the time I can doing it. And and essentially that leads me to have the most understanding that I have had ever, in being able to find similarities with things. It's likely that I've been in the environment before that's doing something similar, especially with the NASDAQ index, especially because I've started essentially focusing on that one as like a primary index. And that hasn't been the majority of my trading. Like, majority of my trading has been finding stocks to trade, different stocks every day, majority of them similar. Like, I like to trade Facebook, Amazon, Netflix, Google, and so on like that. Not so much Google and Amazon because they were shitty for the majority of my day trading. Like, they were not very big heavy day trading movers. Like, they would print nasty candlesticks and stuff like that. But things like Apple and QQQ would be so much clearer and crisper, and things like Amazon would shine at their moments, but then they would be so expensive and effectively it's just not the environment, a consistent environment I was looking for. Now it's different because they're a cheaper price and they move a lot better than they used to. But the Nasdaq is definitely something that holds its consistency every single day and does not change in the way that it prints a candlestick. Like, it won't suddenly start moving like the SPY can, where effectively it can lose its candlestick composure. I won't have to go too far back, just into pre-market before it becomes illegible because of its inability to print a candlestick because of the lack of volatility, or just the raw amount of minutes that people have to wait for any kind of movement. It's just disgusting. And I'm like, oh no, that's just terrible. That range in there. This is like in here. This is rough. People only trade this because they're told to trade this. As far as I'm seeing, conformity. That's the only reason why I see people trade this because they don't know any better. It's like that's what I see when I see that. And it's like maybe the Nasdaq scares them because it actually has movement. But if you were good at capturing movement, don't you think you'd want to see more of it, or do you think you'd want to see less movement to capture less of it? No, that doesn't make any sense. Come on. Like, it's crazy to me. But when I hear that volatility scares people, it just tells me that they don't know what they're doing. It's true though. As bold as that is, I'm like, oh shit, that's pretty harsh. But yeah, it is true. If people are like, "Oh, a lot of volatility lately," I'm like, "Well, what do you mean?" I'm like, "Isn't that how you make money? What are you trying to do? Get it to go sideways? Do you sell options or something?" Because at the end of the day, that can be good for some people going sideways, selling if you sell options, but that's a professional business right there of people that know what they're doing. Anybody that gets involved and doesn't know what they're doing is up for a lot of money. But I tell you one thing, this range has been very good at using the green zone and red zone. We can see that all of what was accumulated on the green zone led to the red zone and back to the green zone with absolute precision. Not the first time we've seen this today. And I find it so interesting that so many times today we've found the need to use older ranges and no time for new ones. It's like how many times have previous ranges have been the pinnacle of reversal, and you know, there was nothing there yet from today. It's kind of interesting. No, in terms of ranges at least. And the best reversals have been when fibs align with previous ranges. Like when I've seen 261s inside of green zones and we're falling to it, they have all had very, very strong impacts. Like some of the more profound reversals of the day have been on that kind of movement. Like even down here, like what's this move down here? Oh, it was a 241, very close to a green zone. I mean, is it really? Like, because what I see is it responding to the green zone and not really caring about the fibs whatsoever. 227, it's like, where's that come from? Who's in on the 227? I mean, like, it's just not a normal one. But I mean, like, what is normal is the green zone, and that is there. So I'm like, okay, maybe it's that. It makes more sense. But a lot of today I could see is there's a lot of difficulty around today, and I find that on the other side of that difficulty is very simple logic and very simple patterns, very simple movement, and very simple requirement to understand the need for it to come back to the middle. And like today has been about that. Today's been about maintaining the relationship with that middle. Everything we've ever done has always either started or ended, or both, uh, back at this middle point. And I think that we're closer to ending that, like I said. This kind of movement. I said it would get easier from a specific point earlier in the day, and from that point it was easier. No, it is the case. Many people will not be able to survive until that time, but good job, honestly, to everybody that has. It's not necessarily the easiest day to be a part of. Not gonna lie, I think it's kind of tedious, if unless you like 95% pullbacks on the best trade of the day, or unless you like trying to catch 11 lows to get exposure to something that's really not even that valuable. I mean, every single trade from the previous week has amounted to being more than what it's currently given. Yeah, sure, we are likely to go and attack the highs again at 17,000, but it's a hell of a battle. And I mean, payment will be literally you'll be paid for this crap that you've had to go through, and it's true. Literally, everybody that has to try and catch these lows, you don't get to decide that it's after 2 p.m. that this level decides to become a support. Because we stopped moving down at this level, at this green zone, right? And it was just absolute chaos for anybody that tried to get exposure to the red yellow line. But remember, ladies and gentlemen, this is the last red yellow line. So it's like there's no more. When I said earlier, I was like, the other ones were holding us back. If we don't have them holding us back anymore, don't be surprised if we could move a little more freely. You know what I mean? And it's like now, this is what the first trend break looks like. Sure, we hit the red zone again. But can we do more? Let's see. I'm curious. That previous blue and yellow line is asking for trouble. I find it incredibly likely that we're likely to see that level, and I'm like, well, how do we get to that level without breaking the red zone? So the red zone is the high of this entire node, and it's asking to break to get to that ridiculous line right there. It's true, and we shall see what it brings. Like I'm like, well, you know how tough it's been to get above this red zone that we're at right now? Do you think that when we get above it, we test it from above? Oh yeah, I would say so, 100%, because at the end of the day, it's been a nightmare to get above this level. This level has been the high since 12 p.m. It's almost the close, So it's to this point, everything we've ever done to this level has been bought back up to this level. Anybody that tried to sell anything past this level has been bought back up till here. And that's the case. I know it's been difficult from everyone to buy from this point, but it's like they want you to try and give up so they end up with your position. That's the way I see it. They want you to try somewhere in these 11 lows and give up because it's not the one time that it reverses, not the one time that it says it's going to be easier. But if you know that that's the time and it's like, all right, all right, all right. If it's going to be a little easier, maybe you let one run this time. And hopefully you did. Because at the end of the day, it's worth more than any other time that you've let one run this whole time, you know? And that's a fact. I mean, like, if you did go for that low and you let one run, it's worth more now than any other low that you've caught since we've been here, since we've been in this range. And that's saying something. I mean, at the end of the day, it's offered more against the trend than it ever has. Without breaking the red zone, though. And the red zone is ironically the elephant in the room. Because breaking that red zone could turn it into a B point, and that could be some serious movement right there. And like I said, God forbid anybody prevents it from going from the red zone and green zone, right? Like it's like it likes using this range like it was made today. And I'm like, well, the people that saw this range constructed from before understand exactly why it's doing what it's doing, because you can see that it's respecting the same confinement area that it chose to respect when it was here a week ago, maybe, like 2 weeks ago, because it wasn't any of this crap in here. It acknowledged it and everything, but nothing like this. Like, this is a concentrated consolidation between two specific levels where not a thing gets past either one of them. And obviously it will end, but until it does, well, no stops are to be dragged in between the red zone and green zone, because God forbid, right? Like, look at what happens. Doesn't matter if you're long or short. You put your stop in the middle of that range. You even put your stop in the green zone or the red zone. How do you survive? How doesn't it take your position from you? I'm like, well, it's like it's a danger, right? Hold on. But yeah, that's basically a danger that we see very frequently. And I mean, days like today are very, very serious because I know that it presents 11 low zones and they're all full of traps and everything like that. Everybody wants to trade, everybody's ready to trade, and this is what it does have to offer. It offers a very, very small short-term pinnacle where I'm like, well, it's going to be easier from this point on. It wasn't like that the rest of the day though. And from that point, we've had a little bit of a clearer path than usual. That low right there is definitely hit, so that's finished. And just remember, like many times at the POC, it's oftentimes the worst place to have been in from, and this is that place right now. I'm like, well, at the end of the day, they've made it so even on both sides that no matter if you were long or short, it's likely that being positioned from this environment or from this specific spot has treated people more negatively than not. And I'm like, well, now that we're here again, there's a lot less chance people will actually try and trade here. I actually think a lot of them are kind of like hurt about this zone and they want to see it leave. I think everybody has the patience for this to leave. And who wants it to stay in here anymore? I mean, I don't think many people do. And it's like, well, like I say about some rages, I'm like, if you were like showing your friend, oh, amazing trade or whatever, it's like, do you think they're going to be showing that they made it from here at any time of the day? It's like it's rough. It's never at any time of the day something to talk good about, is it? And that's the rough part about this range. Is no matter how you spin it, it's very difficult to say that this is a good spot to have been in from or to be in from. So I'm kind of intrigued by that. And it can spend 80% of the time at an area just like this, where on that pinnacle of reversal, it's on those that had the patience to wait through this area that will be able to see the extremes. And there's like a 60% chance that we don't see the extreme again. Imbalance becomes an interesting factor. Where do we want to do that from? Is this an appropriate area for the imbalance? Becomes the next educated question of the day, I would say. Because really, I'm like, well, that's the next event. I'm like, well, we're gonna make sure that everything is in control for the imbalance, because they'll be damned if they work so hard all day to retain control of something and then all of the people bunch together at the imbalance and create some huge move against all this progress. No, 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 no. Unacceptable. I'm sure it's happened in the past, and now I think it's something to be prepared for rather than to have hit us out of the blue. Do you remember how I said last week that there could be a day where we fight and fight and fight and fight, and it gives you something like 30 points at the end of the day, and it expects you to hold it? Because tomorrow we could be through the roof, and it might be most people the most the most common inclination is, if it hasn't given them a bunch of profit to justify holding it, which makes no sense, then they won't hold it. And because it's been difficult, they become weaker. So this kind of movement makes it, in my opinion, a lot easier to get the public to fold their position, because they don't see much value in holding it. A lot of people, they don't like, they love to see it go up and then they like to buy in. They love to see it go down and then they love to sell. So this kind of movement's not going to be very enticing for the average person, ironically, even though they will tell you buy low, sell high, and do the exact opposite. The only thing that separates them is human nature. It is human nature to do that. To learn buy low, sell high, and then to act the exact opposite. And my grandfather said they were doing that when he was my age. So it's not something that's new. And that's what makes me think it's within human nature for people to do that. Because you can find people that have never communicated with each other and fall through the same pitfalls. And it's like, well, if so many people are going through the same problems, who's on the other side of them if it's not the other if it's not people? If it's inhumane to really be against these consolidations, I mean, I can count on the fact that it's inhumane for most people to remain long through this entire environment. Either you've been fighting and persisting all day because you know it's going to go to all-time high. A lot of people are iffy on that because they're just presented with constant shitty economical news, and that makes people think that they shouldn't be in. That makes people think that because it's high, they can find a short position. And for a lot of the day, that has been working for them. And they will be able to hold the whole day seeing that. Just know this is 1, 2, 3, 4, and 5. And what we've done right now is another 1, 2. And in the event that all of this is bought back up, it will be those that had the most difficult time that had the most value on the other side of their difficulty. And the people that had it easy to hold the entire day, just, dragging your stop down the stairs and stuff like that. Because it's so easy, right? Watch it get bought back up like it's nothing. Doesn't have to be right now, but in general. And that's what matters. It's like, well, if you expected to do something else, that would be a little bit tough. But at the end of the day, I know that all of this difficulty amounts for it to do the thing that everybody's trying to get it to do, yet can't. Because at the end of the day, this level is the level that it stopped going down. And at that point, everything was being bought back up to this level, no matter how big of a move it made off of it. You can either see it like that or you can't, but it's true. You know, at the end of the day, everything was bought back up to this level as quickly as it was sold off. So particularly. And to the final move being one of the larger kind, I can't help but notice that earlier in the day, the entire day was spent expanding to the upside, right? You see that? And it was roughly on a flat bottom. It was flatter on the bottom for the most part. And the one thing about it is that it wasn't expanding on the downside for the longest time. It made one move to the downside. Can we see that? Through the entire time, it was expanding up and up. And it made one move to the downside. Everything else was relatively flat across the bottom. So, it's funny to me to see that everything was expanding across the bottom and flat in the red zone across the top. Everything is in the red zone, is it not? And the red zone's a horizontal level. Yeah, sure, it's a little bit, it's got a low and a high, but everything is contained within it, roughly. And that's across a flat top. So it's suspicious for me to see that in the morning we moved up like this with a relatively flat bottom, and then in the end of the day we moved down like this with a relatively flat top. It was, after all, the kind of movement that we actually made when we were at this level, and the same kind of node that we made. It's exactly the same node, actually. Yeah. And this is the reverse, where it roughly had like that flat bottom. Sure, it's spiked out of the bottom. Leaves the question of, is that spike going to produce out of the top? Because having consolidated for this much time, this much distance, which is the same distance, having an angle with a flat part, having an angle with a flat part, an angle down here, the flat part here, share the same node. Do they have the same spike? I actually think they will, ironically. The red zone marks the flat part of this triangle. It's incredible how much it disappears when I take the triangle off. Yet I don't think it's very important to keep that last triangle on there, just to have an understanding that it is the case that we have a flat part and an angle, and it's all sharing the same node, and effectively the entire day has amounted to being like a large Head and Shoulders almost. I don't know if you want to call it here, or if you want to say that's the Head and Shoulders. Like if you were looking at the entire move like this, but the entire movement is very similar to what we were getting in the morning right here. And it blew through the top, nearly doubled the entire pattern. Those from the beginning of the day will understand that was the case. And the time I had circled is not relevant. Could say it's at that time. Definitely made it to that circle though for that time, which I'm pleased with. But effectively, now that that circle has been met, I'm going to remove it and we shall see what happens at this time, because I do see we have a new trend. It's no blue one either, but just a regular yellow one. And you could say that it took this a little bit out of control, because did it test this level from above? Oh, it certainly has. It's tested it more times than I can count. This is meant to signify the green zone. This is meant to signify the red zone. And however many times it needs to test it does not matter. But it certainly wanted to test it from above. And it is certainly passing it. It may not seem like it now, but it is the way I see it. Of course, the VWAP plays a large role in its ability to act like this. Terrible, eh? At the end of the day, it just kind of kills the volatility. Everything's going great until we run into this thing, right? And it's like, not the first time we've done that, you know. At the end of the day, look at the dump too, right? It comes all the way down, stops the dump, and then it tries it again all the way down, and it creates this crappy environment. Really, really, really tough. But you can see the closer that you are trying to buy to that level, the more tough it really is, right? Like there was a level right here where I specifically said it would go to a circle, right? And it bursted up and hit that circle. Um, then we were talking about it getting back to this level. It's basically at that level right now. It took that much time to get there. No biggie. As long as we know that that is the level that it is going to test, as long as we know that this is the level that it tests from above as it passes it. And in order to test this level from above, it's going to have to get to it, and then it's going to have to pass it, and then it's going to have to come back down from it from above, and then it will be considered accurate. And only then will I consider this completed. This is not even completed yet. It's in the process of completing, though, as I see it. And that blue line through the middle of the screen, that's going to be an interesting one too. If we get on top of it, we come back to it, which is no biggie, right? I mean, shouldn't matter. But at what point did we consolidate like we have now? Like pre-market? Like right here? Like it was like this. I can't help but notice. I can't help but notice that the movement that came after that was very much like a falling wedge that played out pretty drastically to the upside. Oh, that would be a weird one if it did that again. But I'm only thinking, I'm like, what is the value of having consolidated for this much confinement area and at that much time? Well, we've done more, undeniably. But since we've broken the red yellow line, it's awfully similar, like in many ways. Could it be done? Yes, it could be. It could be done. And it's remarkable how what it produced. Okay, it was the open, so we can't. Maybe we don't expect it to do exactly the same thing, but maybe we expect it to produce whatever leaves this area is subject to coming back to the middle part and coming out the other side to give it a go at being the same distance. Now I'll tell you one thing. It wasn't exactly the same distance from both of the sides. Like you can see I can take it from the high, put it on here, but if I put it, oh, sorry. If I put it here, it's accurately on the bottom. If I put it here, it's not. So will it share that? At whatever move it does make out of the top or bottom, it replicates on the other side from this point, not this point. You know, and I'm like, well, it's literally like that's not very. I don't think that's very complicated. At the end of the day, the medium point doesn't have to be the other side of the triangle. Most human beings will think, oh, I have one portion here. If something goes on the top, it goes directly on the bottom every time. No, sometimes it happens from here. Sometimes that is the equilibrium. And the only reason why it would do that is because most people would think it wouldn't. Not because most people are in on these moves that they happen. Most people think that it's the case that everybody is considering the strategy that's making the market move. And that means that you're not understanding the fact that people can be squeezed and people can effectively be squeezed to form some of these patterns. And that means that, you know, it could happen on their demise rather than their success, like unanimous demise. That's the composite man theory, is that it's a unanimous demise, basically, between all of the peers that don't see it the way the composite man does. And I'm glad it's not something I thought of because it sounds crazy. And I'm like, well, it's that guy's idea. I just agree with it, 100%. And it's Wyckoff's idea. They couldn't even find a color photograph of the fellow because he is so old. And he had to make all of his charts by hand because computers didn't exist. So it's kind of interesting for him to come to that conclusion. Must have known a lot of people. Must have seen a lot of people get wiped out by the composite man for him to think he exists, which is interesting. Like I said, we could be done, but what we are doing to finish is undeniably incredibly slow. And that's fine. I mean, of course it is. I just think I'm like, well, they're trying everything they've got here to get you to go. I'm like, it's true. It's not going to affect me though, not at all. And I'm like, well, if it is part of the process to show us how much it wants to step on top of the green zone, and it wants to step on top of it 10,000 times, well, I mean, it told me it wanted to step on top of it. It didn't tell me it wanted to, like, finesse it like that. But I'm like, okay, the VWAP's there. There's no VWAP at the red zone. What does it do on top of the red zone? Can we make one step or two? Not 10 or 20. And it's funny too, because we'll see. Let's see. Let's see what they say. Approaching red zone. Now we mustn't drag stops above the high in order to protect the position because you'll just lose it. That's the reality of it. At the end of the day, like many of the red zone tests that we've had, they've led back to the green zone and more. But none have managed to make it off of a consolidation like we just had on that green zone. Like, is it not true that if we come back down to that green zone, which we like 60% chance we do, but in the event that we come back to test the green zone, is it not true that there's something there? Like it's this is here. Where is that anywhere else? It's like it's true that this thing only exists right here. We can scroll out here a second. Let's see what changes. We know it just looked like that a minute ago here. Give it a second to consume all of the volume here. All right, so I mean, does it really make much of a difference? Not really. It turns this area into a node. Well, whoops. I guess you could call it like that. So when we zoom back in here, we can have an idea. Oh, okay. That's really interesting that there's a node here and here. You want to know what's there and there? There's a red zone and a green zone. Of course there's a node there and a node there. Because it shows us that in the past it was used as an area that otherwise was designed to make it go to the red zone. And in this case, this range wasn't made today. Like you can see it comes back, right? And every time that we run into it, we like feel it. And then we come through it and we felt it from the other side. And then it became the case that everything that we did on one side, we can do on the other. And even on the short term, when we decided to make these movements very, very particularly out of the bottom, and then continued to make them out of both sides of the range right here. That's very particular in my opinion. I removed that triangle. You can see how particular it made it out of the top of that red zone to the bottom of that green zone. You tell me that's not particular. It's very particular. At the end of the day, it wasn't always that case, but that was the fact that making that the particular moment, making that the sideways up then down, making that around this green zone and red zone, and having that particular caused this move to happen. It was the beginning of it. Maybe it didn't cause it, maybe it was just the beginning of it. But it's the fact that it was the beginning of it. I can't prove that it caused it, but I can believe it did. So that trend there, it did break and retest. I can leave it on, I suppose, for now, but for the sake of cleaning up the charts a bit, I'll remove some of these other lines, and you can see that we're on top of the VWAP now, sitting on top of it. This blue line stands out a lot. The imbalance is in 1 minute, so definitely consider that. Any trades are exposed to the imbalance, and any movements we see from here on out are directly associated with the imbalance. So yeah, be careful. New trades are definitely kind of crazy right now because 30 seconds from now, increase in volatility can get us away from this range. Of course, there is a thing about centralizing for the imbalance. Like lately, we've been managing to centralize and get into this kind of choppy consolidation. But it's funny too because I think the spikes continue to jab into this consolidation. Where first it was like they were quite large jabs that had serious repercussions, and now they're frequent jabs with minimal repercussions, almost like a quote unquote different approach is being taken. On the other side of that red yellow line, things have changed, and you might not say for the better for now, but until this imbalance move is finished, we could say this could be the end of this level. Everything that we've ever done has been to get back to this level since the moment we've met it, and I'm not a huge fan of this level. As everything is kind of binded to it until we leave, and then the next thing that we do is leave, and it will be on a trend that essentially I think will have something to do with the blue and white line. And I'm like half tempted to drag this up here and make it blue too, which kind of gives me a weird vibe about that. I'm like, why is there two blue lines there like that? They're both positioned ironically in a very, very similar way. Like if you look at the construction of them, and they've got that kind of like strange, strange movement to them. It's almost like what they share is the baseline of the shoulders, or sorry, the neckline to the inverse head and shoulders, which is undeniably weird looking. But it is true that we have a consolidation on the left and one on the right, and it does have a middle head, which is, I mean, it's not proportionate by any means. Like the right shoulder is nearly the half the size of the left. So half the people might be thinking, "Oh, I'm going to try and get it when it's actually at the left shoulder low," but it's never going to get there. And that's the irony. Whoops, didn't mean to change that. Imbalance sucked, but it did move us away from the range, eh? Like that's one thing. They're like they get worried about it because everybody gets a chance to gang up against the big institutions on the imbalance, and their response is to try and get everybody really really tight inside of this level and make it so that in the event that it's against their position, they can add shares to the support or add short shares to the resistance and keep it contained within the range until the people lose that unanimous decision to be able to work together. Because it's not for long before they start fighting against each other. It's very interesting. Like all of the people might feel the same way until they start fighting against each other, as they typically would. And I think it's become the case that the institutions realize that even given the opportunity for the people to work together, it's not long before that they start to have what would you call it? Like different ideas. Like I said, getting to this level is the first step in breaking it. Okay, in order to step on top of it, how do we step on top of it if we haven't broken it? How do we break it if we haven't gotten to it? It's like that's just basic understanding of, you know, I guess it's physics really, but I mean, you would think, yeah, like we all we just, I mean, it's like you can't really get through life without understanding like those things. Like if you've ever had to interact with an object or something, you'll have to understand that, touching it is the first step in being able to move it. And I'm like, well, it's true. Or if you want to break something, something has to connect with it in order to really break it. You know what I mean? And that's where we're at with this thing. And sure, sometimes you got to take a few whacks at it. And this today's an understatement of that. It has been smashing this level since 12 o'clock. And now it's the end of the day. They finally want to break it. As I said, people might be exposed with like 30 points profit or something at the end of the day, and it might not seem like it's very, very, very attractive to continue holding or whatnot, but it's intriguing that it is the blue and yellow or blue and white line that they decided to use at the end of that consolidation, and it was at that point that they decided to end the consolidation. The people lose their control again, and we're on with the positions from the big players that decide this to be the case, that we are stepping on top of this level from above, as we do have to pass it. We did touch it first, then we broke it, and then we get on top of it so that we can step on it. Can it get back under it? Of course it could. But at the end of the day, no stops are safe in between the green zone and red zone anyways. Like what if it decides to make the same kind of wicks and spikes out of the other side of the range and then use the green zone again to go back through? Could it do that? I mean, it totally could. Like like this move right here in reverse. Like imagine it did that move in reverse. What would it look like? Well, it could look like this. Oh no, no, no. That's the same move. It would look like this. No? And I'm like, that's fine. It could even do it here. Be a little bit more appropriate, perhaps. But at the end of the day, using this as a support before everything's done with it, that's fine. This too will become a support at some point. This is the POC, that giant node in there. Like, let's see if today's trading range has really managed to change that. Yeah, to be honest, this level here is nowhere near as significant as the one at the bottom, but we are running into it. We're running into that node right there. Like, you see that thing? Like that's what we're running into right now. Like, what about getting to the other side of it? What's there? The 61. And that's also this level. So I'm like, well, the 61 could be a move that sends us back to the blue and white line, you know? Like, after all, it's kind of stretching to get to it, isn't it? After all, it's kind of forgotten to make the left shoulder as big as the right shoulder, and that's also something that could be viewed as it having a steeper trend. Like, hold on. Like, in the event that it does make the left shoulder the same level as the right shoulder, look at the steepness of the trend. Is it undeniably different? Or because we cut the shoulder off, don't we have a steeper trend now? Or am I crazy? It's true. The trend is just steeper. Don't be surprised if it doesn't hold for as long. And I mean, like, we don't have as much time with it, is why it wouldn't hold for as long. Like, think about if we had come down to this low here and made it the left shoulder low and made the inverse head and shoulders proper like that, right? If we did that, this would be our support, right? And look at how much more time we would have before the risk of breaking the uptrend. All this time right here. But because we cut it short, we've got this time. That's not very much time. At the end of the entire day, at any point that there was a battle, they have all been won. It was tough, but by this point, under no circumstances should anybody be down on long trades. And at the end of the day, the long trade that there was at the bottom was undeniably very difficult to fight for. This one, so much easier, but hard to hold. Like, how much harder do you make it to hold a level other than getting straight back to it? But it's true. The level that remains at the bottom is there. Like that. Didn't get it. So, and I'm curious, like, it's like, well, if the name of the game was to just be interested in the short, well, when it gets knocked out, we shall see why it was interested in making these so tough to fight for, and why it was so seemingly easy for these people to hold short, because this was a short-term hedge. This was a long-term core. And effectively, we're going to go for those people, So we finished all of the goals of the day by testing this from above. Not much, but we're above it. That's the main thing. So don't, we have yet to test it, is what that means. It's not like we have gotten above it and it's not gonna be tested. It's gonna be tested. So we're gonna watch out for that at some point in the future. I don't care if it goes 100 points. I don't care if it's the target from this hedge. But if it's not tested, by the time that we get to up here, it can be a target for the hedge. And that would be nice, honestly. But if it tests it right now, is it a big deal? No, not a big deal. At the end of the day, no stop should be in that range, so it shouldn't matter if it does test it. That's the way it goes, right? So you're safe if you play it like that. Let me take this move off the table. But remember, I did say that it could be like that move in reverse, and it did make that move in reverse. But it's like an N, and when I see that, if we were to place that somewhere else, it could be like a fourth wave. Could it be on the high of the range? Just like we saw that today at the high, the purple line related to the VWAP was very important as it was on the bottom. The VWAP did nothing but create much consolidation as we had to pass it every time. A nuisance is what you could call it at the end of the day. But this is the end of the day. And effectively, I'm going to take a picture of that. I'll just put it up here like this. And post that in the chat there. We'll take a look at the other chart real quick too. And that'll be the last of it. But this was the final trend to break throughout the end of the day. We can see that this was the other chart and how its ranges were very similar, but we managed to get back into this middle range that we were in from the beginning of the day. Like, what I find very interesting about this chart is that everything we did on either side of that range, forgive my inaccuracy there, is we took this movement and put it out of here, okay? So that's what it's trying to show us right there. I'll take a picture of that too. And it's kind of interesting to see that that's where it ended up with it. I'll leave those on there, and I might take a look at that later and see where it ends up. But hopefully you guys had a wonderful day. It was kind of a tricky one, but ultimately every target ended up hitting. There's not a single target that was untested on either chart. And as difficult as it was, every single one of the writing we managed to turn into support. We're on this one as a final support, exactly like it was listening. Every single red yellow line broke, every single yellow line broke. Every target hit. Yeah, so that's good. We'll catch you guys later, though.
Sounds good, John. Appreciate it.
Yeah, have a good one.
Thank
Take,
you.
yeah, anytime. Take it easy. Have a good one. See ya.